Good morning, everyone. How are you all? Good? Excellent. I've talked to a number of you already. A couple of you already made some profits, which is nice to hear. Joe, you're looking pretty happy this morning still? Yes. It's been pretty good for a couple of days. Actually, I was talking with Jackson earlier on, and he sent us showed me some statistics from someone who's tracking all the stocks that we have. And if you'd invested in every single one of the stocks that we've had up here on stage so far, you'd have made a little tiny bit of profit. 3.4% would have been your average over everything. So that would be pretty encouraging. A couple of them have gone up. I think one of the ones that we had on the stage yesterday morning went up 40% during the day. Or it was 20% during the day, excuse me. And I was too busy standing up here and introducing our presenters to get onto it, which was a bit disappointing, but I know some of you would have been faster movers than me. Now, our first speaker this morning, let's bring him up here. We're going to South Australia, aren't we, Peter Reid, with you? So, and we're looking at a company that believes that it could be the next BHP, that they want to be the next BHP. So it's Petrotherm Limited. We're looking for gold and copper in an area which has already got some pretty good pedigree. Would you please make Peter very welcome, everyone?
Thank you, Chrissy. Good morning, ladies and gentlemen. So Petrotherm are a South Australian-based copper-gold explorer. Disclaimer there, you can see our footnotes there, so all the technical data you hear today, you can refer to those footnotes, you'll find the detailed references to them. Now, Petrotherm, we were spun out of Minotaur Resources, who some people here may recall that Minotaur found the Prominent Hill deposit 20 years ago, which is now an operating mine by BHP. And the new Petrotherm is very much the old Minotaur. We're copper-gold explorers, we're grassroots explorers, frontier explorers. We are, and our chairman is Mr. Derek Carter, the former MD of Petrotherm. Now, where are our projects? We've got two large holdings in the Olympic domain of South Australia. Now, the Olympic domain, of course, is the host to the Olympic Dam, but also Carrapateena mine, the operating Prominent Hill mine, and the recent giant Oak Dam discovery by BHP. We have the Woomera project holding, which is quite close to the Oak Dam discovery area in this sort of heartland of the Olympic domain, and a larger holding in the northern Olympic domain that we call the Maple Creek project. Both those projects have drill-ready targets, and we've conducted drilling already at the Maple Creek project area. Our other exploration focus is looking for critical minerals in the northern Gawler Craton. At our Comet project area, we've defined several large clay-hosted rare earth resource bodies. But what's more interesting perhaps with those discoveries is that they're associated with a particular intrusive suite, which is really not much is known about. And we've done a lot of work on those intrusions. They're about 1,870 million years old, which is the sweet spot for these layered intrusions. And these layered intrusions not only have rare earths, but they're have elevated gold, platinum group metals. We see other, and they've got rock chemistries very similar to the Bushveld. And if you recall, the Bushveld, of course, is a world-class gold, platinum group metal intrusive suite, but also has high titanium, high vanadium. The central portion of that intrusive suite is our Muckanuppy project area. So we've taken a large strategic position over Muckanuppy. It's a bit of a sleeper, but I think it's a really exciting project, and I'll talk to you about that shortly. Now, of course, copper is starting to take an uptick. We've got a reduced supply. Escondida used to produce ore at about 1.6%, now it's producing ore at 0.9%, the world's largest copper deposit, and of course cash costs to deliver that copper have gone up. So we've got reduced supply and of course increased demand as we go to zero carbon. Probably the best commodity picker in terms of what copper futures are is BHP. Now BHP, as you know, have just put in an offer to bid for Anglo American, a takeover there, but something else that you may not be aware of is actually they've put in a development application at the Oak Dam resource there. So they actually don't even have a resource at Oak Dam, but they're so confident of it, they put a development application in, and they're building 2 declines down 800 metres. That's a $500 million to $1 billion investment they're putting on a prospect. That's how serious they are about copper for the future in South Australia. So we're very bullish about copper going forward. This is our Woomera project area in the central Olympic domain. We have Oak Dam up here. This is all BHP ground in magenta. These are our licence areas here. We've got a large holding that we've been able to acquire over the last few years. Coda Minerals are in through here. We have the Emmy Bluff deposit. We completed native title agreements, and we've been doing a lot of targeting work. Now, when we target for these IOCG copper-gold systems, we use gravity principally because these are iron-hosted copper ore bodies, and the iron is very dense, and they give off positive gravity signals. The next slide here shows some of our new gravity data over our tenement group, which we've been acquiring over the last 18 months, and we completed our last survey just in March. And here the gravity, the reds and the whites are the dense gravity zones. We can see two large sort of structural trends running through our tenement group here, which we think are important fundamental structures and are also the host to providing ICG-type fluids and mineralisation along those structures. We have an isolated body up through here, a very large, dense body we call Rocky Well, which we've modelled. And importantly, I want to talk to you about what we call strata-bound IOCG-style mineralisation. So typically, these iron oxide copper gold systems are eruptive vent-like bodies with a great deep root system. But what also happens is you see iron oxide copper gold mineralisation coming up these systems and up faults and fissures, and then they migrate out laterally into the ancient paleo sedimentary sequence in the upper crustal levels. And we call that strata-bound style iron oxide copper gold mineralisation. Now, it hasn't been talked about a lot, but it's actually really regionally extensive and quite prolific. And it's a style of mineralisation that hasn't really been looked at too closely, but I just want to talk you through some of that. This is an image on the left here of the Punthill deposit, well, Punthill prospect area, which was found by Monax in the early 2000s. This is gravity again. These are the high gravity ridges. They extend several kilometres. Monax drilled a number of holes and got some really interesting copper-gold numbers associated with strata-bound style iron oxide copper-gold mineralisation occurring as layers, replacement layers in the overlying cover sediment. So here, this is an example of that layered copper mineralisation. And look at some of the drill results here. 160 metres at 0.47 copper, 0.12 gold, 5.3 grams silver. This is a significant mineralised system. More recently, Coda Minerals, with their discovery of the Emmy Bluff Deeps below their Elizabeth Creek mineralisation, has found iron oxide style copper mineralisation associated with faults and fissures, and they're getting sort of percent grade copper intercepts as strata-bound layers. These are two quite regionally distinct areas in the Olympic province, but we're seeing that same style of mineralisation occurring. This is our area at Woomera, the northern area, which we looked at briefly before. This is our tenement boundary. Here, this is gravity. So the red zones are the heavy zones, the heavy basement zones at depth. Western Mining back in the day drilled a hole here, WGDU1, and intercepted 63 metres at 0.3 copper. So quite an interesting hit, and it's a strata-bound style copper mineralisation again. They went east where the gravity anomalism was stronger and got more copper, but at a thinner interval, 5 metres at 0.8, metre at 3.6%. Later explorers have gone by and drilled another hole several kilometres to the west, 07 here, and the thickness of copper grade is increasing, 75 metres at 0.3 copper, including some percent or close to percent intervals. Further to the southwest, SAE 11, 94 metres at 0.2, and another 42 metres at 0.2, close to 0.3, including some percent grade copper intervals. So between those four holes, we're looking at 8 kilometres of trend, where we're getting about 0.3 copper over between, say, 50 to 100 metres average thickness. That's an awful lot of copper, isn't it? And it's probably several kilometres north-south. So just between those three holes alone is probably 500 million tonnes of low-grade copper mineralisation. That gives you an idea of the size of these strata-bound style copper systems. Now, we think that as you approach the feeder systems, and indeed as you walk west here, the copper thicknesses increase and the grade increases. This SAE11 on the edge of the gravity ridge, but closer to a structure, potential feeder structure, has got higher grades and greater thicknesses of ore. We think this is a very important class of mineralisation that hasn't really been tested before, and we intend to be drilling targets on our leases later this year. This is our lease area here. You can see what we call a conjugate shape anomaly, where we've got structures running to the northwest and to the northeast, intersecting structures. Those structures are the principal feeders, bringing up the mineralising fluids and mineralising the cover rocks surrounding. And these nice sort of what we call tensile openings, these are classic structural openings, and we see high gravity responses associated with them. So we think that that's probably copper, sitting at about 800 metres depth. And as we approach those structures, we'd like to think that some of the grades would be, the average grades may increase economic concentrations over 1% copper and some gold. Look at the scale here. This is, 2 or 3 kilometres, another 4 or 5 kilometres, another 2 or 3 kilometres. So this is potentially a world-class size copper system that's never been drilled, which we'll be testing later this year. Now, the other style of iron oxide copper gold mineralisation is your classic breccia pipe-like body. On the left here, this is a geological map of Olympic Dam. These things are structurally controlled. They're very strong east-northeast trending faults and conjugate systems. I've been talking to you about the northeast structures and northwest trending structures. They create openings. And the Olympic Dam is really like a rifted opening where the structures have opened up, provided the space for the hydrothermal fluids to focus their mineralisation. We see the same structural orientations on our licence areas. Here's one of the key structures here. In fact, that one lines up with Oak Dam further to the northeast. And we have 2 large bodies which are modelled up as breccia pipe-like bodies. One is Rocky Well, and one is Bernard Hill. Firstly, this is the Rocky Well target. On the left here, this is what we call a 2D gravity model. So we have the measured gravity, which is the black line, the gravity anomaly, and then we model that anomaly. We try and match it as best we can. So we know Carrapateena starts at 500 metres depth. Here's the Carrapateena body. We know its density. We know the density of the surrounding rock and the cover sequence, and we can match that anomaly. So that's a Carrapateena type gravity anomaly. This is our Rocky Well target, a very similar looking target. It's a bit deeper. It starts about 900 metres to 1,000 metres depth, but the density of that body at depth is equivalent to Carrapateena or even denser. So we potentially have close to 1,000 million tonnes of copper sitting there at about 900 metres at Rocky Well. I think a really exciting target for us to follow up on. Very recently, we conducted gravity surveys to the south, and this is our Bernard Hill target. There's diking that occurs in this area, the Gairdner dikes, which are prevalent right throughout the Olympic domain. So what we do when we model, first of all, we model the magnetics. This is the magnetic trend. We have 3 little bumps. So we have 3 dikes. We know the depth of basement. We know its densities. We then look to see, is there any remaining gravity prevalent in that area? And we have a large gravity anomaly that still remains. So the only way we can account for that gravity is by putting in a dense body, which is our Bernard Hill target, starting about 800 metres depth. This is a big target. It's 400 metres wide, it's 2,800 metres long, it's about 1,000 metres deep. So if you want to work out the potential size of that thing, you can multiply the 3 of them and times it by the density of the ore system, 3.4. And that, of course, we're talking a world-class size target here, Bernard Hill. So a very exciting target that we also intend to be drilling later this year. Now I'll quickly move on to our Mabel Creek project area. This is in the northern reaches of the Olympic domain. This is a magnetic image here, and typically these iron oxide copper gold systems have some kind of magnetic response to them. Not always, but quite often. This is the big northeast target, which has been drilled and intersected iron oxide style copper alteration. We have these very interesting magnetic dipole features, which we've been following up with gravity work to see whether they may be mineralised systems with recent gravity surveying. And we've conducted drilling at our Area 5 target and got iron oxide copper gold style alteration and some minor mineralisation. This is a large holding. We're surrounded by the majors. It's also the subject of a new research area for the state government, so no one else can actually get into the area at this point in time. There's a moratorium on other explorers coming in. At our Area 5 project area, we've drilled here before. We've got strong iron oxide copper gold alteration. We're seeing copper mineralisation occurring in the flanks of a large intrusive. We have these residual gravity anomalies. So the contours here are the residual gravity, which haven't been drill tested yet, and these are targets we'll be drilling in the future. And our recent gravity work at Big Northeast. Big Northeast here has been drilled by, as I mentioned, 3 holes. These are some of the iron breccias that have been drilled, getting up to 0.3% copper. So this is an IOCG type system. Oak Dam, the 4th hole found the ore deposit. Here at Big Northeast we drilled 3 holes, so hopefully the 4th one is our lucky hole. And out on the east side here hasn't been drilled yet. This is a big gravity system, but we also have gravity anomalies surrounding an interpreted granite and this Wirragunga target out to the east, which we also intend to be drill testing. So really, we've got a real pipeline of targets, not only in Woomera, but also at Mabel Creek. Now, just finally, I want to talk to you about this late intrusion we've got at Muckaninny. It's a large intrusive sequence here. We have this large blue intrusion, which is about 1,000 square kilometres. It's a layered thing. It's like an onion skin. But wherever there's been drilling in the past, principally for gold, they've found elevated palladium, vanadium, elevated nickel occurring within discrete stratigraphic horizons. And there are these late magnetic bodies that have been drilled just with a couple of holes, and they've intersected economic grades of titanium and vanadium. Just be very quick. Yeah. So, for instance, here, drill hole 2, 150 metres at 5% titanium, 22% iron to enter hole. It's open. That's a big, 1,000 million tonne type iron titanium system. Down here, the M1 prospect, 34 metres at 8.5% titanium, 22% iron to enter hole. That's never been drilled. We only got one hole into it. And just finally, out here, we call our Queenie prospect. There was drilling done by a company looking for diamonds. They drilled these little magnetic dipoles. They got titanium up to 21%, which is economic. The large commercial mines around the world operate around 15%. So we're getting 21% vanadium, so titanium, also 0.5% vanadium. So to give you an idea, vanadium, literally 10 seconds. Vanadium is 0.4%. That's equivalent to, say, 0.6 copper. So that's a very exciting target. That's a pull apart from this structural horizon here. So we've got, just in the subsurface, a horizon with economic concentrations potentially of titanium vanadium. So here too is potentially another world-class deposit. So I'd like to thank you for your time this morning.
Your seat, Peter.
Yeah.
You did well to wrap it up there. You've got a lot to get through. Can I say thank you very much? That was a great opening for day 3. The first up. It's the first time we've actually had a company leading out, so you've done very, very well. And we've got one with a lot of potential to be big, as you said. Thanks very much to Pete and to Petrotherm. That's our first opportunity for you. We've got 24 companies this morning, and before we welcome Will Dix to the stand, I also have to welcome all of you who are at home or in your office around Australia and also through Asia. We had 350 to start with, so welcome. Thanks for being part of it. If you would like to watch any of these presentations back, or perhaps you missed them at home, they'll be on our YouTube channel. They'll be up next week, so we'll have them up there. How are you feeling, Will Dix?
Feeling good, thanks.
It's a bit of a thing. Pete had it as well, a bit of a nerves there. So you've got 15 minutes. I stand up at 2 minutes. I'll ring the bell at 2 minutes. I stand up at 1 minute, and then I'll come seemingly close to you. So you're taking us to Canada. We're going to have a look for uranium in the Athabasca Basin, which, as we know, is a nice proven little province there. And then we're going to go and do uranium in lithium, in an emerging province, one which I've been to up past Whitehorse. So interested to hear about that. Would you please welcome Will Dix, everyone?
Thanks, Chrissy. First of all, I'd like to thank RIU and the Sydney Resources Roundup for the opportunity to speak today. It's a great event year on year. They just seem to get it right every time. Whip through that. So today we'll talk a little bit about our projects in Canada. I have the full deck here, so I will whip through a few slides if anyone would like some more information. I have copies at the booth. But basically we have a dual focus in Canada at the moment. We have a uranium project on the northern edge of the Athabasca Basin called Gibbons Creek, where we've recently completed our first drilling program, and we've yesterday announced that we finalised the agreement to earn up to 75% from a Vancouver-based company called ALX Resources. There's a lot of work to be done there, highly prospective. We've hit uranium in 3 out of the 5 holes we've drilled, just waiting on the assays for that, but we can see it. And then up in the Northwest Territories, which is very much an emerging lithium province, you've got the likes of Fortescue in there picking huge tracts of ground. And we own 100% of 3 projects there, over 500 square kilometres. We have known spodumene at 2 of them, and this coming Canadian summer, we're going to spend a big chunk of time looking at pegmatites at our Halo Uri project, and I'll walk you through that shortly. One of the keys to our register and to the way we're doing business in Canada is the DeRouge Group. Jody DeRouge is known in Canada as a bit of a Mark Creasy type. He pegs ground, he identifies projects, but what he also does is he employs about 150 geoscientists across Canada and the US through his consulting business, and all of these guys are familiar with lithium, uranium, other base metals, gold, a bunch of really good guys. And one of the things that we did when we did the deal to get into Canada is we locked him and his group in for 3 years. So they are able to provide us with arms and legs and boots on the ground. They know all of the Canadian contractors. They know how to do business through permitting and all of those sorts of things. And what that has enabled us to do is not have to reinvent the wheel by setting up our own base in Canada and having to be there 24/7 with guys on the ground. We manage and we plan and we execute everything out of Australia, but the guys in Canada, who are the Canadian exploration experts, they do a lot of the heavy lifting for us, and that's already paid off in spades. We're fully funded. We've got just under $4 million in the bank. That'll get us well through 2024, and then looking into 2025, obviously juniors have to raise money. One of the things we'll look at doing is flow through shares and things like that, which again, Canada gives you the opportunity to take advantage of that. As I said, 3.65 it is, end of March, enterprise value of only $3 million. A bit on the board, skip through that. Canada is very, very much the focus. We also have a couple of legacy projects in Australia. We have the Mount Hardy base metal project where we have a small resource. It runs about 2.6 million tonnes at 11% zinc equivalent. We are looking to bring a partner into that who can drill some deep holes. The resource is open at depth, talking from surface all the way down to about 350 metres it's mineralised. There are targets in the EM, but our view is that we need a big brother to come in and spend $4, $5, $6 million drilling some deep holes under that. So watch this space on that one. And the South Australian projects down in here, very, very early stage lithium projects. We don't really talk about them much. Early days. We do have some good pegmatite systems, and we've got some land access permissions on the farms, so we'll work those up in the Canadian off-season. Okay, Athabasca Basin. So Gibbons Creek sits up here at the northern edge of the basin, right on the edge of Stony Rapids. Athabasca is well known globally for uranium production, produces all of Canada's uranium. We can earn 75% interest in this asset by spending $5 million over 5 years. There is an intermediate step where we get to 51% for spending $3 million. We can accelerate it. If we end up getting some good hits and some good results, we can fast track that to earn our equity more quickly. What are we doing there? So 3 main prospects. Airstrip, and you'll see why it's called Airstrip shortly. This is where we've done the drilling in March, waiting on the assays. As I said, 3 out of the 5 holes hit uranium mineralisation, not over thick intervals, but it gives us an indication that there's a system somewhere close. And as you move down to the southwest through the project, there's a bunch of uranium boulders, or radioactive boulders as they call them. Some of them go up to 5% U3O8, and you can find them all the way down through here. But once you get to about this point, you don't see any boulders to the northeast of that. And you could draw some conclusions that maybe the source is somewhere in here, given that that's where the boulders are. Our second priority project at Butler Lake, we have an extensive EM conductor there, and the EM is a reflection of the graphite content. Graphite's important because it acts as the reductant for the uranium mineralisation. 2 holes drilled back in 2022, neither hit the horizon they were targeting. One of the issues is that the EM they targeted on was quite old. It needs better work, it needs new technology. So we will go in here and redo some airborne EM with a helicopter. You can fly much more slowly, you can see in more detail and see deeper at Butler Lake. And this coming summer, we're planning to get that geophysics done, tighten it up on the ground with ground-based geophysics, and then potentially drill a couple of holes in here this coming Canadian summer, as well as follow up the work at Airstrip. And down at Hocking West, this is a really interesting part of the basin. The basin gets deeper as you go to the southwest, and if you draw a straight line and assume that it's a linear progression, you're at about 450, 500 metres through the sandstone to the unconformity down at Hocking West. But if you look further to the southwest off this map, there's a basement high. It comes back up to about 250, 300 metres, and that might explain why we can see EM conductors that sit in the basement at Hocking West. if you think about it like this, if that really is 500, 550 metres deep and you're looking at mid-90s airborne EM, you know, I've done enough of that stuff to know that you're not going to see any decent bedrock conductors at that depth. So there has to be something that explains why we're seeing conductors down at Hocking West. My view and the view of the geos that know the basin well is there's an offset, there's a structural offset, and we have a basement high down in the southwest. So again, we're going to go and do a bit more geophysics there. I don't think we'll drill it yet. And one of the ways that we will really determine what the depth to the unconformity is we'll probably run a line of seismic over that, have a look at that. A little bit of detail, airstrip prospect, no surprises why we've named it that. The town of Stony Rapids sits just off to the east of the map. It's a little bit like Leonora, say, in Canada, but with ice instead of dust. There's accommodation, there's people, they want us to be there. We have an agreement with the local Indigenous government. We're fully permitted right through to the end of 2025, so we can get access to this part of the project easily on a daily basis all year round. No impediments for that. We've spent our first drilling dollars drilling in this Target 1, Target 2 area, and what we targeted was a number of historic holes, but we wanted to drill where the north-northeast structures intersected this regional east-west structure. And that's what we did. And you can see we've drilled, these are the holes we've just completed with the magenta collars. We hit uranium mineralisation in hole 3, 4 and 2. Hole 5 failed, we didn't hit anything in that. But what it's telling us is that there is uranium in the system. And it is a little bit hard to see in this slide, but these red circles are where you're seeing the uranium in the pitch blend. We've run downhole gamma probes down the holes that we've drilled, and we've got up to 8,500 counts in the gamma probe. It's a bit of a nebulous number. What does it really mean? We'll be able to tell you when we get the assays, but in the basin in general, anything over 2,000 counts is considered to be grade. So, you know, if you 4 times that, we're pretty confident that some of the numbers that we'll see over short intervals are going to be fairly good. So we will come back in summer. We'll drill these intersection points down in here. We'll have a look at drilling a hole down in here, depending what the assays come out of hole 2. And that's airstrip for you. Butler Lake, this is my favourite prospect on the project. I really like the opportunities here. You can see on the interp, there's a bunch of offset structures. You need those. You need structures for your fluid flow, your ingress of fluid and your egress of fluid, and where it reacts with the EM conductor. See the conductor's modelled through here. It runs for approximately 10 kilometres of more or less continuous strike. What you want to see is where this conductor intersects these structures. And the couple of holes that were drilled in 2022, both of them hit uranium sniffs right on the contact of the Athabasca sandstone and the basement, which is where you want to see it. Boron is a really good indicator. Bit of a boron kick in hole 2. In hole 1, there's a huge boron kick. So again, similar to airstrip, there's something happening there that we just need to understand a little bit better. What we'll do, we'll come in, we'll redo some of this geophysics to tighten that up and really get a handle on where the east-west position of that conductor is, and we'll drill 1 or 2 holes in the coming summer. But I think this area and the guys that have looked at it, the uranium experts, they really like the Butler Lake zone. It's shallow, it's 200 metres to the basement, so you're not going to be blowing up your budget by spending a lot of money drilling super deep holes. Mentioned Hocking West briefly. EM needs to be redone. We're not understanding quite why we can see the conductors there, other than there must be some kind of basement high through there. So we'll explore that a little bit. I'm going to be running out of time soon. So really quickly, flipping further to the north, up into the Northwest Territories. This truly is an emerging lithium province. A lot of mining around Yellowknife historically. There's a gold mine there. There's a bunch of base metal mines just on the other side of the lake. And obviously the diamond mines up in the Northwest Territories. And the diamond mines are really what put Yellowknife and the NWT on the map from a mining point of view. They are running out of feed. There is going to come a point of time in the next few years where thousands of people are going to be unemployed because the mine's shut. They're going to lob up in Yellowknife. Yellowknife gets funded by a per capita basis, so they are desperate to keep people living in Yellowknife and employed. So what will happen is that the workforce will come out of the diamond mines eventually, and the next cab off the rank is the lithium industry. So Lift Power, Loyal Lithium, Midas, Fortescue are in there recently. They've pegged an enormous amount of ground around us at Mac and around us at Halo Yuri. all of these companies are pushing the government super hard to get permitting happening, to do drilling, to get resources. Lift will probably end up with around about an 80 million tonne resource at maybe 1.2% Li2O. That should come out middle of the year. We've got 3 projects, Ross Lake, which is a postage stamp, small, but it's got spodumene-bearing pegmatites in it that go up to 3%. We've got the MAC project that's maybe not quite as performed as we'd hoped it would. But our really big project and our focus this Canadian summer is going to be Halo Yuri. And I'll just skip that over, walk you through Halo Yuri. So about 400 square Ks. We've got spodumene up in the north at OIG. We've got a whole bunch of pegmatites to have a look at this coming summer. So none of these have been looked at from a lithium point of view. The pegmatites are up to 1.2 kilometres long, 100 to 150 metres wide in places. It does say 10 to 50, that should be 150 there. And we can see them clearly in the satellite imagery. So we can get in a helicopter, we can quickly cover ground, we can test it, we can know whether there's something there or not, and then we can look at drilling that in the coming Canadian winter. Because believe it or not, at minus 40, it's a lot easier drilling than at plus 15 surrounded by mosquitoes. That's just a little bit more information on how we've targeted the Halo Yuri stuff, and I will skip through the next couple of slides. They're the grades that we see at Ross Lake. We do have a drilling permit on the way for that. Whether we drill it or not, we'll see. MAC, I won't talk about that. This is really the workflow. We've done a lot of work in the first quarter this year with First Nations engagement, we've met all the groups. We've got exploration agreements on the way where we need to. We've got land use permit applications in. We do have the ability to do some diamond drilling in Q2. Not sure whether we're going to spend our money here. It's more likely to be spent down here, to be honest, at Gibbons Creek. And then we're going to be doing some reprocessing and reinterpreting geophysics data and some new surveys. So last slide, Chrissy, just to summarise, 100% of the lithium assets in the NWT, a truly emerging lithium province. We can earn up to 75% at Gibbons Creek. You know, I think it's probably fair to say Gibbons Creek will be the bulk of our expenditure in 2024, other than the Halo Yuri summer campaign. We're excited with what we can find up there, big pegmatite systems. We're well funded. We've got just under $4 million in the bank, which for a junior is not a bad place to be right now. And 3 seconds to go, that'll do me. Thank you.
Well done, William. Well done, William, indeed. I just went and got myself a cup of tea outside from the little coffee pots down there. First time, because usually I walk all the way down the back and get my cup of tea or my hot chocolate. Has anyone else thought it's a little bit cold, that water that's coming out of that? Is it just me? Good. 1, 2? All right, good. I'll go on. I'll see if I can action that one as well. We seem to have fixed the coolness in here, so I'm a nice temperature today. Is everyone else nice temperature in this room? Joseph, you're okay? Everyone's good? Excellent. All right. How are you feeling, Andrew Corbett? Nice and relaxed?
Very good, yeah.
You should be very smiley at this point in time.
Oh, we are.
This fellow is taking his resource to mining, aren't you?
Absolutely.
October, are we looking at?
Absolutely.
Yeah, so you've had a bit of work in the last year really leading up to this, haven't you?
Last couple of years now.
Yeah. All right. Let me officially introduce you to this gentleman. Andrew Corbett is his name. He's the Managing Director and the CEO. We're going a little bit closer to home, Cobar Basin, next with Kingston Resources, the heart of the Cobar Basin. Please make him welcome.
Thanks, everyone, and appreciate your time this morning. And it's time to get excited about gold and copper, because we are. We've had a very successful 2 years. We believe that the move we made in New South Wales with Kingston just on 2 years ago now has been delivered in spades, and we will continue to grow the company and, most importantly, our cash flow, and build this business into what we want to, where we want to see it going, to be a larger scale gold and copper producer. So that picture is really important. That's a little Mineral Hill processing plant, and it's delivered already $26 million of operating cash flow over 2 years, and that's from tailings. And very few people think that tailings projects can work, but this is a successful tailings project that's actually been very profitable. Last year alone, we sold $45 million in gold and declared our first profit of $9 million. Let me just get this moving. So tailings project's been a big tick for us. There's a couple of months to go. In fact, not even a couple of months. We're going to finish the tailings project in May, and then we're going to start open pit mining, recommencing hard rock mining at Mineral Hill. That more than doubles our production, which I'm very much looking forward to, because not only does it double our production, we expand our margins. It's lower cost. The processing plant refurbishment, very proud of what the team's delivered. We've project managed this and managed the whole the redevelopment of Mineral Hill ourselves, and we're bringing this plant back online for just over $12 million. And we are an energy transition company. We already have received grants from the New South Wales governments for critical minerals. We will be producing copper, lead, zinc, silver, gold in 18 months' time, and right now we're producing gold and silver. Missima, we're going to talk a little bit about PNG. I don't want to forget about that. We have a massive project there. We're very leveraged to this improving gold price, and we'll talk you through what we're going to do there and our strategy to bring a joint venture partner in. And we've just completed a capital raise and actually finished yesterday in the rights issue, so good time to be looking at Kingston. So here we are, 40-odd million, 45 million market cap. We've got over 10 million cash now. With the completion of the raising yesterday, we have another 7 million of cash covering our bonding, so we don't have any debt on our bond. We're 100% cash backed. We do have 10 million of debt, which is quite long tenure, another 2 and 3 years on those two $5 million tranches. So we're very well funded, and next year, as I said earlier, last year we did 45 million. We're going to more than double our sales this year. We're going to more than double our EBITDA, and we're going to continue to grow our profit. Very strong support from our shareholders. Quintana are the guys we actually picked this project up from. Delphi, Winchester and Farjoy have supported Kingston, our growth strategy, over the last actually 8 years. Most of those guys have been on the register for a long time. They continue to support us. All of them have increased their holdings in this last capital raising. So there's a strong support base there and a real confidence vote for retail investors and individual investors like ourselves to keep buying Kingston shares. So financial year 24 was gold and silver. By financial year 27, we will be a polymetallic producing underground project. We will have copper, zinc, lead and gold and silver coming out of this project. It has operated for 15 years previously, so this is not new, and it made a lot of money in its early days for the previous owners. We currently have 8.9 million tonnes of resources. So no plant's worth much at all unless there's a resource base to fill it. And that's one of the key advantages we got. We have fully approved, we have a full workforce, we're expanding our cash flow, and we have a resource base. Most importantly, we sit in Cobar. We sit down here in the south, what we call the South Cobar Basin. Federation's 100 k's away, Peak's 200 k's away. We are the only operating plant in the southern Cobar Basin, and there are only 2 polymetallic plants in the whole region that can produce copper, lead, zinc, silver and gold. So that's Peak and Mineral Hill. So it produces 3 concentrates and doré. So that's an advantage. We can treat every rock or ore type in the Cobar Basin. Lots of drilling happening around us, which we'll get to. Board and management, we've been all together now pretty much since the start and growing this business. I'm a mining engineer, Mick Wilkes is a mining engineer, Tony Wiebe, he was actually the chairman of Aurelia when they first built Hera, so a lot of experience in Cobar, and Stuart Reckner is a geologist. So we've all been together building this business and very strongly believe in the future of where we're going. That's a little pit that we're going to mine, do a cutback on a mine at Mineral Hill. You can see here, that is the Mineral Hill project. It's actually quite a small footprint. And it's basically and the small footprint's really important. As we know, these environmental bonds can get really big in New South Wales and Queensland. So the smaller and tighter we keep the project, the less bonding we have. This gives you a feel for where we're going on production. And our strategy, I guess. We're just completing the tailings project. So we're giving ourselves a tick here because we think we've made good money on that. We're now moving into phase 2, which is going to double our production and open pit mining. And then we're going to start looking at this phase 3, which brings on the underground and grows the resource base. We are fully approved for a 700,000 tonne per annum plant, but the crushing grinding float circuit is currently limited to 350,000 tonnes per annum. So in 8 weeks' time, we will be running at 350,000 tonnes per annum, and then we're going to start to look at another expansion of this project. We're targeting this 3% copper equivalent grade, and that's really important because that's where we think you need to be at to make good money in base and precious metals of this size and scale. So keep that in mind. It's really important, we think, and the other thing that's really important is this precious metals credit from gold. It's really how a lot of the base metal miners are making good money at the moment. So where we're at, we're delivering on this plan. The tailings project's getting wrapped up as we speak. We're growing the resource base. We've already more than grown that by 60%. It will continue to grow. We're going to extend the mine life at the underground. I haven't even got to the assets we have in the underground at the moment. You can see me there standing in the middle with our General Manager, Jeff, and one of actually our big shareholders sending a geologist down to have a look at the project. We've already talked about that we are a critical minerals project, and we've already got one grant from the New South Wales Government, and I assure you we'll be lining up for the next one when it comes. We talked about drilling and neighbours, unashamedly pointing out Talisman's great results. They're drilling 11 k's to the southeast of our plant. We're very happy with their success and wish them all the best. Keep drilling. We sit here in Mineral Hill. You can see our mining lease, and this is our small EL. We only have 2 ELs. But we think this infrastructure and the position, the approvals, and most importantly, our people, are one of our strategic advantages in New South Wales and the Cobar Basin specifically. This processing plant and our team has a really good sense of humour. You'll see, well, if you come for a site visit, you'll see lots of Kingston blue everywhere with the refurbs. And that's because we're doing it ourselves. So we are project managing this. Our processing manager is the project manager and delivering this project for $12.5 million. And we are commissioning this month and with the aim of feeding oxide ore in July. So here's the plan: finish tailings, get into open pits. We're working on a new open pit mine design, so hopefully you'll see some of this extend, which I'll get into shortly. We will be drilling in the underground very soon, and then we move to underground mining, which has been which was the history of Mineral Hill, and it will be the future of Mineral Hill underground mining. I refer to these as our piggy bank, and I am stealing this off some other companies, but these 2 little pits are going to be our mill feed for the next 12 to 18 months. And as you can see, at 3.5 gram gold and about 50 to 60 grams silver average, these are going to be great margin projects. I wish we had a lot more of these, and a couple more of them is one of our priorities in terms of exploration. But the other thing to consider here is, at these current gold prices, we're going to max out how much of this resource actually gets into the mine plan and reserves. I think we should be pushing towards well over 90% conversion to the reserves and mine plan on this project. So that gives you a feel for where we're going. We've just announced a resource on the increase there, a 30% increase on the gold and 67% increase in contained silver in Pierce North. That's about it. They don't continue at depth, so they aren't going to run for very long, but they are going to make considerable cash for Kingston shareholders. Then we get into the underground. The big takeaway here is that we already have 2 resources, 3.8 million tonnes in Soz and 1.6 million tonnes in Jack's Hut. All of this development you can see is existing. This is not a mine design or a mine plan. So we have 2 declines, 2 portals. So there's a lot of leverage, a lot of infrastructure and assets there. We've already pumped out the southern decline, the southern ore zone. We've bolted and meshed it ourselves. We now own some underground fleet. We've employed a couple of underground miners, and we are ready to put a drill rig in this underground in the next 6 months with the aim of starting it in about 12 months' time. Drilling, obviously, the success we all need is good drill results and continuing to add to our tonnes and resources. We've got a new discovery right here. We haven't even named it yet. This is this 12.5 metres at 3.4% copper equivalent. It is polymetallic, so it's copper, lead, silver, gold. And in additional, as we keep drilling, we're confirming these other areas which aren't in resource. Currently, the resource only contained in that area there. So there's upside coming and plenty of excitement from this underground. There's a bit of an overview of the whole site. We've got 5 targets. Basically, the southern ore zone we've just talked about. Pierce Corridor, we would like another Pierce pit. Ashes Graben is a deeper structural target alongside Jack's Hut. Parkers Hill East is an all potential target over here, basically 150, 200 metres from our current ore bodies. That's interesting. There's a drill hole in the 70s there. I think it was 6 metres at 9% zinc, and it's never been followed up. Bogon Prospect just sits outside our mining licence, and that's our highest priority exploration target. So we've talked about where we sit, we've talked about what our neighbours are doing. We've got a number of exploration targets here within our EL 1999. And then we have the mine sitting here, our small EL, and then 40 kilometres of targets and prospective Mineral Hill volcanics and Cobar Basin target type ore bodies. Most importantly, those grey areas are all lead soil anomalies. They're the types of things we're looking for. That's where you find your ore bodies in Cobar Basin. That's how Federation was found. It's not dissimilar to what our neighbours are doing. And I talked a bit about Talisman. They are also drilling here at Rip and Tear, and there is a hole right there on our boundary. Talking about Missima, we picked this project in 2017. It was a joint venture. We were 49%. We're now 100% of this. We've completed all the the DFS in 2022. We are advancing the project towards a joint venture. We've publicly been talking about we're looking for a partner. It's a big project. It's 20-year mine life. It's 500 million capex to build. So it's not something Kingston are going to do on our own. But it is really important because we do own 100% of it. On our base case numbers, it has a 956 million NPV on spot. Well, sorry, not even spot. At 2,000, it's 1.3 billion. I think on spot, it's over 2 billion NPV at the moment. It's a big project. It runs for 20 years, 120 to 150,000 ounces per annum. What we want to do is find a big brother to help build this and retain a minority position to the project. So we've had a data room open for a while, so watch this space. Can't go past the move in the gold price. We're getting leverage today as we sold gold. We sold gold yesterday. We got 3,500 from Mineral Hill, Aussie that is. This is what the gold price has done over the last 20 or 30 years. I don't even know, back to the 70s. This is when Missima was built. This is when Missima was closed. This is when we picked Missima up. And you can see our milestones when we got to 100%, when we completed the DFSs and where we are today. This is why Missima works and will be a very valuable asset for Kingston shareholders. I want to summarise with our three priorities. Our mission is to build Kingston into a gold and copper mid-tier producer. Next year, we're going to more than double our cash flow, which is really important for establishing our balance sheet and allowing us to continue to grow at Mineral Hill. That's priority number one, deliver the cash flow. Priority number two, extend the mine life, extend that underground and keep growing those resources so that not only do we have a longer term mine life, and we are targeting 10 years, we're about 4 years at the moment on the underground, we then can also underpin and support an expansion of that processing plant to that 700,000 tonnes per annum. So cash flow, grow the underground and expand the Mineral Hill, and try and bring a partner into Missima. They are our three priorities, and that's what you'll see all the news flow about over the next year. Thank you.
I like this. My day three cohort is well and truly up to speed with the timing. Kerry Stevenson, nice to see you in the room, the gold lady, looking at what's on offer with the gold. That's very good. I looked you up online, did a bit of stalking on you a little bit earlier today, and all I had to put in was the gold lady. Streams at the Gold Lady Australia, and that's what I got for. Would you welcome Kerry Stevenson, everyone? One of Australia's best commentators, best well-known commentators on gold in the room with us. It's always nice to have your company all over Australia. Right, this bloke here. Where are you taking us to? You're taking us not to do with gold either, Kerry, so this one. But this one will be very interesting. Going to Quebec and Canada, which brought in the tax credit for explorers recently, 30%. Very nice, very nice. In Quebec, they pushed that a little bit further, which I think why Pivotal Metal is exceptionally happy to be in Quebec, because there's some nice little credits, which I know Ivan Fairhall, the MD of Pivotal Metals, will explain to you all. Will you please make him very welcome, everyone?
Thanks a lot, guys, and thanks, Chrissy. It's great to be here. This is the first time Pivotal's been presenting for RIU, and it really is a new story, and it's quite possibly the biggest copper project that you've never heard of. So it's worth spending a little bit of time to think about what that means in the market that we find ourselves. So at a high level, Pivotal's exploring in Quebec. We've got two main assets in the province. The flagship asset is of course the Horden Lake project. It's got a very large copper dominant resource already defined there, 28 million tonnes at 1.5% copper equivalent. We're looking to increase the size of that and concurrently move that forward as a project, because we do see when markets tend to move into the direction that they're looking at moving, the more advanced projects are the ones that really benefit the most from that. We've also got earlier stage exploration, a large land package in the BAGB project. Some exceptional discoveries have already been made on that, nickel and copper, very high grades, and a lot of unfinished business there for us to follow up on and move forward. So we've got a little bit of the both. We've got the advanced, lower risk, very large project combined with some really high torque exploration. We're in Quebec. Chrissy just touched on it. It is a major advantage, and I'm going to take you through a few reasons as to what that actually means for you as a shareholder, and it's important to understand the practical benefits of being in a supportive mining jurisdiction. And of course, we've got those critical metals, copper in particular. I don't think there's a single person at this conference that doesn't have a positive view on copper. There's very good reasons for that. I come from a private equity background. We invested probably about $300 million into copper projects, and so we spent a lot of time looking for them, and I can tell you that they're not there. And that's why the market's so excited. You've got obviously very favourable demand. Doesn't matter what you want to pick in terms of technology, of generation, and storage, but you've got to have copper to move the electrons around, and it's the common denominator. And there's really just not the projects. We've been through a period where it's been underfunded, and there's a real supply shortage coming. So it's the right place to be, and as shareholders, you benefit from the critical minerals narrative in terms of financing and permitting. And those things protect you as shareholders from dilution effectively. It reduces delays and lowers the cost of capital, and that's the world that we're moving towards. And we're funded. We've got re-rate catalysts. We've just done a drill program. You've got a lot of news to look forward to, catalysts to de-risk the project and increase the value, and you've got all that to look forward over the next 6 months. So just coming back to Quebec, it is a very supportive mining jurisdiction. It's the map of our projects here. We're in northern Quebec with Horden Lake, and just north of the Abitibi, so Val d'Or, extremely famous mining region, well known. You've got 22 operating mines in the province, 2 smelters. There's really not a better place to be operating in Canada, in my opinion. And in terms of support, you've probably heard from lots of people at this conference that you're in a supportive mining jurisdiction, but you sort of ask yourself, what does that mean practically for the companies that are operating there? And it's great to have a stable mining code, but companies at this stage, they need practical assistance, and this is why the flow-through share scheme is just so important to understand. Effectively, flow-through is a tax haven system that individuals and corporations can use in Canada, and all you really need to know, and you can look at our financing that we did in March last year, we raised $2 million down here in a conventional sort of financing with the usual kind of investors that would come into, and they are our shareholders, but those shareholders pass through a shareholder in Canada as the shares are acquired, and the net effect of that is you raise $2 million down here and $4 million gets put in your bank account in Canada. So the government is paying half of our exploration costs, and it effectively halves the dilution for you as shareholders, and if that's not a supportive jurisdiction, I don't know what is. So this is the flagship project, Horden Lake. It's not a lake. It's a pretty flat, featureless part of the world, to be honest. It's a little bit boring, but that's kind of what you want in mining. There's no people around. We're on Crown land. No Indigenous issues. They're just stakeholders like everyone else, as you'd expect. And no mountains. Sometimes you get places in Canada where 10 kilometres feels an awful long way away. So there's no mountains, no rivers, 10 kilometres to the highway that runs right past the project or where the highway. So good infrastructure, no people around, and a great place to be sort of developing a project. So some facts and figures on the deposit itself. So we've got a very large resource endowment already, 28 million tonnes at 1.5% copper equivalent. That's about 50% copper, about 30% nickel, and 20% other. And that other portion, we're looking to grow that, and I'll explain in a couple of slides kind of what that means and how we're going to do that. But essentially, you're going to see those byproducts contribute more value to the project. It starts at surface. It's very well defined. It's had 55,000 metres of drilling. We've just done another 7, so you can take that over to 60. it's 55% indicated, and as I said, there's a very large open pittable project that sits on top of this. As part of that, 60-odd% sits in an open pit shell, so that's what you're looking for a lower risk, lower capital development scenario. We've got a plan to advance the project and add value to it through exploration, and we're just at the start of that with the first drill program that we've just executed. That's the first time it's been drilled in the last decade, effectively, because the project was tied up in private ownership and was not worked on, which is very unusual for a project of this size and scale to have not sat there dormant in a listed company. Normally those projects are ones you probably should avoid. There's a reason it didn't have money spent on it. There's a very different background to this project. We've got those value catalysts pending, drill results pending. We just put out the first 2 holes of 33 holes, so lots of news flow to come, and I'll sort of take you through in a couple of slides what a little bit more detail on the work that we've done. So this is the resource itself. The coloured boundary is the 28 million tonnes. You can see effectively, whoops, there's no drilling below the resource that hasn't hit mineralisation. There's no holes. Like, as far as the project has been drilled, there's mineralisation, so it's completely open at depth. It's been drilled relatively shallow for this part of the world. This part of the world, the deposits can go a long way. And there's only 4 holes below 440 metres vertical, so there's still a lot of potential here to grow this resource. And as I said, we've just started that process with our exploration. We've drilled 33 holes. It's a combination of some infill drilling. I'll take you through the next slide why we've done that, and a combination of deeper holes which are testing the down plunge extension. So we're looking to extend the mineralisation down plunge, add tonnes that way, and then on top of that we've done downhole EM on those holes, and that's looking to generate exploration targets down plunge, so that we've got a plan to go on and continue to grow this over time. We've got massive sulphides in the mineralisation. Downhole EM surprisingly has never been done on this project. Excellent tool for targeting extensions of this mineralisation, so we're really excited to be able to share those results in the next couple of months. So we've just put out 1 hole, essentially talking on that grade opportunity that we've talked about. Some of the holes, as I showed you before, some of those holes are sort of infill holes, and that wasn't driven really by geological confidence. We've got a fairly good understanding of the ore body. What it was really motivated by was to infill information. So those flanks of the deposit, the southern and the northern flanks, they've only got copper and nickel assays, and we know from multi-element assay that was taken in the central part of the deposit, the different drill programs that have been done at different periods of time, that there's significant gold, platinum, palladium, cobalt, silver byproducts in the rock, and it's just sitting there to be discovered and assayed. So we're effectively just infilled some of that information, and we're looking to update the resource in the second half of the year to bring that value into the project. But yeah, first hole that we put out there, 37 metres at 1.3% copper equivalent. Like, that's really indicative of what this project is. You don't get 28 million tonnes by intercepting a couple of relatively narrow bits. This is a big, thick zones of mineralisation. You've got great geometry there, sitting in the open pit. You get good copper grades and then a lot of contribution from the byproducts, and that's how you get 28 million tonnes at 1.5% copper equivalent. You get intersections like that, and there's lots more of those to come. So from a development perspective, look, the project is well located. As I said, it's in a great province. It's got all the skills and infrastructure around the project that you need. At the project itself, it starts at surface, open pittable. That lowers your development hurdles, lowers your capex, lowers your execution risk. Everyone prefers an open pit starter project. You can defer a lot of that underground capex. It's got great geometry. The shape of the ore body sits well in an open pit, and it's thick, and when you move to underground, probably long hole open stoping, you've got relatively productive mining conditions, and that means lower costs. Positive metallurgy, the copper is extremely good, the nickel is good. You've got, the work that we've done, I'm looking to share some of that shortly. There's no nickel in silicates issue, which is sometimes in Canada you can get a lot of the nickel locked up in the silicates. We're not going to have that problem here, and we've got a detailed metallurgical test work proposed plan that we're going to be executing after this drill program. Where, as we've collected the assays, we're going to pull together a sample, and we'd be looking to produce high-grade copper and nickel cons. That'd be the highest NSR for this project, I believe. We've We've got that paved highway within 10 kilometres. This is the highway. It goes for about 1,000 kilometres. It links Val d'Or with the major hydroelectric complex, and that hydroelectric complex is the reason that's up in James Bay. That's the reason that Quebec has pretty much the lowest power cost in the world. Exports power down the eastern seaboard, and you're talking 5 cents a kilowatt hour in the province. And power is kind of a third of your operating cost in a conventional environment. So significant savings for the project to be able to connect to that, and it's 100% renewable as well, which is obviously important as we move forward. And yeah, just a great place to be developing a project because we've got everything we need. So just quickly on valuation, so I think, hopefully you believe it's actually not a bad project and it looks pretty good, and then, you look at, well, we've got a market cap of $12 million, and I'm just telling you that isn't sustainable over the long term as we bring this project forward and demonstrate the real potential that that's already been discovered, as well as the potential for it to grow. And so the green bars here, you can see that's the size of the resource itself in copper equivalent. You could do a similar graph on copper only. And the red dots is our valuation per tonne. So we're trading at a significant discount to our peer group. Don't forget that peer group's all been beaten up. Everyone's in the same boat. We've been in this difficult market, and the positive copper prices haven't really flown down to this part of the market yet. And so you can see real re-rate potential as this project gets considered as a credible copper development peer in that copper peer group. So lots of opportunity, as well as you'll get that compounding re-rate as the whole sector re-rates as we move into a different sort of market, more constructive market than what we've been in recently. So just quickly on our exploration projects, I said we've got super high grades being discovered there at BAGB. We've consolidated a large land package, 157 square kilometres. There's lots of prospectivity, lots of discoveries that have been made here. We focused just a little bit of work here on a particularly exciting discovery. You don't see drill results like that every day. Some very high grades of nickel and copper that have been discovered from surface. We've done a geophysical survey in this area. The MT survey looks a little bit deeper, and what we've seen is a mafic contact model being validated. Those discoveries sit on that contact host horizon. We know that we're getting a better understanding of the geology, and we've got some really great conductive targets that sit on that horizon. And the exploration that was done here, you can really see how limited it was and how concentrated it was relative to the scale of the opportunity we believe here. There's those very high grades. They came from down below. They didn't come from up in the sky. And you want to find out, track the fluid flow path and find out where you can get really scalable anomalies of scale that sit on that prospective host horizon, and that's what we're looking at. We're looking to find something big. So lots of news flow to come. As I said, we just got put out the first 2 holes of a 33-hole program, 34-hole program. So assays are going to be flowing out constantly over the next couple of months. Resource update, met test work, lots to pay attention to, lots to get this project up in the market. And it's a new project for the ASX. It's new in the listed markets really for the last 10 years. And so it's really a good time to be out there telling a new story. So we've got the right commodities, we've got the value that's underpinned by a very large resource that's trading at a real fraction of its value. We've got a lot of leveraged exploration, we've got different types of exploration, but the potential to grow both sides of the business, and a great location and near-term catalyst that people can really get to understand this project and be active out in the market at this pretty important time. So thanks for listening. Come chat to me at the booth if you'd like to know more.
Do you speak French at all? Do you speak French at all? Parlez-vous français? No. Just wondering. All right, now we're going to get our microphones down so we get some nice sound from everyone. We're going to Laverton. Mr. Keane?
Would you like to?
I like Laverton, actually. Do you know Laverton?
Great holiday destination.
Pardon?
A great holiday destination.
Yeah, well, no, actually I do a travel program as well called Destination WA for Nine Network, and we were sent to Laverton, which is a hub of mining. There's about 4,000 people there, gold mining being the big thing, which we're going to talk about you with Duketon. Laverton was actually voted the #1 coffee in the goldfields in Western Australia.
There you go. I should become a coffee drinker.
Bit of useless information you didn't need to know, but for your miners and the people that are coming out to make use of this find that you've got, it could be very useful to sway them to come out. Would you like to talk about your project?
I'd love to.
And you'd love to hear about it. Would you please welcome Matthew Keane, who is the Managing Director of Great Southern Mining.
Thanks, Chrissy, and thanks, RIU. Good morning, everyone. I'm going to be relatively, hopefully, short and succinct and brief here. I've got roughly, I think, 5 or 6 slides which I want to talk to. So I hope if I can't convince you in those short amount of slides, then you'll have to come past the booth. I'm at 78 to have a chat, and I'm sure I'll convince you then. Okay. Past the disclaimer. So just a quick outline on, there's the usual slide, everyone's going to present this one, but a couple of things I want to point on. I think one of our key points of difference for Great Southern is the fact that we've got real skin in the game here. So we're a gold and base metal explorer, primarily gold at this point, but we've got 27% of our share capital is owned by directors, foremost our chairman. This capital hasn't been vended in, it's been bought on the market. Most recently we raised some money, so we raised 1.8 a few weeks ago. That was cornerstoned again by directors. Then that shows a belief in this project and what we're doing. We're not motivated by that pay slip at the end of the fortnight. We're motivated by having an ultimate win, getting the share price up. And if you come along, we hope we can do that for you as well. Look, the other point, I'm an ex-analyst. I did resources analyst for about 8 years. I did a bit of gold in that time. And one thing I can tell you, when you've got a gold price running and you don't see the commodities, or sorry, the equities coming and meeting that commodity price on its run, sooner or later that's going to re-rate and they're going to match them. So at this point in the cycle, our share price here bubbling between 2 and 3 cents is not uncommon for a few guys out in the area there. But what I can tell you is this is a time when you want to be stock picking, you want to pick your team, you want to pick your assets, get on board, because I can tell you that gap is going to change. That yellow bar there, of course, that's the gold price, which, you know, like copper and uranium, it's one of the commodities that I think you want to be in at this point. Okay, so who is Great Southern? Look, we're a discovery company. We're focused in Australia, primarily in Queensland and WA, 2 of those states which I believe are supportive of mineral resources industry, which obviously those populations have a belief that they contribute significantly to the GDP and allow for amenable exploration and mining. All of our assets are within 40 kilometres of existing mills. This is very important. It's a very expensive time to go building plants, building infrastructure, long lead times. People are hard to get. So if you're located within proximity to existing infrastructure, that's a piece of pain that you're unlikely to go through, unless, of course, you find that big monster, which, of course, we aim to find as well. Okay, first of all, Western Australia. I'm only going to talk to 2 of our core projects here in the country. In Western Australia, we've got a cluster of projects around Laverton. There's a game of mines currently in play. We're aware what Genesis are doing, St Barbara. There's more consolidation to come. You know, I think we will be part of that, both as an acquirer, perhaps a target as well. Our East Laverton, Monami, I'm not going to talk those, but East Laverton, a big project area. We will be working up the background for gold and nickel. Monami is shovel ready, has an existing resource on a mining licence centred around 3 existing mills. So that's ready to go for someone if they wanted to come and put that through their plant. But Duketon is what I'm going to talk to next. So our Duketon project, we're located just south of Regis Resources. So Regis has 10 million tonnes of installed infrastructure. You know, the cost to build that today, roughly, you know, I'd estimate around about $1 billion. Resources are becoming harder and harder to find in this belt, the Duketon belt. It has been explored for some time. Our tenure, we sit to the south, we have roughly 10 to 15% of this greenstone belt, is primarily underexplored by nature of the people who owned it before us, really haven't put the work in there. But what I can tell you, we've got 3 target areas, Southern Star, Amy Clark and Golden Boulder. All of these have 3 key elements. They've got high-grade intercepts, they're starting to show continuity, they're shallow drilled, and they're sitting on the core mineralised structures which host all the mines in this belt. So there's 3 or 4, mainly 3 structures in this belt which host all the mineralisation. These targets are located on that, and we know they've got high-grade intercepts. I'll just call out a couple from Southern Star there, you know, up to 60 metres going 2 grams, bearing in mind that this is a belt where most of the feed into Regis's plant is around about the 1 gram per tonne mark. It's a bulk tonne mining operation up to the north of us. So really exciting, but look, we're not a three-trick pony. We've got a pipeline of assets which will work up in this belt. Again, all of those sit on those core structures. Some of those already have high-grade intercepts as well. We're going to work this belt up, and our aim for this year is to exit, and give our shareholders a line of sight as to how many ounces this area is going to yield. So we've gone from the discovery phase, which we believe we've surpassed, and now we're moving into that quantification stage, show the resources we've got, and increase the value of this share capital. Okay, moving across to the other side of the country in Queensland now. So we've got what I'd call a province-scale play around the Mount Carlton mine. So Mount Carlton was a very profitable mine. It's now in care and maintenance and administration. It needs to build some inventory before it restarts. We're not chasing Mount Carlton. We're chasing big monsters here. So looking for big epithermals, big porphyries. These are the sort of assets the majors want. We know we've got mineralisation, at surface, very underexplored. But knowing that this type of mineralisation costs a lot of money, we headed out last year and sought a partner. We managed to run a very competitive process on our tenure. So the ultimate outcome was we had Goldfields. Goldfields is the 4th or 5th largest gold producer globally. They're farming into this asset now, so they can earn 75% by spending $15 million over 6 years. They've got a minimum expenditure of $2.5 million in the first 2 years. We did the deal in October. They got on the ground in November. Geophysics is underway as we speak and looking to be producing in the second half. Sorry, not producing, I wish. Drilling big, deep diamond holes into some really core, exciting targets in the second half of this year. So this is going to generate good, strong news flow for the company, as well as our stuff over in the west. And I'll just highlight a couple of things that were exciting, not only for Goldfields. This was competitive. We had another 1 or 2 global majors very excited to get on board, but ultimately Goldfields was the choice. Great team, a really good focus, and that balance sheet to really give this the drilling it requires. But what they liked, okay, so up in the top right corner there, you've got outcrop of stockwork veining. That's got rock chips going up to 10 grams per tonne, gold. You've got this stockwork veining. The orange colour there is limonite. That's where the sulphides are weathered out. You've got quartz veining in the middle of those. That outcrops for up to 3 kilometres in one portion of the tenement package, a prospect called Leichhardt Creek. Another area called Molongal Creek. You've obviously got the blue here. That's copper at surface with also very high silver grade. So a lot of mineralisation expressing at surface, and that's really what got the majors excited to come in. Obviously Goldfields are there doing work. And look, we've got real belief in this project, and we're really excited. If Goldfields are chasing a monster here, so they're chasing something beyond 5 million ounces. If we end up with 25% of something that has 5 to 30 million ounces, we'll be more than happy as a junior, and I'm sure that adds significant value to our share price. Okay, I said I'd be quick and get through it, so I think I've shortened the time between now and morning tea. But at morning tea, please grab a sausage roll and come have a chat to me. I can give you more of the detail and show just why we're excited and exactly what we're going to be doing over the next 6 to 12 months to really add some value to this company. Thank you very much.
Thank you very much, Matthew Kane. Matthew, did I speak to you this morning?
Briefly.
At the front there, briefly?
I did. I think I did a runner.
Yeah, I did. Sorry. With 95 of us up on stage, but I was sure that you were the most excited person that I spoke to this morning. I was trying to remember why that was, and listening to the presentation, understood. Thank you very much for that. All right, here's the man with the tight share register. So let's have a look at why and what he is. He's got a nice little strategy, which I'm sure he's going to outline to us. This is Dr. Luke Mortimer, everyone, Chief Executive Officer of Kalamazoo Resources. Please make him welcome.
Thank you very much. It's a pleasure to be here this morning to give you an update on all things Kalamazoo. Just the initial forward-looking statements, which you can read at your leisure. And just a quick overview of our corporate structure. We do have a very tight share register. Top 20 hold about 58%. And I think that's just, we also have shareholders in Novo Resources and Eric Sprott. I thought it's important to sort of just talk about what we do. And what we do is basically, it's what we call a project generator model, where we focus on growing the shareholder value by maintaining a tight share register, We do our best to get a share price increase, and we try to deliver a capital or in-specie return to our shareholders. This is really done by identifying high-quality projects where we believe that we can actually add value and create shareholder value that way. We do this by identifying high-quality projects. We do some systematic exploration. We then have clear decision points whether to continue to fund exploration and where we believe we can add value, or perhaps we might introduce a partner where we reduce our exploration costs but maintain some exposure, or we might take action to make a liquidity event. And we also, part of our strategy is to basically to quickly and effectively and efficiently turn over projects. It's exploration 101. The more you can turn over your targets, the more you can increase your chance of success. As well as that, you can hopefully identify where projects won't actually make the grade, and you can exit accordingly. Now, it's one thing to talk about what we do, but now I'm going to demonstrate how we've done it. Since the company listed on the stock exchange in 2017, we started with some bulk trial mining of a project called Snake Well, a gold project in Western Australia. That was very successful. We then on-sold that project to Adamant Resources, who had the Kirkalocka operation just nearby. That was for $7 million. We also had a project in Victoria, which we didn't think we could add much value to, but was of value to Novo Resources, who we sold it to for $1.5 million. And then in this particular year already, we've had two quite transformational events. Firstly, starting with the spin out of our lithium assets into Cali Metals. That was in January. That's been very successful. That listed at 25 cents. It's currently at 40 cents. They're drilling now a 10,000 metre RC program. That's where we took our Pilbara lithium assets and our Lachlan Fold Belt lithium assets, combined it with Karora Resources at Higginsville, and created this new company. We retained 20% of Cali Metals, and we also did an in-species distribution to our shareholders, which at the current share price is equivalent of something like a return to shareholders of about $15 to $16 million. And then in February this year, we announced another a big announcement. It was where De Grey Mining had executed an option to acquire our Ashburton Gold project in the Pilbara for $33 million, and I'll give you an update on that shortly. I think it's important to note too, that currently at our share price, the 20% equity that we retained in Cali Metals is approximately about 80% of our current market cap, which sort of highlights how seriously undervalued we are. In the event that De Grey do exercise the option to purchase the Ashburton project, that would have generated something like $57 million for our shareholders, which if for a junior company is pretty good result. Not too many can say they can do that. So what's left? We've spun out our lithium assets. Our gold project is technically in the hands of De Grey Mining for this option period. We still have a very good gold project up in Mellona West near Hemi. We have a lot of ground that we're currently exploring in central Victoria, and we have a base metals project in Western Australia as well that we think we can see a Golden Grove analogue. So just a quick update on the Ashburton project. We acquired it from Northern Star in 2020 for nil upfront payment, but a deferred consideration of payments and royalties upon commencement of production. In the event that De Grey actually exercise that option to acquire the project, they will take on those deferred liabilities as well. What we did an updated mineral resource estimate, came up at 1.44 million ounces at 2.8 grams, which is a very healthy grade. And in terms of value adding, we delivered a 10% increase to the grade, and we also had a very significant increase to in the high confidence indicated category of resource ounces. And then in February, we announced this deal with De Grey, where they have the option to acquire the project for $33 million. They've already paid a $3 million upfront non-refundable payment. They've got 12 months, and with a possible extension of a further 6 months, to do some more development studies and make a decision. Upon that, if they were to execute, they will pay us $15 million and then a further $15 million 18 months later. Now, De Grey have already initiated their development studies. They've already been on site. And they are also committed to spend $1 million on exploration and assessment activities on the project during this option period and keep them in good standing. So we don't have to spend another cent on this project during this option period. Continuing on in the Pilbara, we have the Melina West project, which is a long strike of the Hemi deposit that De Grey are taking to production. We're along the same structural corridor. That's our project there in the red. And we've already done a lot of soil sampling there. We've identified 5 highly prospective targets. We did a small RC program in late 2022 before we got rained out. And we actually had a very significant high-grade hit of 1 metre at 10 grams at the bottom of a hole, and we now have to go back and follow that up. What we're doing there this year, this is the Wattle Plains prospect of the 2 prospects that we'll be tackling this year. We're currently in the native title negotiations, which are progressing very well. We intend to follow up that high-grade hit. And we've just done some 3D modelling, which has identified some very exciting targets for us. We have a detailed gravity survey that is starting next week, about 3,000 stations. And we hope to, with the final, when we finally receive the gravity data, we'll finish our drill program designs, and we hope to do at least a minimum of 1,500 metres of RC and diamond of 2 prospects in the second half of this year. Just an example of the 3D modelling. I thought this was quite interesting to show. This is these magnetic features. This is one of these what we call a magnetic finger that's coming up. We think that might be the causative body. We've just clipped this with this gold hit here. The gravity survey will help constrain this particular target, and by the looks of things, we need to turn the drill rig around. So that was a bit of a learning exercise. This is an example of the detailed gravity survey. It's a 50 by 25 metre grid. We have some of these very significant northeast northerly dipping structures. We have these significant magnetic features that are in the hanging wall of that structure, and we have a high-grade hit here. So this is obviously going to be a key focus for us this year. We're also pretty big in the Victorian goldfields. We're one of the largest landholders in Victoria. We have something like nearly 2,000 square kilometres of exploration licences. At Castlemaine, a historic goldfield that had something like produced over 5 million ounces of alluvial gold, as well as our South Muckleford project near Maldon, Tarnagulla and Myrtle Creek. We also more recently acquired a very large project called Mount Piper, which is very exciting for us, and it's about 1,500 square kilometres, and I'll talk about that in further, but so we're still quite active in central Victoria. This is the Mount Piper Gold Project. We acquired that from Coda Minerals in 2022. It's highly prospective for the gold antimony style of mineralisation, that is the Fosterville and Costerville style of mineralisation. We're not too far from Fosterville, and that's the Costerfield mine there. This is all our Mount Piper project. This is Southern Cross Sunday Creek prospect. It's a project that's very exciting, new discovery, some big numbers. And we've already had some rock chips down here and a small drilling program here. We've been finding some very high-grade gold. This is our current focus at the moment. And I'll just elaborate on that a bit more. This is that area that I just highlighted there. This is a magnetic feature. There's no workings, no historical exploration, nothing. But when we got out there, we're actually finding these breccias and veins and assays are pending on those. We've also just initiated a ridge and spur soil sampling program that is actually happening. It actually started a couple of days ago. So we're quite active in the field in Victoria at the moment, and we hope to build these up to hopefully a drilling program for later this year. We also have a base metals project. This is actually a tenement just to the north of our old Snake Well project. It was originally explored by CRA quite a few decades ago, looking for another Golden Grove VMS deposit. Golden Grove is a very large VMS and very profitable VMS deposit. We got granted this tenement in 2022. We have in this prospect, in this particular tenement, we have probably a very large chunk of the most prospective felsic stratigraphy to find a VMS deposit. We also have a lot of historical geophysical data, such as IP data, that we're actually currently reprocessing and targeting. Now that data should be available to us hopefully by the end of this month, which will allow us to push forward and hopefully have a drill target there as well. And I guess the other part of where we're at the moment is that now that we've spun out our lithium assets and our Ashburton Gold project is now hopefully going over to De Grey Mining, we are proactively looking for our next advanced project. We have a demonstrated track record of acquiring successful projects and creating shareholder value. And we're very keen to replicate it. We're actually now looking for our next Ashburton Gold project, or Ashburton project. We have preferred commodities of gold and copper, hopefully copper, gold, and also lithium. And we're looking for projects that are advanced, possibly even have a small resource or some significant intersections that give us some confidence that we can actually make an economic prospect out of it. We're currently evaluating numerous opportunities, and in fact, we're getting almost a project a day coming across our desk. But we're going to be patient. We're going to be quite picky. We have a good demonstrated track record, and we could obviously destroy that very quickly with the wrong decision, and we know that. So we're going to be very patient and find the right project for us, where we believe we can repeat our success and also return some more shareholder value. So just to summarise, we have a clear business strategy where we are demonstrating that we can deliver shareholder value through a good selection of our projects and whenever we can, returning some capital or in-species distribution to our shareholders. And not too many junior companies can say that. We're very undervalued at the moment, very cheap. We're a good buy. 20% 20% equity in Kelly Metals is currently worth about 80% of our market cap. We have the potential to add next year, if De Grey were to exercise that option, another $30 million, which obviously gives us a lot of optionality, real potential upside, and obviously no need to really raise any capital. A point I should have made earlier, whilst we've continued to turn over projects and deliver cash to the company, that has resulted in us not really having to raise much capital, and that means we don't dilute our shareholder base either. So that's part of our strategy, and if De Grey execute in the next 12 to 18 months, then we again will be in a very good position and very cashed up. We hope to build on our past successes. We've got, as you can see, we've got exploration programs on the go at the moment. We've got geologists in the field. We hope to be drilling in the second half this year, and we're proactively seeking our next big project, our next Ashburton project. And that's it for me. Thank you very much.
Well done. Thank you very much, sir. All right, team. Turaco Gold coming up on stage now. Justin Tremaine. Hello, Justin. You know I like the name of that bird, don't you? Turaco. We're going to West Africa, aren't we? But it's not called West Africa. Do you call it West Africa now?
Côte d'Ivoire, West Africa.
Côte d'Ivoire. I'm glad that you said that rather than me. Do you know much about the Turaco bird itself?
Well, it's the national bird of Côte d'Ivoire, so... Yeah, and it's very nimble on the ground, actually.
It's a beautiful bird, and it's got all these spiritual powers as well. So quite apt that you have named your company after it in search for this wonderful gold that you're after. And you're in a really nice little jurisdiction as well. It's a stable little regime that you're in. Nice. And I think what is also interesting, it's very underexplored too. There's lots of opportunities there to hit something big. So let's listen to his story. Would you please make Justin very welcome, everyone?
Thanks, Chrissy. Thanks for that introduction. So I stood here 12 months ago to the day, actually, and Turaco at that time was a $20 million market cap company. In fact, we were in the process 12 months ago of raising $3.5 million at 5 cents. Today, 12 months later, this week, we completed an $18 million capital raising. Our market capitalisation now is $150 million. And our share price is up about 5 times at just over 20 cents per share. So undoubtedly a very successful and transformational year for the company. And we've got a lot more to come, and it's all on the back of this Afema Gold project in southern Côte d'Ivoire, which I'll take you through today. Just quickly, look, I won't go through this in detail. What I will say is we've had success over multiple companies as a team, as a management team. And in fact, over 3 companies over the last 15 years, probably 25 capital raisings, not a single shareholder who've held their position would have lost money. Every capital raising we've done has ended up in the money and sometimes multiples of money. And that's not just getting lucky on one company, that's over 3 companies over 15 years and probably 25 capital raisings. Our cash position today after our capital raising is over $20 million. In fact, we have another probably $6 million of investments and receivables, so close to $30 million of available funding for the company. Côte d'Ivoire, as Chrissy said, is a very stable place to politically to be operating. Most importantly, it is a very safe place to be working. In fact, I'm still trying to convince to take my kids there for Christmas holidays. Not yet, but I certainly will get them there one day. It's a very safe place to go. And in West Africa is not just West Africa. It's very important to be very discerning between the countries. And unquestionably, nobody could question that Côte d'Ivoire is the premier jurisdiction of West Africa. So that's the first reason we're there. But the second reason we're there is the size of the prize. So in the Birimium in West Africa, there's over 60 deposits of over 1 million ounces. Within Côte d'Ivoire, over 1/3 of the Birimium, the prospective rocks, sit within that country. But to date, probably 5 to 6% of the ounces across West Africa have been discovered in Côte d'Ivoire. This is something that's changing. Over the last 10 years, majority of discoveries have been in Côte d'Ivoire because that's where almost, I would say, 80% of the exploration investment is going now is into Côte d'Ivoire because it is the premier jurisdiction in West Africa. It's the second largest economy in West Africa. And there's many companies there. In fact, the most profitable gold mining companies in the world, such as Perseus Mining, Tietto, which is getting taken over, Endeavour Mining, Barrick Gold. So very big companies are very comfortable operating in Côte d'Ivoire. It is the most developed country across West Africa with the best infrastructure. So our project, which I want to touch on today, is the Afema project in red here, in the southern part of Côte d'Ivoire. So not only are we in the best country in West Africa, we're in the best location as well. We're as far south as you can go in West Africa, away from the trouble spots in the north, so around Burkina Faso and Mali, so a very safe place to have a project. And we're only 2 hours drive, or about 100 kilometres out of Abidjan, the most developed city in West Africa. And then from an infrastructure point of view, we have a brand new highway that is a border crossing into Ghana, where our project sits on the border, that runs through the southern part of our project area. And you can see a photo there. That's a brand new highway. That's a photo that was only taken a few months ago. And we have hydropower. Electricity in Côte d'Ivoire is 100% generated within the country. In fact, they're an exporter of electricity, and that's all a hydropower generation. And one of the main hydropower schemes joins our project on the northern area. So we really tick all the boxes to develop a gold mine here. But what's really interesting is the geology, and this project, Afema, has been long sought after by the majors in West Africa, and we're very fortunate to be able to put our foot on it. We have the right to earn 70% of this project. We currently have 51%. We earn 70% by completing a feasibility study. It covers 1,200 square kilometres of contiguous exploration position, so a very large position, and it covers the extension and the convergence of 3 of Ghana's world-class gold belts, where they come together and extend across the border into this southeast corner of Côte d'Ivoire, as you can see here. Of particular significance is the Asanka belt, to the south there, running through our southern part of our project there, which hosts deposits like Obertan in Ghana, plus 6 million ounces, and then the Sefwi Bibiani belt, which is a world-class belt in anybody's language, and that hosts deposits such as Shirano and Bibiani, which extends through the middle of our project area. There's been a lot of work done on this project, over 200,000 metres of drilling, which I'll take you through. In fact, I say over $40 million. It's actually probably significantly more than $40 million of drilling that's been undertaken on this project to date. But all of that drilling, 100% of that drilling, is along the extension of the Sefwi belt. And these other belts within our project area haven't been touched. So we have multiple 5 to 25 kilometre mineralised structures within our project area. So if I just zoom in on our project, we've got a granted mining permit in red in the central part there, and then the exploration tenure around it for about another 1,000 square kilometres. In yellow, running through the middle, is the extension of that Sefwi belt. We call it the Afema Shear, and that has been delineated with about 200,000 metres of drilling. There's a historic resource there, which I won't state, but it is publicly available. This is not potentially multi-million ounces. This is confirmed multi-million ounce project. And that drilling has defined mineralisation, high-grade mineralisation from surface across a series of deposits along 25 kilometres of strike of this structure, from Tolesso to Jonction in the north, down to the Inuri into the south, and then a new discovery, a recent discovery called Woolloo Woolloo, all sitting within that granted mining permit. And that's where all the drilling has been. And then to the south of that, we have another yellow structure highlighted in yellow, where we have 20 kilometres of strike. That's the extension of the Asanka Belt in Ghana, running through our project area. It's been subject to soil sampling, trenching, spectacular results, but no drilling yet. And we've got 20 kilometres, and we'll be drilling that in the second half of this year. At the moment, we have 2 rigs operating. So if I just zoom in on the mining permit area in red there, you can see all the little white dots there are historic drilling that's been undertaken over the last 15 years. And so we have 2 rigs operating. We firstly have a rig operating at the Woolloo Woolloo deposit, which sits on a north-south splay coming off this Afema shear in the southern part, or the southwestern part of the mining permit there. And that's drilling out a maiden resource at that discovery, which I'll take you through. And then we have a diamond rig drilling along this Afema shear at the Jonction deposit, the Inuri deposit, and several other deposits which aren't even annotated here, to give us confirmation of that historical drilling and samples for metallurgical test work. So we have a lot of work going on here at the moment, and we've started publishing results, which I'll take you through, which are some pretty spectacular results. So if I just start on the north, we have the Afema shear, the Jonction deposit seen on the northern part of this Afema shear here. This is a long section, so it only has a strike length of about 400 metres, so not a huge strike length, but this is a very high-grade deposit. And you can see some of the intersections there. It's worth touching on them. These are not typos. 40 metres at 7 grams, 24 metres at 10 grams per tonne, 14 at 10 grams per tonne. Multiple 100-gram metre intercepts. You'd be lucky to find a project that has 100-gram metre intercept, but we regularly are generating plus 100-gram metre intercepts there. We recently just drilled 3 holes and announced the results there, confirming this deposit, the historical drilling, and those samples are being subject to met test work at the moment there. And you can see some of the results from that drilling announced just 2 weeks ago: 17 at 3 grams per tonne, 9 metres at 5, etc., etc. And this deposit is open. Everyone says their deposits are open. Well, that's all the drilling you can see there. You can see bottom 3 holes there. There's only 3 holes there, so it needs to be further drilled. But 12 metres at 7 grams, 16 metres at 5 grams per tonne. So it truly is open at depth and at underground grades. Moving south along the Afema shear to the Inuri deposit, where we're also drilling at the moment. This being drilled out over a larger strike length of about 500 metres, but once again remains completely open. This has been drilled down to about 300 metres. You can see all the historical drilling there. And we just recently drilled 5 holes in there once again to confirm this historical drilling and also to give us samples for met test work. And we just announced the results from that, I think, 2 weeks ago, which included that 67 metres at 8 grams per tonne, 30 metres at 5 grams per tonne, really confirming this is a massive gold system that we're dealing with. And there's the historical intercepts, such as 33 metres at 7 grams, 64 metres at 3, etc., etc. So a very large gold system. Then the Woolloo Woolloo discovery, a new discovery that was actually made by another company called Teranga Gold, which then became part of Endeavour Mining back in 2020. They undertook 28,000 metres of drilling here, mostly diamond drilling. In fact, spent close to $20 million drilling this. Huge strike extent, 2.9 kilometres. The average strike length of a deposit in West Africa is less than a kilometre, so this is a significant discovery. And they've only drilled it down to 120 metres. This is a long section you can see here, showing all that historical drilling. It's been drilled on resource spacing already, 40-metre spacing. And now we have an RC rig that is extending that mineralisation from average depth of 120 metres down to up to about 200 metres vertical depth in places. And that's based on some pit optimisations that we've done. So we're only drilling out extensions which will be economic extensions. That program will finish in about a month's time. And then what we'll be looking at doing is generating a JORC resource in middle of this year for all of this mineralisation, the Woolloo Woolloo discovery, the Jonction deposit, the Inuri deposit, and several other deposits along that Afema shear. And we'll be looking to publish that around July, August of this time. Just touching on this Woolloo Woolloo deposit, this is not as high grade as some of those deposits along the Afema shear, but the beauty of this is a bulk wide zone of mineralisation which will have a low strip ratio, so low mining costs, and is completely free milling. In fact, it would be very low cyanide consumption based on test work that we've just recently published. So plus 90% recovery as gold leaches out from the oxide transitional and fresh zone within 4 hours. But you can see a couple of sections there. It's from 25 metres to 80 metre wide zone of mineralisation, averages 30 to 35 metres in width across that 2.8 kilometres of strike there. And once again, you see some of these interceptions, such as 40 to 60 metres at 1 to 1.5 grams per tonne. So a beautiful deposit to mine at Woolloo Woolloo. And then looking regional beyond that. So the next 3 to 4 months, we have a very clear objective to define a substantial JORC resource from what we already know along that Athema shear and the Woolloo Woolloo discovery, which will give us the critical mass to kick off pre-feasibility study. But we won't lose sight of growing that resource beyond that. And so the second half of this year, we'll start to turn our attention to the regional exploration. So running through the middle, this is the geochemistry over magnetics, and obviously all the red, hotter colours are anomalous gold in soils. A lot of the project area hasn't been sampled, as you can see there. You can see the middle zone, that's the Athema shear where all the work's been done, so obviously highlights that. But to the south there, we have this extension of the Asanka belt running through our project, 20 kilometres of strike, very good soil anomalism on that. And we want to be drilling this in the second half of this year. And this only sits 5 to 7 kilometres away from that that drilling that I just referred to previously there. And so all the dots here are not drill holes along this structure, they're pits and trenches, and they're returning regularly 10 to 20 metres at a couple of grams per tonne, such as 28 metres at 3 grams, 10 metres at 3 grams, 11 metres at 2.5 grams. So these are trenches at surface down about 1 metre across strike. And now each of those trenches is now turned into a significant artisanal mine site. There's multiple artisanal mine sites along this 20-kilometre structure. And some of those, like the main one where the photo's there at this Afanu target to the south here, there's been channel sampling across strike of these artisanal pits, which returned 36 metres at 4 grams per tonne. Hasn't seen a drill hole. Okay, this will add ounces to our resource, and it could be very significant, but we won't know until we drill it, and we'll be looking to drill this in the second half of this year. And so we could quickly see this project growing into another West African multi-million ounce gold project. And that's why we're in West Africa. We're there to develop a mine. We're not there chopping and changing from a commodity that's the flavour of the month. We're in gold in West Africa. We make no apologies for that. And we're chasing world-class discoveries, and we believe we have that here with Athema. We're well funded. We've got 2 rigs drilling, so you'll see a lot of drilling results coming out from Tarako over the next 6 months, and you can have a look over the last month, some of those results. We're doing met test work because we actually want to develop a mine here, so we're not just drilling out a big resource, we're already looking at the economics of what we're drilling. And we've got a team that's done it before, as I said, over multiple companies. We've been successful, and all those companies have ended up going into production, and all of our shareholders have always made money out of backing this team. So a lot of news flow. The main catalyst for us is a JORC resource, as I said, July, August of this year. And thank you very much for your time.
Justin, I didn't jump up just then because I did steal 20 seconds off you with my inane babbling about the bird that I'm obsessed with. But congratulations on the transition from last year to this year. Well done. Would you put your hands together for them? They did an awesome job taking that asset. All right. Where are we going to now? Oh, no, we're going to bauxite next, the raw material for alumina, demand for which is going through the proverbial on the race to electrification. And Metro Mining is doing exactly that. You are mining, you are producing. Things are looking really well for you guys. This is Simon Wensley, who's the CEO and MD for Metro Mining. Simon, welcome back to RIU, and look forward to hearing an update from you. Would you please make him welcome, everyone?
Great. Thank you very much for the introduction. Good morning. My name is Simon Wensley, CEO of Metro Mining, so that's ticker MMI. As we've mentioned, bauxite, for those of you who don't know, that's the ore of aluminium, so we make alumina, and then that goes into aluminium metal. We're a bit of a rarity at this conference. We're a producer. We've been producing for about 5 years, so when you think about the investment that you might be making, really think about the risk of Metro versus the other companies that you're looking at, and also the upside based upon actual cash flow coming into the company, which I'll talk about. So you can see a bit of our operation here. You've got the picture of the pit and a picture of our transshipping operation in the ocean in the Gulf of Carpentaria off the coast of Cape York. Some disclosures I would ask you to look at. So look, who are we? We are a 7 million tonne, low-cost, high-grade Australian bauxite producer, and that's unique to the ASX. We are the only listed pure-play bauxite operator on the ASX. We operate from the Weipa bauxite plateau, that is on the west side of Cape York. Comalco's been producing bauxite from that area, high-grade bauxite, for the last 60 years, and we have a reserve of over 80 million tonnes with a further 30+ million tonnes of resources. It is a high alumina direct shipping ore. This is a very simple process, and we've also got an extensive exploration lease holding in addition to that. The process is pretty simple. Mining with front-end loaders and trucks, trucking about 6 to 20 kilometres to the port site, screening and crushing, loading barges, and then transshipping into large ocean-going vessels. Very straightforward, simple, low-risk operation. So who are we as well from a management and board perspective? What you'll see here is a very experienced board with a lot of experience in operating, developing, marketing, bulk commodity operations from the majors, the Rio Tintos, Glencores, Xstrata, AMCI, etc. And the management team with significant operations experience up in remote areas, like where we operate, and indeed the transshipping side of things. So very experienced management team that's been very stable for the last year or two. Okay, so this is the performance of the stock over the last year or so. You can see we've sort of almost tripled the share price in that time frame. We've got a market cap of just over $200 million, but don't worry, you haven't missed the boat, and I'll talk about why that's the case in the next couple of slides. So strategy, very simple, bulk commodity, bottom of the cost curve. That's where you need to be. And the strategy for Metro is to go from where we are at the moment and, with our expansion, take us to effectively number one on the cost curve. And that cost curve is also steepening. So those of you who know the implication about cost curves, they tend to set the price in the long run. The 90th percentile of that cost curve tends to be where the average price will settle. And that 90th percentile is rising with new entrants coming in who are higher cost and further away from the key markets in Asia Pacific. And so that price, that marginal price, if you like, has gone up by about almost $15 US in the last 4 years. Okay, so why haven't you missed the boat? Yes, we've tripled our share price, but we're at an operational inflection point right now. So we are 7 million tonnes capacity. Global demand for aluminium is going to rise at more than GDP, and that's being driven by the energy revolution, so the decarbonisation and transition to low-carbon energy. Aluminium benefits from that more than any other metal. So if you are looking at a battery minerals, an upstream battery minerals portfolio, then you need to have bauxite in your portfolio to truly benefit from this transition. We've got a track record, and I'll talk about that from a production point of view in a second. And we've got customers who fully offtake the bauxite from us this year and going forward. The inflection point is that this expansion to 7 million tonnes has only just been put in place. We shut down for 3 months every year because of the monsoon season up in North Queensland. We restarted in March, and so the cash flow is only just starting to flow from this operation, and so that hasn't yet flowed in to the share price yet. The other part of this is that we have just raised last week $40 million to pay down debt. So effectively we had just over $90 million in debt, and last week we raised $40 million in equity to pay down $40 million in debt. So we've significantly de-risked the balance sheet in advance of this year where we're going to generate significant margins. So I'll leave you to read that at your leisure, and this presentation is been on our website this morning. Aluminium is growing, and it's being driven by mainly that transportation sector and the electrical sector. So there is, these days, if you buy a Tesla, 300 kilograms of aluminium in every vehicle. An EV battery has about 20% of its weight is aluminium. Solar panels, about 85% of the mass of a solar panel is aluminium. And there's more aluminium in a grid than copper. So if you like copper and you think copper is the way to go, then you should also be looking at aluminium. So aluminium is more intensely used in an electrical grid than copper. This has been reflected in the bauxite market, and you can see over the last 2 years, China makes up about 80% of the traded bauxite market in Asia Pacific. Their imports have increased by double digits over the last 2 years. So we saw 13% growth in that. So it's a bit like the iron ore market of the early 2000s, when you saw top-line growth in steel demand, and you also saw supply dropping away, particularly in China and in other places. The other aspect here is that Indonesia has also stopped exporting bauxite. So they were a relatively significant exporter of bauxite. The two main countries that export bauxite, Guinea and Australia, you can see the Guinea price has gone up by about 30% in that time, and the Australian price has gone up by almost 40% in this last 2 years as we've been getting that significant growth. There's the offtake picture. You can see we've grown from just over 2 million tonnes in 2021. We produced almost 5 and sold 5 million tonnes last year. And this year we're guiding the market to 6.3 to 6.8. We've got 3 major customers and another one doing trials with spot cargoes at the moment. So those are all large, integrated or significant aluminium groups based in China. Here's the production chart. You can see last year in the dark grey line, you can see the growth that occurred as we started to. We got debt funding at the start of last year to get the expansion underway. You could see the growth that occurred through last year as we ramped up, layering in some of that expansion. So we got up to about that 6 million tonne per annum run rate. So this year we're planning a 7 million tonne output, and so we've already really demonstrated that we can operate at that 6 million tonnes. As I said, we've just started up, so the orange line, you can see this year as we start up, it's always a little bit a slow start given the wet nature of the operation up there, but we're quickly hitting our straps, and you can see over the last couple of weeks that jump up as we've had one of the largest parts of our expansion just become delivered, which is our new transshipping device. So we've just we're about to sort of jump up to that 20,000 tonne per day level for May, and then we're going to be ramping up towards that 28,000 tonnes per day for the second half of the year. So all of the expansion should be layered in over this next quarter to be ready to hit that 7.5 million tonne run rate by the second half. This is a bit of a detailed slide, but the key message here is that we've spent our expansion money, about $35 million, on really 2 major elements, our new screening circuit and also this new transshipper. So the transshipping capacity of that is about 9 million tonnes, so way above the 7 million tonne capacity that we're planning for this year, and so is the screening circuit. So what that allows us to do is, one, have some recovery and sprint capacity to catch up any drops in production that we might have through the year, but also allows us to creep in other areas to be able to sort of deliver creep capacity at pretty low capital over the next couple of years. So we'll be looking at going above 7 million tonnes over the next 2 years, maybe to 8 or 9 million tonnes. Look, here's a cost and margin outlook. You can see how, as we've ramped up production, our costs have come down in the orange bar. You can see that's come down from 22 through to 23. Our plan for this year is trying to get sub $20 costs, that's Australian dollar costs, onto the vessel. Our freight, fairly stable. We've got long-term contracts in the freight space. that will deliver that again this year, and the freight contracts for next year should be lower. We've already started to contract those, and you can there see the pricing, last year's pricing, second half pricing of about 57. So we've based on this year's costs and second half last year's pricing roughly a $15 margin for this year. So if you do the sums, 6 to 7 million tonnes, that's going to deliver about $90 to $100 million in site cash flow. The pricing, as I said, is rising, and you can see that new price there. That's the sort of spot price translated to Australian dollars on that top line. So there's definitely a bit of upside to that margin for this year. Balance sheet. As I said, we've just raised that $40 million. We'll pay $25 million of the debt down as soon as we get the money in from that raise, and the other $14 million will be paid out in the first part of the next quarter, subject to lender covenants. But that will significantly de-risk the balance sheet, and you can see there, we're effectively going from about $100 million of net debt to about 60. So that's a huge change in the balance sheet and the risk of the company. One of the most exciting aspects, though, obviously reducing debt is good, but maybe a little bit boring. But what that debt raise allows us to do is to now focus on some of these low capital expansion opportunities, the debottlenecking, and also some cost reduction projects that are very high, fast return. So, as I said, we'll be looking to creep the company capacity up by 1 to 2 million tonnes over the next couple of years using that latent capacity that's in the system. So there's some examples here in terms of where we can now focus. We can fast track those studies to be able to deliver on those projects. So it's an exciting time to be able to do that. So this equity raise we've just done is not just about debt, but it's also about, I guess, releasing some potential in the business to drive more value for shareholders. So like I said, at $15 to $20 per tonne margin, every million tonnes is going to deliver another sort of $15 to $20 million in cash flow. We've got a couple of other bolt-on organic opportunities as well. We're sitting on a kaolin resource that sits underneath the bauxite, so we're going to sort of be able to spend a bit more time looking at that over the next year as well. Look, there's a couple more pictures of our new baby. The name is Ikamba. Ikamba is the Ankamuthi, the indigenous name for saltwater crocodile. So it's we've painted the crocodile on the side of the vessel there. We had a welcome to country ceremony last week for the vessel, in which a number of our indigenous elders came along and welcomed the vessel to the waters of Skardon River. It was a nice event. We had some local dancers, and the crew very happy to have them all on board. So, a really nice occasion. And you can see, the effect there. We've got one existing floating crane on one side of a Capesize. That's a 180,000 tonne Capesize vessel there, and you can see the new floating terminal on the near side. So it's in action, it's operating, and that is really the key to the future of the business. Okay, thank you very much.
That's quite amazing engineering, isn't it? You look at that and you think it would just go straight over, and that could be problematical. All right, team, we have one last investment opportunity for you before we go to morning tea. Did you know that 70% of the copper in the world comes from where? Oh, in the US. 70% of the copper mined in the US comes from which state? Gee, you're quiet this morning, aren't you? Arizona. Arizona is the spot. So that is where we're headed for our next presentation. New World Resources. These boys are cashed up. They're happy. They've got lots of nice little prospects in their sites. 16, I believe. You're accelerating your exploration. I know this because I saw you with Wally Graham on Resources Roadhouse, and I don't think I've seen such a happy MD for a while. Michael Haynes, would you please make him welcome, everyone?
Thanks very much, Chrissy. Thanks very much, everyone, for attending here today. as Chrissy alludes to, New World Resources has got one of the highest grade copper deposits in the world. Unlike a lot of our peers who are exploring, we are doing two things. We are taking our Antler copper project to production, but while we do so, then we are also exploring. We have applied for mine permits, but we've also got 2 rigs drilling for exploration purposes at present. A 3rd rig's on its way. All this at a great time for copper. The supply-demand outlook for copper is very, very good if you're a copper producer, and we're looking to capitalise on that. New World acquired the Antler copper project. We hold 100% interest in it. We acquired the project in March 2020, so just on 4 years ago. We set about exploring it. There is past production from the Antler copper project of about 70,000 tonnes at extremely high grades, 3% copper, 6% zinc, or about 5% copper equivalent. We were attracted by the grades, but we believed that we could find a lot more tonnes there. So in March 2020, only a week or two before COVID started unfolding around the world, we acquired the project. Pat Siglin, our exploration manager, who's here in our booth, started drilling the project, and for 3 years straight we just drilled. We drilled through COVID, and we just made the resource bigger and bigger and bigger, to the point we're in a position to commence mining the deposit. Very strongly financed. We've got $23 million cash at bank. We just completed a $20 million raise to expedite exploration, to accelerate exploration, but also to push ahead with pre-feasibility studies and mine permitting to get Antler into production as quickly as we can. Very, very strong board. Our chairman, Richard Hill, geologist and lawyer by background, heavily involved in project acquisition, project finance. Myself, I'm a geologist, geophysicist, but been operating particularly in project finance for the last 20 years in the junior sector. About 12 months ago, we recruited Nick Woolrich, a mining engineer, to come on board as COO. We're building an underground mine. Nick Woolrich, most recent job, he is a mining engineer, his most recent job was CEO of PYBAR, underground mining services business. He had 2,000 underground miners working for him, so very, very capable in building this mine. Then Tony Polglaze himself is a metallurgist and an electrical engineer. Tony has built and operated mines all his career. We are very, very strongly pushing this project to production. But while we push it to production, then we are also going to increase the resource base, because we see there's value to be derived by both those things. With respect to Antler, we acquired it 4 years ago. We were counter-cyclical. We acquired the project at a time when the copper price was just above $2 a pound. We took a view that copper price was going to increase, that it was going to be strong in the second half of this decade. We want to capitalise on high copper prices. It is not easy to bring a new copper project into production. Most copper projects are large scale, large tonnage, low grade, take an enormous amount of capital. In our case, we deliberately sought a high grade project that would be have much more modest capital requirements. With much more modest capital requirements, we can manage that capital ourselves. We can manage the timeline to production ourselves, and indeed we can be fast to production. So we deliberately sought a high grade copper deposit, and in Antler we've certainly got that. So we acquired Antler in early 2020. We commenced drilling. After 2 years, we declared a maiden resource of 7.7 million tonnes. After another 12 months of drilling, we increased the resource another 48% to 11.5 million tonnes. We've completed a mining study on that resource using a cost of $3.85, or a forecast copper price of $3.85 a pound. Today, copper price is at about $4.60 a pound. We provide extremely good leverage to the upside in the copper price, not just in our share price, but in the cash flow that can be generated from building this mine. Equally, we have enormous amount of exploration upside. At Antler itself, there are 2 past producing VMS deposits. There's Antler, which we own 100% of, and 6 kilometres away there's Copper World. Now, these VMS deposits typically occur in clusters, so where there's 2, there may well be 3. And indeed, now that we have confidence that we are building a processing plant at Antler, any additional high-grade ore that we truck to Antler can have a material impact on the finances of developing the Antler project. So over the course of the last 2 years, as we've been growing more and more confident that we will be building a processing plant at Antler, then we've assembled a sizeable exploration portfolio 75 kilometres away down at the Javelin project. There are 6 past producing VMS deposits. We now own one of them. We own the Red Cloud deposit, and where there's 6, there may well be 7, so there's huge exploration potential there too. In terms of Antler itself, we've been drilling there since March 2020. We've drilled simply underneath the historic workings. As I say, historically there was 70,000 tonnes of ore produced. It was produced from an underground mining operation. This long section here shows the historic stopes in the upper 150 metres within 150 metres of surface, illustrated in grey. The very shallow, thickest, most readily accessible ore that the old-timers could find. The most recent mining was in 1970. So we simply picked up the project and started drilling deeper and deeper and deeper under the deposit. And without exception, we've found vertically, laterally consistent, extremely high-grade mineralisation. This is not a case of we have some low-grade mineralisation with a high-grade core. We simply have a high-grade deposit. Essentially, we have high-grade or we have nothing. So we've drilled deeper and deeper. And you can see on this long section, the deepest hole that we've drilled on the project is 850 metres below the surface, and that hole intersected 21.5 metres at 5.5% copper equivalent. And that's the sort of results that we were returning as we progressively drilled deeper and deeper and deeper. We felt that we have a critical mass to mine here, so we declared a resource on this. But with respect to developing a mine, then it's very, very important and very relevant that we are in an extremely good jurisdiction. We are in the state of Arizona. We're up in northern Arizona. Arizona itself produces 70% of the US's copper production. So it is a very, very pro-mining jurisdiction. Indeed, just 50 kilometres to the west of us is a Moss mine. That is a small gold mine, but it is an open pit gold mine developed on public lands, on federal lands. They are using leach pads on federal land. They're using cyanide on federal lands. In 2020, so just 4 years ago, that mine was permitted, open pit, heap leach, cyanide, all on federal lands, which is the most complicated land type to work with. That took 18 months to permit. This is a very, very pro-mining jurisdiction. So if we have a very high-grade resource in a pro-mining jurisdiction, it should be readily amenable to development. So we've declared a resource. Our updated resource, which is about 12 months old, is 11.5 million tonnes, 2% copper and 5% zinc, or 4.1% copper equivalent on a metallurgically recovered basis. 79% of that is indicated, very, very high confidence in this resource base. But indeed, if we go to a 2% copper equivalent cutoff, and so that's eliminating all mineralisation lower grade than 2%, which most people would be happy to have 2% material. But if we eliminate all mineralisation lower grade than 2% copper equivalent, we still have 10 million tonnes at 4.5% copper equivalent. This is an extremely high grade, extremely robust, laterally, vertically continuous high grade deposit. Very high confidence in it, 79% indicated. So we're looking to mine this, and we're looking to mine this in the most sustainably taking the most sustainable approaches possible, minimising surface disturbance. We could have a starter open pit. Deliberately, we've ruled that out. Deliberately, we are going to mine underground only. That helps minimise disturbance. It also helps expedite mine permitting. We are going to be developing this mine with a single decline. That helps us minimise capex. We'll be mining down to 850 metres below surface, and of that resource that we've declared, 93% of that resource is captured by the mine plan. That sees us mine sustainably at a rate of about 1.2, 1.3 million tonnes per annum for an initial 13-year mine life. I reiterate, mineralisation remains open at depth, remains open at along strike. The capex is very modest. That means that we can fast-track this to production. The capex estimate is about $250 million US. Most copper mines are going to require billions of dollars of capital, and to deploy billions of dollars of capital takes a lot of time. We anticipate construction of the processing plant to take 12 to 15 months, and during that course We will be developing the decline so that we will have a stockpile of ore at surface once a processing plant is built, and we will be in production. Very fast to production. Because of the high grades, it's very high margin material. Just this starter operation, this 13-year initial mine life, generates $3 billion of revenue. This is using $3.85 a pound copper, or $8,500 a tonne. Copper price is almost 20% higher than that today. So at $3.85 a pound, we generate over 4 billion Aussie dollars of revenue, half of which is free cash flow. So after pre-production capital and after sustaining capital, we still generate $1.5 billion of free cash. And if we look at the economics on that, very, very good IRR and very, very robust NPV if we discount it, in this case, discounted at 7%. And then, what's more, it provides excellent leverage to the copper price. At $3.85 a pound, we generate $150 million of free cash each year from the project. But at spot prices, that free cash goes up to $200 million, over 300 million Aussie dollars a year free cash. That's for a company that currently has a market cap of 100 million Aussie dollars. This is in Arizona, one of the best mining jurisdictions in the world. So we are pushing Antler to production, but there's two past producing deposits in the Antler district, and where there's two, there's often three. We've only to date drilled 700 metres of strike at the Antler deposit. So there's Antler and there's Copper World. And indeed, 75 kilometres away, there's 6 past producing VMS deposits, very high grades. These are all running 3.5% copper, 7% zinc, up to 12% zinc. Ore of that nature is worth $400 to $500 a tonne. So if we can discover some additional tonnage at any of these projects, then that can readily be trucked to the processing plant at Antler to either see us expand our production profile or extend our mine life. So we've got a concerted approach, build Antler and make our resource base bigger. I reiterate, 100% of our drilling up until 2 months ago was within 700 metres of strike at the Antler deposit alone. We currently have 2 rigs drilling, one at Antler, one at Javelin, and we have a 3rd rig on the way. We have 16 very high priority exploration targets. We have 11 at the Antler project. We have very, very strong geophysical anomalies. We can see on the left here, very, very strong magnetic anomalies. The Antler deposit itself has a strong magnetic anomaly, and we have multiple targets that have very, very strong lookalike mag anomalies. The Antler deposit itself has very strong IP anomaly, and we have multiple targets that have very, very strong IP anomalies. These are completely untested. We commenced drill testing these 11 targets in March this year. We have over 7 kilometres of strike of very strong soil geochemistry anomalism. That's just at Antler alone. Then if we flick across to Javelin, 75 kilometres away, then we have another 5 very high priority exploration targets. We have extremely strong rock chip mineralisation at surface with all affinities of VMS mineralisation. There are 6 past producers here. We have very strong soil geochemistry, very strong IP anomalies, and we commenced drilling in this Javelin area in January this year. So 2 rigs drilling, 3rd one on the way. Assays are going to be returned throughout this year. We've got a PFS due for completion in June this year, and that will lead immediately into definitive feasibility study, and through the remainder of this calendar year and into next, then we will complete the mine permitting process. We have applied for our longest lead time mine permit application, which is the federal mine permit process. We expect that to take 18 to 24 months. Through that period, we'll also obtain all requisite state permits, which will take 15 months or less. So towards the end of 2025, we will be fully permitted, highly likely we will have a much larger resource base. We will have completed a definitive feasibility study, and we will be building one of the world's next copper projects. Just to finish, just to highlight the value of these high-grade deposits, I want to refer to you to several of our peers. Now, admittedly, these are both gold projects, both at slightly different stage of evolution. Bellevue Gold has just declared commercial production. Bellevue has 10 million tonnes at 10 grams per tonne gold for 3 million ounces. commercial production, but they've got a 2.1 billion market cap. Spartan Resources, which I think has another one of the world's exciting high-grade development propositions, they have 5 million tonnes at 5.7 grams per tonne gold, so about 1 million ounces of high-grade gold. They have a market cap of $630 million. If we convert our resource base to gold equivalent, we have 2 million gold equivalent ounces at equivalent grade to Spartan, so 5.6 grams per tonne. We have a market cap of $100 million. Very, very undervalued. Thank you, Chrissy.
Michael Haynes, you're a very naughty boy, but a very talented MD, so we'll let you go on that one. Team, we've got a break, so 11:15, we'll ring the bell, you'll come back in. We're having a later lunch today, so 9 investment opportunities after morning tea, and they're all 15 minutes long, starting with the fabulous team at Emerson and their little prospect up in the Northern Territory. How's that? Welcome back, everyone. I turned it off so I could have private conversations with people outside, get some inside information. I wasn't successful, but nevertheless, I've got some of your fantastic opinions and ideas on who you're like. Hello, Mike. You're just sneaking in the back there, are you? Something you'd like to see from Emerson up first? Someone in particular? We should get cracking, shouldn't we? We've got 9 potential investments for you in this particular part. We're going to have a lunch at 1:30, a break, and we should be finished today about 3:50. We'll see how we go. All right, so first up on the stage is a company who's doing things a little bit differently to some of our other companies. They're progressing their projects using joint ventures. So that is a little bit different to the other mining companies. So to get us up onto speed as to why they're doing that, how we're doing that, how they're doing that, this is a new face for those of you who are regulars here at RIU. This fellow's name is Mike Dunbar. He is their MD and he's only been with them at Emerson for the last 10 months. So would you please make him very welcome, everyone?
Thanks, Chrissy, and thanks to the RIU team for the opportunity to present again. I've presented it under other guises in the past, but first time at RIU to present the Emerson story. There is a bit of a disclaimer, and I will be making some forward-looking statements, which I can actually now make, which do include some financial statements going forward as a result of work that we've done over the last 10 months on the projects. So a bit of a summary of where we'll go through and why the Emerson story is a little bit different to a lot of other stories. Firstly, very high grades. We've got high resource grades and 300,000 ounces at over 5 grams in the Tennant Creek mineral field. We also have ore reserves already defined on our projects, a modest just under 80,000 ounces at 4.7 grams, and I'll come to why that modest 80,000 ounces is of significance during the presentation. We are in the right address, for both of our main project areas in Tennant Creek in the Northern Territory and Macquarie Arc in New South Wales. We are well funded with exploration funding through joint venture projects as well as our own cash reserves as well. An very experienced board and management team and a very clear pathway to growth for the projects. And all of that partly as a result of a royalty strategy that a joint venture and royalty strategy that we've undertaken. So as I mentioned, 2 main areas of focus, Tennant Creek and New South Wales. Now, I'll spend most of the presentation talking about Tennant Creek, but being in New South Wales, I can't ignore our projects in the Macquarie Arc. We hold around 500 square kilometres in Macquarie Arc, really in 3 main areas. The Keola area to the south, which is just to the south of Cadia. The Wellington project to the north near the Boda discovery from Alkane, and the Keola firefield area to the west, very close to RIU and RIU's scandium deposit that they're aggressively progressing, as well as Rimfire, who announced recently some very high-grade scandium exploration results out to the west. But the main area of focus really has been, and will continue to be in the short to medium term, the areas up in Tennant Creek, up in the Northern Territory. So for those who don't know the area, halfway between Darwin and Alice Springs, Tennant Creek, it has been a hotbed of exploration and a pegging rush over the last five or so years. We've been there since 2007, and so we hold what we consider the best ground. And the reason we believe it's the best ground is quite simply, having been there for so long, we've managed to secure the ground where there isn't cover. A lot of the exploration activities and pegging that is undertaken by a number of the large companies, BHP, Rio, South32 and others, Newmont and others, has all been to the east of our ground, which you can see there. All of that area there is underneath the Georgina Basin and therefore undercover. Undercover exploration, as we all know, is expensive and high risk. Where our projects are, we're to the west, centred around the town of Tennant Creek, and excuse me, and the deposits either outcrop or subcrop and are far easier to explore than further to the east. So why Tennant Creek? and a little bit of history about Tennant Creek. There's been 5.5 million ounces of gold produced out of Tennant Creek over the last 100-odd years. The deposits, there is a real challenge with them, and the challenge is the size. So this is 5 of the 18 deposits just listed here, and you can see the size of the deposits. And this is in plan view, the size of these things. Geographically, they're really quite small. In cross-section, again, geographically quite small. In long section, a number of them do have depth continuity. And so why would we be wanting to explore for these deposits that are modest in size? And the answer is really very simple: grade. Historical production from these deposits: Warrego, over 1.4 million ounces of gold was produced at just under 9 grams plus copper. Noble's Knob produced at 16 grams and for over 1 million ounces. Gecko, 4% copper and gold. White Devil, 760,000 ounces at just under 15 grams. And the smallest little thing down the bottom here, the Juno deposit. You can see how small that is. 57 grams. That's the prize. Now, I'll come back to how we're exploring for these deposits that are geographically small but incredibly high in value later on in the presentation. But just keep in mind that these deposits are relatively modest in size. So our tenement package itself, we held around 1,800 square kilometres around Tennant Creek, and we've joint ventured a large portion of that area out to a partner called TCMG, a private company backed by a number of PE private equity groups, Tembo being the largest shareholder of TCMG. TCMG have already secured a processing plant, and they are approaching the development and final investment decision for the project. And the model that they're using is a hub and spoke model, whereby they have a central processing facility and truck in from these deposits to that facility. They've completed a pre-feasibility study, they've completed regulatory approvals, accommodation village has been secured, and they're in the process of finalising the financing of it, and we are hopeful that they'll be moving through to the construction in the coming months. As a result of that joint venture, TCMG are funding $10.5 million on our ground. There's around $3.8 million remaining to be spent for them to then earn their interest. As part of that exploration, there's also a mining joint venture where we get 6% gross production royalty from the projects. That's an amazingly high royalty rate. 2.5% is normal, so 6% is an amazing royalty. And I'll come to the value proposition there. There's also minimum production hurdles that they have to achieve, and if they don't achieve them, they need to pay as if they have. So I'll going through that in a little bit more detail. It provides an opportunity for us for a low-risk development and funded through to production with no exposure to costs, either operating or capital costs. We are free carried, as I mentioned, with a 6% gross production royalty. About 6 or 8 weeks ago, we announced the first reserve in the Tennant Creek mineral field for the last 20 years. As a result of achieving that reserve, and it is a modest reserve of approximately 80,000 ounces, just under 80,000 ounces. That royalty that we will receive is worth $16.5 million. So from a modest 80,000 ounces, there's substantial low-risk returns that we will receive as a result of this strategy. So the question and the takeaway on this slide really is 2 key numbers to take in mind. Around the 80,000 ounces and the $16 million. In addition to the reserves, there's additional inferred resources inside the mine plans that is not included in that royalty valuation. And the minimum production hurdles, as I mentioned earlier, is 6% of 60,000 ounces needs to be delivered in the next couple of years. If it's not delivered, they need to pay as if it has been. And at today's price, that equates to approximately $12.7 million. So a solid low-risk return coming towards Emerson. So how are we going to grow that 80,000 ounces? It really is just the start for us. The field has had an amazing history of development on relatively modest-sized resources and then grown from there. The White Devil mine, for example, started with a reserve of 40,000 tonnes at approximately 16 grams, and it went on to mine 1.7 million tonnes and 760,000 ounces of gold recovered. And you can actually know exactly the date it was closed. It was closed in 1999, and that was the lowest gold price for the last 10 years, or last 30 years. There's been a tenfold increase in the gold price since, and we're yet to evaluate the opportunity around White Devil. That's part of where we'll grow the resources going forward. In addition to that, we've also, just on Monday, announced a resource for our Golden 40 project, a high-grade resource. Excuse me. 133,000 ounces of gold in resource. A very high proportion of that is indicated, and with additional development studies that our partners are already undertaking, we expect there will be more reserves converted from that resource. And in fact, there's one zone in that deposit, 77,000 ounces, running approximately 9 grams per tonne. Now, it's conceivable with additional development studies, we can add 70 or 80,000 ounces of additional resources. Again, we get a 6% royalty on those resources, on those reserves, and that could equate to another $16 million of revenue. And it's just the start. We are continuing to explore the region. So that's part of the near mine exploration we're undertaking. So how do we find deposits that are geographically quite small? This is an air mag image, and you can see it's quite broad and very difficult to see a number of these small high-grade deposits. So we've undertaken a number of drone surveys, ultra-detailed drone surveys in the district. I'll look at the southern ones, and then I'll move to the northern one after that. And you can see what the historical magnetic images look like. Fast forward with the drone image, it's chalk and cheese in terms of detail and targeting of these magnetic units and relatively modest-sized, geographically, deposits. You can see a structural corridor running through that area, and that's one of the largest areas where there's been well over 2 million ounces of gold mined out of that area. Moving to the north, again, you can't see half of the deposits you'll see in the next slide from the air mag image. Of particular interest, I'll mention Troy and Hermitage. It looks quite different when you look at the drone magnetics. Troy stands out very clearly, as does Hermitage. Jasper Hill does as well. That's another area of interest. We're working with the traditional owners to see if we can get access to that area. That will take a little bit longer, but we're working through that. Troy is more of a high copper system, and what we've identified there, the structural corridor, what we've identified at Troy is a high copper-rich system, 63 metres at 2.5% copper. So certainly very interesting, and it needs additional drilling and additional exploration in that area. Moving to the Hermitage project, we've done a lot of this drilling, or all this drilling ourselves. We discovered it a few years ago. 119 metres at 3.3, followed up with 94 metres at 2.7 copper and 5 grams gold. So again, a traditional, relatively modest size geographically deposit, but very, very high grade and very rich. We've identified an opportunity to grow this at depth. Very briefly, I won't mention the capital structure too much, but we have got a very solid board and a capital structure and a very supportive shareholder base, which is fantastic to see. And after 17, 18 years, to only have 540 million shares on issue is a great result. That's as a result of us going down this joint venture path and royalty path rather than trying to do it all ourselves. So in summary, we are unlocking the high-grade, high-value deposits in the Tennant Creek mineral field through joint ventures. We have an emerging royalty business with a 6% gross production royalty from our mining joint venture. We've got multiple targets across the field and across New South Wales. We are well funded with $3.2 million of our own funding and $3.8 million of joint venture funds to spend in the next few years that will see us towards that first minimum production payment in early 2026. So with that, I'd like to thank everyone for your attention, and any other questions, please feel free to come to our booth, booth 81, where I'm more than happy to have more of a detailed chat. Thanks very much.
Thank you, Mr. Dunbar. Next up, a project where the value has increased by 40% since they were last here on stage in Sydney. And to boot, as we all know, the copper price is well and truly up. This gentleman is going to tell us more. He is the CEO of Coda Minerals, and occasionally he goes by the name of Christopher Stevens. You ready, Christopher?
Good morning. Thank you very much. I'm hoping Verify is working. Yes, excellent. Good morning, and thank you very much. Thanks for having me here. This is the fourth time I've been on stage now at this conference, and I always sit down sort of beforehand and start to think, okay, what are we going to talk about and what have we managed to do since the last year? And I'm very pleased to say that despite what I can only describe as absolutely horrible equity market conditions, we've achieved an enormous amount. And so over the next 10 minutes or so, I'll talk to that and I'll try and provide some detail behind the slides and to talk about the huge achievements and strides forward. Chrissy said 40% because that's what I told her. It was actually 45%, I realised, when I was fact-checking this speech. So a big improvement in the economics of the project over the last 12 months. Now, before I get into that, I'll just do a quick recap for anyone who's less familiar with the story. The Elizabeth Creek Copper Project, our 100% owned asset, is located 6 hours north of Adelaide. It's right next door to Carrapateena, just down the road from Oak Dam West, and a little bit further from Olympic Dam. So it's right in the middle of copper elephant country, one of the best places to be exploring on the planet. We've also got FMG, First Quantum Minerals, Teck, IGO, all exploring in the region as well. So it's very active, great services, great location, and very helpful government as well. Now, there's three types of mineralisation for copper occur on our tenure. Breccia-hosted copper, that was mined heavily in the 70s. The very famous IOCG, iron oxide copper gold mineralisation that this area is so well known for. And then the sedimentary copper, and it'll be the sedimentary copper that I primarily focus on for this speech, although we have quite an incredible IOCG asset as well. The only one that I'm aware of that's not in the hands of BHP right now, only major IOCG system. Sedimentary copper, of course, is account for over 50% of the world's copper production comes from sedimentary copper resources and mines. Corporately, as I said, it's been a tough equity market, tough conditions. Share price pain certainly felt, but we're starting to see the green shoots of interest come into copper. You know, I'm sure everyone else has had the same experience, which is what is the main theme of this conference, and I think copper and gold have been really the ones that come through, which is excellent. We've been listed 4 years. For a junior listed 4 years, we have just 165 million shares on issue. We have an EGM next week. After that, there'll be about $4.2 million in cash in the bank after those approvals. The board is a very strong board. I'll talk to it briefly. Keith Jones, our chair, is in the room today. He's the former chair of Deloitte Australia, an extremely experienced corporate advisor and resources exec. Robin and Paul have developed 17 projects, base metals and precious metals projects during their careers. This is a very experienced group of people. Colin Moorhead stepped off recently but hasn't left Coda. What we've done is essentially realign his duties away from the already well-covered corporate governance, more as Chief Geological Advisor on retainer to advise me more on an executive level. This is just simply an example of working smarter, not harder. Now, I was listening to the, hesitate to give them a plug, but the Money of Mine podcast a while back. There was an interesting interview with Ahmed Salim, who was talking about what makes a great exploration company. Now, I'm a fan of diarising things and writing things down and making sure that your goals are clear. And I thought I'd do a little bit of a recce against what was said on that podcast. It's a couple of things. These are not the exact categories that they used. I have sort of slightly changed them for my own purposes, but ultimately, to paraphrase, you want a quality asset. You want a team that gets stuff done, that has got a track record of getting stuff done before, and every time they come and stand here on stage, they've moved the project forwards. And good commodities that are to be capturing the right time. You can have the best commodity in the world, but if you capture the wrong market, it's still problematic. So why does that apply to Coda? Well, we have over 1 million tonnes of contained copper equivalent in resources. 92% of that is in the JORC indicated, the higher confidence category, the rest in inferred. It's very low risk. South Australia, certainly to my mind, is the best place on the planet to be developing a project. The Fraser Policy Perception Index suggests it's the third best. Has a very proactive government. We're just starting early stage approvals work at the moment, and the way they scope these and right size them, you couldn't dream of that in most jurisdictions. They're a brilliant group of people. As a team, we've taken 250,000 tonnes of contained copper equivalent, taken that to over 1 million tonnes. We've proven our exploration ability. We've also delivered viable processing and mining plans and put that all wrapped around a scoping study, which has had 2 updates since I stood here last year after the initial scoping study. The first scoping study, 570 million pre-tax MPV at $8,800 a tonne copper, $4 a pound. That has been increased to 826, a 45% increase, and that has been done without changing any of the underlying economic assumptions. So no games played, none of the usual junior stuff. We have just put in the hard work, re-optimised the mine plan, worked on more intelligent mining methods, and increased the estimated value of the project. Now, battery-grade cobalt as well, South Australia. So a few people ask me, actually, it's a very common question, why are you not looking to produce a concentrate? Well, copper-cobalt concentrates are saleable. The payabilities jump around a lot. But we're talking about spending an extra couple of $100 million in CapEx to get battery-grade cobalt sulfate in South Australia, in the midst of a massive battery boom, from currently the world's most renewable energy intensive grid. That is, to my mind, a fantastic strength of this project. The cobalt's in carolite as well. It's a wonderful, wonderful mineral. It's basically a pure copper cobalt sulfide. It floats plus 90%. It recovers through simple, easy pressure oxidation or Albion. No pyrometallurgy needed. No $500 million roasters here. And it recovers plus 95, 97% through 2 viable, commonly used processing methods. The copper cathode, a happy part of having that downstream processing, gives us the opportunity to get out of all of that difficulty with Chinese smelters, changing TCRCs, the market changing politics, you're producing 4/9 copper. This is a wonderful attribute for the project. And again, the downstream processing gives us the opportunity to process other stranded projects in South Australia, and that plant doesn't have to be at Elizabeth Creek. Once you concentrate it, you could move it down to a port. We'll certainly be looking at that in the next stage. So you've got a great base project. You have 826 million pre-tax MPV, 510 post-tax. That's pretty much the same as the peak financing requirement. That's kind of a magic ratio in our world. But what else are we doing? Well, first we focused on the underground mine optimization. Now we're focusing on recoveries. There are some wins to be had there, we believe. And then exploration, which I'll talk about briefly when I get into the Verify model part of the presentation. Beyond that, ME Deeps. Look, I know it's been a tough ride with the IOCG. I've lived it every day of my life, and we winged something really special. And in the right copper price environment, that is going to get explored. Now, the rest of this presentation, I feel bad because this is the wonderful Verify part of it where you really get to fly through everything. But this is available extensively on our website. I'm going to run through it very quickly. I'm also going to plug our podcast called the Codcast. Now, I never thought in a million years I'd be standing here talking about a podcast, but the reality is we wanted to find a way to give you more than just a 10-minute snippet on stage before Chrissy chases me off. We wanted to give you access to the company on a very carefully corporate governance assessed basis with all information in the public domain, but certainly providing some of the insight and information behind it. So you'll see on our website Verify presentations, but also the Codcast where we talk about different topics each week. 3 episodes out, several more coming. Just to run through the deposits quickly in the current mine plan. Look at these grades, 1.4% primary copper, 1.9% in MG14, 25 metres below dune sand. People say, oh, Chris, it's very deep because they remember the IOCG. This is 25 metres below dune sand, and it's nearly 2% copper equivalent. Here is the aforementioned dune sand. Windabout, our second deposit. At the moment, about half of this gets mined before Emmy Bluff, half after. In a high copper price environment, you almost certainly optimise this all together. But again, look at that. Primary copper over 1% in an open pit, or 4 open pits in this case. Optimised at 8.8, at the current spot price, you'd take a lot more of it. That increases the resources, that increases the mine life. The jewel in the crown deposit for us, according to an Oz Minerals presentation a while back, the 11th largest primary copper deposit in Australia. It's a beautiful flat-lying ore body of mineralisation, sitting underneath incredibly ESG-friendly area. 40 million tonnes at 1.9% equivalent, 1.3% primary copper. Getting a decent amount of that mineralisation right now. The resource to reserve conversion is excellent, especially for a flat-lying body of mineralisation. And again, I hear this, the flat-lying, I understand that in Australia this is unusual, but this is incredibly common globally. We've had significant inbound interest. We have been talking to many groups. We have many groups in the data room. Overseas companies really get this stuff. And you can see here a lot of operating mines around the world at much greater depths and similar grades. All of these assumptions are in the back of the pack released to the ASX. This is the mine plan. I'll flick through this very quickly. What I'd like to see from this is more mineralisation down that eastern side and possibly pushing some of this western side a little bit further back in the mine plan. It wouldn't hurt to have a few more tonnes in this project, and although the base numbers are really quite excellent as they stand, as I've said already, 826 million pre-tax MPV8 using 8.8 copper, 31% IRR, more tonnes in the mine plan would certainly, we would expect, improve that significantly. So there's a lot to play for yet to come and a lot of upside in this project. Where's that going to come from? Here you've got Emmy East, which is the teal one. That's my personal favourite target. We've got significant coincident anomalism. We talk about this a lot on the last episode of the podcast, so it's available on our website and our YouTube channel. And then this thing is open to the east, to the north, and to the south. So again, more tonnes good, but off the base of an already excellent project. You can see here some of the seismic lines that are just screaming that this thing continues. So we're looking forward to drilling that soon. Now, I'll talk very briefly to the IOCG. A few misconceptions here. Grade. We're talking 3.5%, 4% copper over meaningful thicknesses, 10, 20, 30. There's about 69 metres over 2 lodes, all well over 2.5% copper. There's an annoying amount of internal dilution here. Again, talk about this on some of our social media, but what we think's going on is we've winged the edge, probably the low pressure part of a major IOCG system. Here, since I last stood here, we've really advanced our exploration model. This red is gravity. The yellow is the Wallaroo Group sediments, where we're seeing existing copper. And I'm going to brave annotating this. Oops, he fails. Try that once more. Here is the existing copper. You can see all the way up that 2.5K by about 900 metre wide corridor. Significant areas, no drilling, and a lot of geophysics telling us where we look to be looking. This is exciting. This is worthwhile. We're not going to be spending shareholder money on this. You can see the lack of drilling here, the main interest being in this contact between the red and the yellow. But in the right copper price environment, this gets explored, which is exciting. With that, I'll thank you very much. We've got a lot. I've got 2 minutes, apparently. I saw you moving towards me, and I got nervous. I'm going to go back. I'm going to use my 2 minutes briefly. I've said it before, but don't trust anyone who stands on stage and talks for 10 minutes about their commodity price. But copper is kind of exciting, so I'm going to talk for 20 seconds. In what is still a very, very challenging macro environment, copper is scaring $10,000 a tonne. Can you imagine? That's primarily just from some supply disruptions. Can you imagine what is likely to happen when major mines come offline? And bear in mind, most of the world's copper is produced from about 12 mines. Can you imagine what's going to happen when some more of these start coming off and when battery minerals and electrification really starts cooking? This is going to be exciting, and these kind of projects are part of the supply to that. I'll summarise by saying this is a great project. We've taken it a long way. We can take it a lot further, both in terms of the next steps of funding and optimisation and capitalising on this copper price sentiment. thank you very much. I'll be around at the booth. Please see us at codaminerals.com. And as I say, we do a lot of social media, so please have a look at it. Thank you.
Well done, Chris Stevens. I know from other examples of you being up here that I didn't have to ring a bell or anything. It's very good, very timely. What are you shaking your head for down the front there? Hey? Good. You can come and talk to me afterwards in the naughty chair. Rightio, look at this fellow here. We're talking about Astron Corporation next. They have the largest zircon resource in the world. Who says that?
I do.
Greg says that.
This guy.
Let me formally introduce you to Greg. Greg is the Chief Financial Officer of Astron Corporation. Greg Bell, welcome. Please make him welcome, everyone.
Thank you very much, Chrissy. And thank you very much, ladies and gentlemen, for your attention and allowing me to present the Astron Corporation story and our strategy of becoming a world-scale critical minerals producer. The jewel in Astron Corporation's crown is the Donald Rare Earth and Mineral Sands Project, which is located in the Wimmera region of Victoria, about 300 kilometres northwest of Melbourne. The project includes a granted mining licence, MIN 5532, a retention licence, RL 2002, and the Jackson deposit, which is the RL 2003, which spans 426 square kilometres. The project also enjoys strong community and local government support. The size and scale of the Donald project opens up global opportunities for the company. The Donald project fits into our global strategy as it produces a zircon and titanium-bearing heavy mineral concentrate and a rare earth element concentrate, which includes the battery minerals neodymium, praseodymium, dysprosium and terbium. The heavy mineral concentrate will be transported to our Yingkou mineral separation plant in China, which will be then separated into final zircon products and titanium products for sale to pigment plants. The rare earth element concentrate will be sold to Energy Fuels Inc. and for their processing at their White Mesa mill in southern Utah. Energy Fuels are going to be a key strategic partner for Astron, as that we've entered into a non-binding memorandum of understanding where they will contribute $180 million of capital for a 49% interest in the project and 100% of the rare earth element concentrate offtake. The key to our strategy is the Donald project. So in terms of investment highlights, the Donald project is the fourth largest rare earth resource outside of China and the largest zircon resource in the world. We've completed a definitive feasibility study in April 2023, which indicated an NPV of $852 million with cash flows in 2026. We already have a majority of our regulatory approvals in hand and have completed extensive metallurgical test work, including a pilot plant. At this point, I've been at Astron for about 18 months, and I thought that I might just take this presentation a little bit in a different direction and tell the story of how I assessed Astron when they contacted me about this role and the things that I looked for. So in completing my due diligence on Astron, I thought about who will I be working with? What is the status of the ore body? Are there any technical or operational risks? What's the status of regulatory approvals? How do the project economics stack up? And what is the strategic value of this asset in the wider market? In terms of the people, our chairman is George Lloyd. He has 30 years of resource industry experience, including with RGC Limited, and is also the chairman of Azenco, a large project management company. Our managing director is Tiger Brown, who's a highly educated executive who grew up in the industry and effectively has mineral sands under his fingernails. Whoops, wrong button. Mark Elliott is a non-executive director of Astron, and he has 27 years of experience in ASX-listed companies, including identifying and securing mineral sands projects. And finally, Sean Chalias is our project manager who has 30 years of project management experience including with BHP, Anglo, Newcrest and Azenco. So, high calibre, highly experienced board and management team. So what does the ore body look like? So as outlined earlier, we're the fourth largest rare earth resource outside of China. Also, we have a 3-to-1 monazite to xenotime ratio. This gives us an attractive rare earth assemblage to the higher ratio of a heavy rare earths, dysprosium and terbium, which tend to be scarcer and are key components for electric vehicles, offshore wind and broader decarbonisation of the economy. From a mineral sands perspective, the largest zircon resource in the world, which contains 22.1 million tonnes of zircon, which is enough to meet global demand for nearly 20 years. Finally, the mineral resource that I've been talking about is classified, 75% of it is classified as measured. So at this point, so far, so good. High quality management team, world-class ore body. In April 2023, we released our definitive feasibility study for Phase 1. Due to the size and scale of our resource, we've decided to do a phased construction plan. So Phase 1 of our project will incorporate 7.5 million tonnes of ore to produce 8,000 tonnes of rare earth element concentrate and 250,000 tonnes of HMC, while only accessing 17% of the mineral resource, for a mine life of 41.5 years. Phase 2, for which we released a pre-feasibility study in June 2023, involves a duplication of throughput to 15 million tonnes to produce 13,000 tonnes of rare earth concentrate and around about 480,000 tonnes of HMC. And the mine life is extended to 58 years. From a flow sheet perspective, we're using conventional truck and excavator mining, a mining unit plant pumping to a wet concentrator plant and to a concentrate upgrade plant to produce HMC and REEC. It's done globally in nearly all mineral sands projects. Finally, the location of the project being in Victoria is very close to infrastructure such as roads, rail and power. So we're able to use the existing infrastructure and we do not have to spend a lot of capital on upgrading that infrastructure. Further metallurgical testing and de-risking that has been completed includes a pilot plant that we did in 2019 where we processed 1,000 tonnes of ore from the ore body using MG12 spirals developed by Mineral Technologies, which are in commercial use at 15 projects globally and a proven ability to recover fine-grained minerals. So speaking about the definitive feasibility study from April 2023, we have robust and compelling financial metrics. Average revenue per year for Phase 1 is $314.4 million on CapEx of $364.7 million to provide an NPV, post-tax NPV of 852 and a post-tax IRR of 25.8. Since the definitive feasibility study, we've been progressing our work towards a final investment decision. This work indicates that our capital expenditure and our operating expenditure are trending sideways. However, rare earth revenue has gone down, considering the price of rare earth has gone down since the definitive feasibility study was issued. Conversely, HMC revenue has increased due to the strength of the zircon price in recent months. From an approvals perspective, we have a majority of our regulatory approvals in hand. So we have a positively assessed environmental effects statement, a federal EPBC licence, a granted mining licence, an agreed cultural heritage management plan, and we have 6.97 gigalitres of water rights, which is sufficient for both Phase 1 and Phase 2 operations. The key approval requirement is the Victorian Work Plan, which was submitted in October of 2023. We've received formal feedback from the Victorian Government in April in relation to the requirements for the work plan, and resubmission to their responses is imminent, and we would expect final approval in the coming months. Secondary permits for off-site infrastructure such as road, power, etc. will be completed in the coming months leading up to the final investment decision. So, what's the strategic value of the Donald project? We entered into a non-binding memorandum of understanding with Energy Fuels in December of 2023. Energy Fuels will be providing us with $180 million in capital funding towards the project, along with $17.5 million of their shares in exchange for 49% of the Donald deposit, which includes MIN 5532 and RL 2002. As part of the joint venture, Energy Fuels will take 100% of the rare earth element concentrate at market prices for both Phase 1 and Phase 2. Crucially, Astron retains majority ownership of the project and will act as the manager of the project throughout construction and operations. From a rationale perspective, the joint venture with Energy Fuels covered three main topics: was establishing a Western rare earths value chain, aligning our project with the critical mineral strategy, and progressing the project with a viable pathway to Phase 1 commissioning and cash flow. So, after my due diligence, where did that leave me? Well, obviously in the job, because I wouldn't be standing up here. However, experienced team to deliver the project. We have one of the world's largest mineral sands and rare earth resources with 2.6 billion tonnes at 4.8%, able to support mine life for at least 58 years, while only accessing 43% of that resource. We've done extensive metallurgical and other technical testing, which has de-risked it. We've completed a definitive feasibility study. We have major approvals in hand, including our environmental effects statement, EPBC licence, water rights. The dual revenue streams of mineral sands and rare earths underpin our attractive project economics, and there's clear strategic value in our asset, as shown by the joint venture with Energy Fuels and defined milestones towards production. So after all that, what's the timeline look like? So as I outlined, the work plan is the first cab off the rank. So we're hoping that it will be done in the coming months, and then we'll enter into some debt financing negotiations, hopefully in Q3, which will lead us to a final investment decision in Q4. Following the final investment decision, it'll be a 21-month construction period into commissioning in the middle of 2026, with first production shortly thereafter. Following the successful commissioning of Phase 1, planning for Phase 2 will commence immediately with a view to commencing Phase 2 operations in 2030. So I'm a bit early, but thank you for your time today. If you've got any detailed questions, I'm in booth 22, and thank you for your time.
Greg, you didn't have anything else you wanted to add there, did you? Because I've cut you off as well with 2 minutes. You had 2 minutes? Yeah, that's okay. Just double checking. I'd hate to do that too. So go and have a chat to the big fella and find out a little bit more if you can. A reminder to our other presenters in the world, but most of you should be well trained by now. I'll ring the bell at 2 minutes. I'll stand up at 1 minute, and you don't want me standing next to you because I'll ruin the photograph of you with the ASX. All right, where are we going? Do you know that in 1867 a fellow called, what was his name? Was it William Henry that was around Cloncurry? He went around Cloncurry, he was looking for grazing land, and instead of vast grazing land, he found vast reserves of copper. So that is where these guys are. They're around Cloncurry. In 2024, AIC mines are in the thick of it in this district, and this fellow here is their Managing Director, Aaron Colleran. How are you today, sir? Excited?
Thanks, Chrissy. Let's get into it. It's a great time to be a copper miner. The copper market has finally come alive exactly as we've been expecting. We know that the world needs more copper over the next 20 years, more than the industry is currently producing and more than the industry is forecast to produce. There was only one direction that the copper price could go. A copper price starting with a 3 in terms of US dollars per pound is something that we are about to consign to the annals of history. We'll soon be talking about US $5 a pound like we used to talk about US $4 a pound. AIC Mines is perfectly positioned for this. Let me start with the elevator pitch. AIC Mines is a great investment proposition. It has all the ingredients for success. A heavily invested board with a track record of success. A heavily invested, highly experienced and motivated executive team. A cash flow producing asset. A growth asset in Australia and highly leveraged to the copper price. Now let's go through this in a bit more detail. We're a growth-oriented Australian copper mining company. A growth company needs more than just a vision statement, though. It needs a board and management team who understand growth and who have delivered growth before. To be entrepreneurial, nimble and agile, you need the right people. We have them. We have a board with the right skills and experience for a growth company. Directors who have built mines and built companies before, Centamin, Barminco. They have a great depth of experience in the mining sector and also in equity capital markets. That's important. They are exactly the sort of directors that you want guiding a junior mining company as it grows. We have a young and highly motivated executive management team who want to grow their careers and grow their reputations on the back of successfully building a new Australian mid-tier copper and gold mining company. The management team have previously worked for the likes of Evolution Mining, myself, Oz Minerals, Teck Corporation and Rio Tinto. So we've learnt from some of the best in the industry. We know what good looks like. We've been involved in success before and we're aiming to replicate that success at AIC Mines. Our major shareholders are Peter Bartlett, the founder of Barminco, who vended in the Eloise asset, and Joseph Alraghi, our chairman, who is well known in global capital markets for leading Centamin Limited through the successful development of the magnificent Sukari gold mine in Egypt. Between them, they hold roughly 25% of the company. Thereafter, Australian institutions own about 30% of the company. Our foundational asset is the Eloise mine. We acquired it in November 2021. It is a high-grade underground mine located 60 kilometres southeast of Cloncurry. Eloise was a stepping stone transaction for us. We knew it wasn't a cornerstone asset for a mid-tier mining company when we acquired it, but the path to cornerstone status was clear when we first did our due diligence, and that's why we acquired it. We have transformed Eloise from a hand-to-mouth operation that was due to close in 2023 to a great little project that is now producing free cash flow, has a 4-year reserve life and a 10-year resource life, and importantly, a big future ahead of it as we develop the nearby Jericho deposit and expand the Eloise processing facility. Since we acquired Eloise in November 2021, we've increased resources by 136% and reserves by 92%. We've had great exploration success. We discovered the high-grade Lens 6 deposit. There wasn't a single hole into the area when we acquired Eloise. The Lens 6 resource is now 1.2 million tonnes, grading 3.1% copper and 0.8 grams per tonne gold. We're mining there now. We've added the Jericho deposit and 2,000 square kilometres of exploration tenements immediately surrounding Eloise. We now effectively own the whole field. We own, in my view, sufficient prospectivity to underwrite a 20-year project life at Eloise. And we have recapitalised the asset, significantly improving operational reliability. We commissioned a new tailings dam in May last year. We've completed rebuilds across the entire trucking fleet and replaced most of the ancillary mining equipment. We've also invested in resource drilling and underground development to bring new ore sources online in the upper levels of the mine. Add in Lens 6 and we now have good operational flexibility, which is the key to delivering operational reliability. The platform is now solid. Eloise is a great little mine. Since we completed the recapitalisation in FY23, we've delivered on guidance for 3 quarters in a row. Eloise is producing cash as well as copper, positive free cash flow. It has produced positive cash flow every quarter this financial year. We are on track to exceed our full-year production target of 12,500 tonnes copper and 5,000 ounces of gold at an all-in sustaining cost of $5 a pound, all-in cost of $5.20 a pound. It's worth highlighting our leverage to the copper price. I'm just going to do some maths for you, so just focus for a minute, bear with me. Our all-in cost target is Aussie $5.20 per pound. That's not that's AIC, all-in cost, not C1, which converts to approximately Aussie $11,470 per tonne. For most of the past 12 months, copper has been trading at Aussie $12,500 a tonne, delivering us a $1,000 margin, and $1,000 per tonne AIC margin. This equates to net mine cash flow of $12.5 million. You can do that maths. 12,500 tonnes of copper per annum times 1,000, $12.5 million. The copper price is currently $14,800 a tonne. I'm glad it is actually currently that, as I wrote this last night. So our margin today is $3,330 per tonne, more than tripling our AIC margin and increasing net mine cash flow to $41.6 million per annum. 12 months ago, when I presented at this conference, the AIC mine share price was 37 cents. Today it's around 48 cents, up 30%. That's a good return. Congratulations to those who bought last year, thank you. But our all-in cost margin is up 220% compared to where we were a year ago. So our share price clearly has a lot of catching up to do. Annual cash flow of $41.6 million now means we are no longer choosing between regional exploration, near mine exploration, capital investment, or when to commence the Jericho development. We can now do all of these things now. The next 12 months will be incredibly exciting for us as we ramp up work in all of our organic growth areas: Jericho development, near mine exploration, and regional exploration. I'll now talk to each of these three organic growth areas. Eloise is a relatively small mine. We want to lift copper production to 20,000 tonnes per annum, a 60% increase. The Jericho deposit, located only 4 kilometres south of Eloise, will deliver that growth. Development of Jericho transforms Eloise into a true cornerstone asset for AIC mines. Mining at Jericho will be lower cost than Eloise, as it is much shallower, commencing below only 50 metres of cover. Expansion of the Eloise processing plant will further reduce our operating costs through economies of scale and smarter equipment. Importantly, Jericho de-risks production by increasing our number of available ore sources. It provides us with long-term operational flexibility. It's also worth noting on this slide that the recently updated Eloise plus Jericho resources now total 22.9 million tonnes. At the 1.1 million tonne per annum planned throughput rate at the expanded Eloise processing plant, that equates to a resource life of 20 years. Jericho is transforming Eloise into a true cornerstone asset for AIC mines. We completed the acquisition of Jericho in January last year. We've moved very quickly towards development, almost as quick as I talk, because the benefits are so clear. In the past 12 months, we've released a maiden reserve and life of mine plan, completed an expansion study at Eloise, completed 16,700 metres of drilling, delivering a 59% increase in the Jericho resource and an 86% increase in the Jericho reserve. We've made a new discovery at Swagman. We've submitted the mining lease application and we're now working on the environmental permitting. Work is already underway. We've built a new office block at Eloise and have commenced construction of a new kitchen and dry mess for the expansion. Next, we'll start on the camp expansion. We're doing this out of Eloise cash flow. We are currently optimising the project and finalising debt negotiations. The recent move in the copper price has aided both of these tasks. We are optimising the project to reduce the time it will take us to reach first ore. We're also looking at ways to reduce delivery risk and operational risk. One of the major pieces of work underway at the moment is a review of the box cut and portal access plan and comparing that to direct underground access from Eloise via a 3.6 kilometre link drive. The link drive looks to be the smarter option. We currently have strong interest from both off-takers and resource lenders to fund the project. Indicative term sheets suggest that we can fully debt fund Jericho. The project is that strong. The banks are working through their due diligence now, and we have asked them to submit final term sheets by the end of June. The better copper price environment, as you would expect, is having a positive impact on our ability to fund Jericho. Jericho remains open along strike and at depth. The most exciting result from the 2023 drilling program was the discovery of the Swagman lens, located midway between Eloise and Jericho, 2 kilometres north of Jericho, 2 kilometres south of Eloise. It's a great example of the prospectivity along strike and part of the reason for our confidence in the 20-year project life. Obviously, a link drive from Eloise to Jericho would have very positive implications for any eventual development of Swagman. There's real benefit in opening up the whole 4 kilometres of strike if we do go ahead with the link drive. We hold about 2,000 square kilometres of prospective tenements surrounding Eloise. As I noted earlier, we now effectively own the whole field. We own, in my view, sufficient prospectivity to underwrite a 20-year project life at Eloise. So what we are now focused on is looking for resources of sufficient size that they would warrant further expansion at Eloise processing plant. So resources of Jericho size to lift our production to 25,000 tonnes per annum to 30,000 tonnes per annum copper. We have targets generated by high-quality geophysics to the north, south, east and west of Eloise, all of which have seen very limited drilling. The excitement, or I think the exciting thing this year, is the AMT geophysical testing that we're doing at Eloise to see if this is an applicable exploration tool for the underexplored eastern side of the tenement package, where there is conductive cover and conventional geophysical methods have been ineffective. It could be a game changer for us, potentially opening up the whole eastern field where the geology is similar to Eloise. Our aim is to create a new Australian mid-tier copper and gold mining company, a multi-mine company producing 100 to 150,000 tonnes per annum copper from mines mostly within Australia and from mines that are predominantly copper mines. We are looking for exploration projects, development projects and undercapitalised mines. We have expertise in all of these areas. We will remain disciplined. Any acquisition we make must be value accretive and must improve the average asset quality of our portfolio. To wrap up, you scared me, Chrissy, I've gone fast. We are one of the few copper mining companies listed on the ASX with a growth asset, a strong balance sheet and a board and management team with a track record of success. In the near term, we are adding value through development of Jericho and expansion at Eloise, transforming Eloise into a reliable, long-life copper mine of meaningful size. Over the long term, we'll add value as we continue to build our AIC mines through exploration, development and acquisition. We have a great team. We have a young, energised, ambitious and heavily invested team. They have very high standards and a very high work ethic. We have a great board. They have built mines and built companies before. They are heavily invested and they understand equity capital markets. They are laser focused on ensuring we build shareholder wealth. We have a great asset. Eloise is producing cash. The exploration potential remains excellent. And the development of the Jericho deposit transforms Eloise into a true cornerstone asset for us. Copper is the right place to be. Copper demand is ready to explode with no sizable near-term supply-side response. Thank you. That concludes my presentation. I'm happy to take questions at our booth or via Twitter. Thank you.
Thank you very much, Aaron. All right, let's travel to Darwin now, an easy 45 kilometres from Darwin, in fact, where you will find the target for our next company on stage at RIU, Lithium Plus Minerals. To explain more, would you please welcome their director, Simon Kidston. Simon, welcome.
Thank you very much, Chrissy. It's a pleasure to be here. There's no doubt that lithium markets have been volatile and prices in 2024 are substantially lower than they were last year. But importantly, we're seeing the commodity price stabilise. We know that medium term, the demand outlook for lithium is absolutely robust and of course underpinned by the transition to electric vehicles. It's for this reason I'm very proud to be part of Lithium Plus Minerals. I believe we have some of the best ground, we have a great team and importantly we're funded to deliver on our program. So Lithium Plus is all about high-impact lithium exploration. We're focused on delivering multiple resource discoveries in the prolific lithium field, and we surround Core Lithium's Finniss operating mine. On this map, you can see Lithium Plus tenements in red, and you can see Core Lithium's granted mining licence and exploration licences here in purple. Today, I'm going to talk about two discoveries. Firstly, I'll talk about our discovery at Ley. We've declared a maiden high-grade resource, 4.1 million tonnes at 1.43% lithium. Secondly, we've got an area just to the north, a couple of kilometres away, where we've identified numerous mineralised pegmatites that outcrop at surface. So we're very excited to get into those in this current field season. So really there's 5 things I'd like you to remember about Lithium Plus. And firstly, location is key. We are less than 45 kilometres from the Port of Darwin. That's a really, really important point. It means this asset is very close to infrastructure, and we know infrastructure is critical to deliver low-cost mining operations. The second point is that we have phenomenal geological prospectivity. We're in a high-grade field. There's multiple pegmatites, many of which are mineralised, and we can see them physically as we walk the property. Thirdly, we're well funded. Everything I'm going to tell you today is funded from current cash reserves. That means we're going to be active. That means we're going to deliver news flow. Fourth point is that we've got a board and management team with track records of success. From a technical perspective, led by Dr. Bin Guo and Dr. Bryce Healy, 2 of what I believe are the best lithium geologists globally. For my part, my background's commercial. I'm a former banker with Macquarie Bank, and I've just built, over 10 years, a $1 billion renewable energy business, which we've just sold to a major power utility. So I believe I've got the experience in terms of delivering financing for projects and getting them into production. Finally, obviously, we're providing exposure to this transition to electrification. This is a long-term trend, and it's going to drive a lot of value to anyone exposed to lithium and copper for that matter as well, in my view. So in terms of our corporate structure, the point to take away here is that it's very tight. The founders, directors and management team have between them 43% of the shares in issue. That means we've got a very strong alignment of interest with every single shareholder. We've also got a Tier 1 shareholder in the form of CATL. They hold 9% of our company. They've invested every time we've raised money, whether that be IPO or our placements. CATL, for those that don't know them, are the world's largest battery manufacturer. They provide 30% of the world's lithium batteries, and they've chosen to partner with us. I believe they understand the prospectivity of our tenements and the ability of our team to deliver meaningful volumes to their base in China. In addition to that, we were delighted to welcome what I believe to be one of Australia's leading underground miners, Bill Behemoth, who's famous in many places around this country for being the gentleman that founded and led Northern Star from $0 to $14 billion. He exited that position to found what is today one of the leading underground contractors. And we're looking forward to working collaboratively with him and Develop to collaborate on our projects here at Lithium Plus. So we've got very strong shareholders, we're heavily aligned, we're heavily invested, and we've got strong belief in the medium-term outlook for this business. Importantly, the business is funded. $7 million of cash, so everything I'm saying to you today is funded from current cash reserves. We've got a very modest market capitalisation, so that means that any news flow, any uptick in the commodity price is likely to lead to a dramatic price improvement in our market capitalisation. So I want to talk about our first discovery. This is really, really exciting for us. What we've announced over the course of last year was some phenomenally thick and high-grade drill intercepts. And just throwing some numbers out, 81 metres at 1.6% lithium. That's really, really thick and really high grade. That wasn't a fluke. We've followed it up with many, many other good results. For example, 50 metres at 1.8. These are phenomenal results. And what that means is that when you've got a deposit like this with thick intercepts and very high grade, you don't need a lot of tonnes to generate a lot of cash flow. And ultimately, we're in the business of building wealth and cash flow, and this deposit has the key ingredients we need to do that. So what have we done? We've recently published our maiden JORC resource, mineral resource estimate. It's 4.1 million tonnes at 1.4% lithium. Importantly, since we published that maiden JORC resource, we've done additional drilling and we've made additional discoveries very close by. So, for example, we had some very, very high-grade thick intercepts which were delivered just after we published this resource, and we also discovered a separate parallel lens 160 metres to the east. So I firmly believe that this resource has the strong potential not just to grow in tonnes, but hopefully maintain the grade or maybe improve the grade. So certainly very, very exciting for this deposit in terms of delivering additional value, additional tonnes in subsequent resource upgrades. So I guess in summary, in our view at least, this deposit has all the key elements to be a very profitable mine. Obviously it's high grade, it's very close to the Port of Darwin, and we believe it could be developed quickly and could make good profits at current pricing. That's important. We believe current pricing, this operation would be profitable. So for this reason, we've already commenced our preliminary economic assessment of this deposit. And it's with a strategy, for the first part at least, to ship direct shipping ore, which is effectively unprocessed rock from the site, 50 km to the port, and on a ship to China. This has a couple of key advantages. Firstly, an operation like that would be very low cost, just to ship raw rock to China. Secondly, the permitting process and the environmental impact is very, very straightforward. There'd be minimal surface disturbance, no tailings dams, and minimal surface infrastructure. So that leads to a simple approach in terms of permitting and mine construction. We're well advanced in the environmental studies. In fact, we're getting very close in terms of lodging those studies with the environmental regulator for assessment and approval. We've already got some good metallurgical results back from our partner in China. CATL, of course, not just produce batteries, but they concentrate lithium from around the world, and they've confirmed our material is suitable for their plant and is likely to have very high recoveries. So these are the key elements which has given us confidence to commence mine design, mine planning and scheduling. So people ask, well, why would you do that? The price is nowhere near as attractive today as it was last year. Well, I've got two key points to answer that. Firstly, we can make money at today's pricing. Secondly, we know the commodity price moves up and down quickly, so it makes sense to have a project fully permitted, ready to go, so that the first signs of an improving commodity price, we can push the button, start production and generate outsized cash flows for our shareholders. The second area I want to talk about is about 3 kilometres to the north. This area we call King's Landing, and we've identified here numerous pegmatites coming to surface. So just to give you a sense of the size of these, they're truly quite significant. So for example, a prospect we call Jewelers has more than 500 metres in terms of surface expression. Another one, Perseverance, 100 metres at surface. Jenny's a further 250 metres long at surface. So these are, I guess, large priority targets, outcropping at surface that we're going to start drilling this calendar year. We know at least some of these are mineralised. So for example, Perseverance, we drilled that last year, we put one hole into that, and that delivered 19 metres at almost 1.6% lithium. So with a bit of luck, we can replicate those results during the course of this year, and my hope would be to identify a second and maybe a third deposit within this portfolio in the coming field season. This map just drills into some of the work we've done to identify those targets. It's been systematic, it's been comprehensive. We've done soil sampling, we've analysed the results, we've cross-referenced that information with what we see on the ground, and that has identified literally dozens of exciting prospects to follow up on. We won't get to all of those this year, but it means, or it confirms at least, that we have the potential for multiple discoveries and deposits within this portfolio over time. Finally, the last thing I'll talk about in terms of our projects is to the south. It's near Alice Springs. And what we have here is a portfolio of tenements with historical high-grade results for both uranium and rare earths. These are just rock chip samples, so there's further work to be done on this, but some of those results are truly high grade. So, for example, 0.9 or 1% uranium and up to 4% for various rare earth elements. So these are really good grades, and it encourages us to explore the potential for uranium and rare earths near Alice Springs. So that's a sort of a third string to our bow, which will progress during the course of this calendar year. So to bring this together, what does it mean in terms of our forward work plan for 2024? Firstly, importantly, it's funded. Everything I've told you is funded. We don't need to raise capital to do this. Clearly, the focus is on ley. This is where we've got the maiden JORC resource. We're going to advance that project in terms of mine planning, permitting and approvals. I'm very keen to commence offtake discussions. We'll start with one of our major shareholders in China, CATL. They're keen, they're hungry for lithium. We'll discuss with them the potential for offtake, and I'd like to include some low-cost financing so that we can explore non-dilutive ways to get this asset into production. That's my background in terms of financing, and I'm determined to deliver it for this project. Secondly, we're going to remain focused on King's Landing. This is where we have the potential for second, maybe a third discovery of outcropping pegmatites. We're going to test them. We're going to hopefully define something interesting to follow up in the period forward. And finally, Arunta, there's some very interesting uranium and rare earths to follow up on, and we'll explore that aggressively during the course of this year. So I guess in summary, there's 5 key points I'd like to leave you with in terms of Lithium Plus. Firstly, location is key. Being less than 50 kilometres to a port is absolutely fundamental. It means we've got infrastructure. It means we've got the potential for very low-cost mine development. Secondly, we've got fantastic geological prospectivity. These are high-grade deposits. We believe we've got the potential for a number of them, and it could make for a very exciting portfolio. Thirdly, the business is funded, which means we're going to have news flow, which means that as the market continues to improve, the business is in a good position to benefit from that. Fourthly, the board has a track record of delivering value, importantly led by some very strong technical team, Dr. Bing Guo, Dr. Bryce Healy. Myself on the financial side, I believe in combination have the potential to move this project forward. Our relationship with the biggest battery manufacturer should not be understated. It's important in terms of funding, we believe. And of course, this business provides leverage to this transition to renewable energy, decarbonisation. It's unstoppable, it's happening, and we provide good exposure to that thematic. Thank you very much.
Thank you, Simon. Right, we're working with Graham Sloan, MD. Would you like to come and join us, sir? Now, you wouldn't have met Graham in this capacity before because Carly Metals, who's next on your program, are only listed in January. They've certainly quick off the mark. Their first drill program happened 3 months later, so I'd be guessing, Graham Sloan, you're going to tell us what the latest information is from said drilling program, correct?
Looking forward to it.
Would you welcome him, please, everyone? Graham Sloan, MD of Carly Metals.
Thank you very much, everyone, for joining me today, and a big thank you to Christy, Stu and the RIU team for putting on such a great conference. They do a great job every year, so well done to them. As I said, a real pleasure to be up here today. If I sound a bit scratchy, please, it's not because of the drink. I've caught this bug last night, and that's what I keep telling everyone, but I'm sure there's a few in the audience that might point to the drink. Look, as I said, a real pleasure. Carly Metals, I'll tell you a bit about that. We're a lithium-focused explorer, and who would have thought just over 3 months ago we listed on the ASX, and what a journey so far. Before I begin, just a little bit about the formation of Carly, if you like. Carly was established from the spin-out of the lithium assets from Kalamazoo Resources, an ASX-listed company, as most of you may know. and Karora Resources, a TSX-listed company. The journey started around January 23, and 5th of January 24, we listed on the ASX. Heavily oversubscribed, opened and closed in a matter of minutes or a couple of hours. We raised the full 15 million subscription amount at 25 cents, so it was a great, very successful IPO. And as I said, the amount of money we raised, 15 million, we could have raised that a number of times over. So just a disclaimer, as you all know, I urge you to read, there may be some forward-looking statements there. This is one of the most important slides in the deck, I see. It's really trying to say to you as an audience and as potential investors, what are the things that stand out to Kali that will make you invest in Kali? So I think one of the key points that we've got is we have this massive land package of just under 4,000 square kilometres. It's spread over 3 areas, the eastern goldfields and the northwest end of WA and Pilbara, and our east coast projects over there on New South Wales and Victoria. It's a massive area, and as you'll show as we go through this presentation, you'll start to understand some of why we think it's so important to you and to us. As I said, we've raised the $15 million. We're fully funded for the next 2 years. And we have some very important and strategic joint venture and partners, both pre and post IPO. Pre-IPO, we had our SQM JV. I'll speak about that a little bit more. And then post-IPO, we welcomed Mineral Resources onto the register, and they picked up 14%. And we're partly responsible, along with a lot of other investors, of taking our share price from the listing price of 25 up to around that, went as high as, I think, 89 cents. On top of that, and many other people have stood up here in front of you and said the same thing, and I'm going to echo a lot of those words. We have a great board, really top board, top executive team, been there, done that, taken projects through from exploration, development, right through to production, and then, of course, into the M&A arena. A quick snapshot of our corporate overview, if you like. We currently trade in and around 40 cents, 40 to 45 cents, market cap of around just under $60 million. 144 million shares out there, so not a lot. We have sort of just over 12 million in cash, which makes us fully funded right through for the next couple of years. And our enterprise value just under $50 million. Major shareholders, Kalamazoo with 20%, Karora with 22%, Mineral Resources 14%, and then board and management have on a fully diluted basis just under 11%. As I said, really experienced board led by Luke Reiner. Luke's a bit like the Yul Brynner of chairman, good-looking guy, been around for a long time, and certainly instrumental, and in fact a key figure in putting together all of these assets into Kali. Without Luke's drive, commitment, I don't think we'd be where we are today. Again, surrounding Luke is a very solid board, lots of experience spread right throughout that rank, including sort of some guys that have spent a lot of time in the field and in the production centre. So again, a good board, very supportive, and I look forward to working with those for a number of years. Executive team, as you've seen there, well, you'll see some of the results that come out shortly to demonstrate their capabilities. 3 major assets there. One, as I said, in the eastern goldfields, Higginsville. Other in the northwest Australia called our Pilbara project, and then obviously over on the east coast is our Lachlan Fold Belt. Higginsville, you can see there, very large area, some 1,500 square kilometres. So large that we needed to break it into sort of 8 separate areas just to make exploration that little bit more easier and more efficient to use. Surrounded by existing mines, the lithium, hard rock lithium mines, and world-class lithium mines too, by the way, and very many advanced exploration, lithium exploration plays. So a big area. You'll see up there on the top part of that left-hand slide, and I do apologise if I go up here, is our Spargos area, and then we'll talk about a Widgie-Miltha area down there. They're the focus of our first slot of drilling there, and drilling commenced on the 18th of April of this year, just over 3 months after listing. So again, a great effort. Well, I'll tell you a little bit more of detail of those as we move through the presentation. The Pilbara itself, we sit up there, right area, right location, close to Pilbara Minerals, Pilgangora operation and Wodgina mine, and the new Tabba Tabba deposit. So we're within kilometres of those. The 3 areas up there, 2 of those are subject to the SQM JV, and that's Doms Hill, the one in the middle, and down to the bottom right-hand corner is Marble Bar, both of those subject to the SQM JV. And then in the middle is Pear Creek, which we fully fund ourselves. On the right-hand side of that slide, you'll see the Lachlan Fold Belt, 2 big areas, 2,000 square kilometres, new area, new lithium province, and certainly looking forward to deliver some results from that very shortly. Bit more detail on Higginsville, if you like. As you can see there, some nice big red dots up there, or shaded areas. They're the soil anomalies. Sitting right over top of those is the rock chip samples that we've taken, grades up to 5% on the surface. Any number of outcropping pegmatites up and down throughout that whole entire Higginsville area. We, as you said, have started our drill program there at what we call Flynn Giles. That's the one in the middle up there on the right-hand side. And then to the south of that, or to the bottom of that, is the Green Flame, which both of those have been drilled. And when I say drilled, it's wide space drilling, it's reconnaissance drilling. We're there now to sort of identify what we do have, and then we'll close space that drilling at a later date. We've now moved the rig down to another area called Widgie-Miltha, which I'll flick over into a minute. On the left of that slide, you'll see that's the Parker Grub anomaly. That's another one we haven't even looked, when I say haven't looked at, we haven't drilled. We're just waiting on the final approvals for that, and then the drill rigs will move over to there. Again, what we're seeing, the rock chip samples correlate extremely well with the soil anomaly. So certainly looking forward to those results of that drilling. And same with Widgie-Miltha. As you can see there, a big anomaly, a couple of kilometres or 900 metres long, this one. Again, good correlation, soils and chips, and the drill rig's turning there as we speak. We expect the results to be late May, early June, and I for one, certainly can't wait to see what they come back with. Our third area, if you like, is Mount Henry. When I say third, it could be there's so many targets there in that Higginsville area. We're working now to prioritise the next lot of targets that we drill, and Mount Henry may well be one of them. Our second major project really is up on the land of the giants. It's a big area up there, big tonnage, good grades, and operating mines, and we're right up there. We're up there with SQM. This is the JV. SQM can earn 70% of that Doms Hill and Marble Bar by expending $12 million over 4 years. They're currently spent around 2.5 and earn 30% of those 2 projects. That's fully funded. I mean, every other dollar of that $15 million that we raised will go into, most of that will go into Higginsville, and some going over into the Lachlan Fold Belt. So again, early days up there. We're now working with SQM to put together this year's budget, and once that's finalised, we'll be up on the ground and making things happen like we have in the other projects. Our third area, if you like, is Lachlan Fold Belt. Again, this is new. No one's really gone chasing lithium over here. There's one other company in there to the south of us. This is, again, if this does come off, I'm telling you, this is going to be one of those ones that people are going to sit back and go, wow, you were first in. And quite frankly, we have to thank Kalamazoo for this. They initiated this. They did the early work, and we're hopefully going to reap the benefits of that. So early days, very exciting. With a number of outcropping LCT pegmatites, we've seen them. We're now doing some soils, we're now doing some rock chips, and those results should be out very shortly. So a number of key takeaways, if you like, for us is, as I said, it doesn't matter what project you got, whether gold, silver, lithium, copper, whatever. The three major things you need for those to deliver value, and that's they've got to be the right asset. They've got to be in the right location. That's the first tick you look for. Then you've got to have the people to understand what you've got. And then you've got to have the funds to be able to go and do the work. And once you tick all those three boxes, then you've got a good chance of being successful. Doesn't guarantee success, but it certainly gives you a good head start. We're there. We've got a number of projects. We're pushing ahead very carefully on those. The drill rigs are turning. The results are due shortly. And quite frankly, I can't wait to see where this all ends up. So thank you very much, ladies and gentlemen. I did come in a couple of minutes early. I know what Christy's like if I step over the mark. She's I said she was a nice lady, but she's quite vicious when it comes to when you sort of overstep your mark, and I'm certainly not going there. So, Christy, I'm early. Thank you very much.
They are. All right, time for a hug. Thank you. I know you don't mean it, otherwise I'd use my very pointy shoes at you. Okay. Hello. Do you remember back in 2010 in Queensland, there was a little coal and gas seam explorer called RIU Energy? Do you remember that one? Sold for a lazy $3.5 billion to Shell. One of the mild-mannered accountants in charge of that was this fellow here. And this mild-mannered accountant is now in charge of another little company, and this one is looking for helium. Now, helium is an element that is 50 times more valuable than is it natural liquefied gas. And I thought, obviously, that appeals to an accountant, yes, those sorts of numbers. It appeals to us too as potential investors. Yes. So let me formally introduce you to this gentleman. This is Sean Scott, MD, mild-mannered accountant, and he of Noble Helium. Please make him welcome.
Thanks, Christy. Day three, middle of the day. Hopefully we've not got too much presentation fatigue. We're going to talk to you, as Christy said, about helium, which is obviously quite different to most of what you've heard over the last couple of days. But hopefully I can convince you on the value proposition that exists here. I'll let you all read that. So, why helium? What's important about helium? Who's got a mobile phone? Pretty much everybody, right? So you're all helium users. You just didn't realise it. Helium's important, very, very important industrial gas, not just party balloons. It's used in MRI machines in hospitals, and I'm sure all of us, including myself, are unfortunate enough to have used an MRI machine. It's used in rocket launches. You'd be surprised to know that already in 2024, SpaceX have had 48 rocket launches. NASA a similar number, and there's a few other companies as well. Very important in that process. Specialty welding, lifting, etc. But the really big driver is what's in your mobile phone. It's that semiconductor, that chip, and it's an irreplaceable component in making that. Currently, the market size is about $5 billion US. That's the wholesale market. Predicted to grow to about $8 billion by 2030. So, plenty of scope for us to fit into that. This is probably one of the things that got me really excited and interested in getting involved in this story. As Christy was saying, the price. Right now in Queensland or in Australia, we've got a $12 gas cap for domestic gas. Helium currently sells for about 690 odd Australian dollars per MCF. And the good thing is that the costs to find and produce it are pretty much the same as they are for conventional gas. So you can imagine that gives you quite a significant amount of leverage in terms of the size of what you need to find, and the value proposition that you can deliver. Tanzania. Why Tanzania? So helium is very rare. 95% of the world's helium today is produced as a byproduct of natural gas production, and it's been found accidentally through that exploration process. So, for example, Qatar account for about 30% of the world's helium supply. It's 0.3% of the gas stream. And as it gets processed through the LNG terminals, that waste gas that comes out concentrates the helium to a point where they can then separately extract it and sell it. So you can see that there's a real need for what we're looking for here, which is not associated with hydrocarbons. So helium's curated through the radioactive decay of uraniums and thoriums in the crust. And uranium has about a 4 billion year half-life, so you need crust that's old, so you've had a chance to generate a significant inventory of helium. And so you've got the Tanzanian craton sitting right there in the middle of Tanzania, and it's basically 2 to 3 billion years old, so it's the right age, and it's generated a significant inventory of helium. But what's unique is that it's then been caught up in the East African Rift System, which extends up through Tanzania into Uganda and Kenya. And while the geologists will tell you this is an active system that's happening right now, they kind of mean over the last sort of 500 to 1 billion years, but all of that tectonic activity, upthrusting, heating, etc., has then liberated that helium inventory from that old rock, and it's been able to migrate out into the surrounding geology, which is young neogene sandstone reservoirs. And that's a pretty important component, because a lot of the helium that people have been finding recently is still locked up in that old rock, and so there's some significant issues in terms of being able to flow that commercially. Tanzania itself is a great environment to work in. In fact, I've been talking to quite a lot of people this week about all of the challenges that exist currently in Australia around permitting and environmental approvals. Not to say they don't have robust processes, they certainly do, but they're much more transparent and straightforward, and the government's certainly very welcoming. Landowners want you there. It's a great environment to work in, very safe. We've been there for about 8 years and never had any issues at all. So a great place to do business. So specifically then in respect of Noble, where are we at? We drilled 2 exploration wells at the end of last year. The very first well we drilled, pretty much on the first day of drilling, we encountered a free gas cap at the top of that structure, and that's the focus of our activity sort of going forward now. We've been doing a lot of work to try and define that, and it's about 9 kilometres by 3 or 4 kilometres. It's about a 20-metre thick column that exists there, and certainly sits within, as I said, this young neogene sandstone, very high porosity and permeability, so very high flow potential. We've been doing quite a bit of modelling work around that, and certainly can see high commercial potential there. The structure itself is completely onshore beside the lake, so very flat, easy. It's basically farmland that we're working in there, so be quite a simple development. And broadly, just to kind of give you a bit of perspective to it, if there was a BCF of recoverable helium there, which is highly likely that's the case, that's still $600 or $700 million worth of helium at the current wholesale price today. So just to, I guess, give you a little bit more detail in terms of why we want to go back and test this and why we think there's a free gas column there. Basically, as the drilling process goes on, we have a gas chromatograph that sits up at the top of the rig, and as the mud returns, we measure the helium that goes along. So that black dotted line that you can see there is basically what you would normally expect at atmospheric conditions, and then the blue spikes that you see to the right, sort of starting at about 75 metres or so, were the big helium spikes that we saw as we went down through there. And you can see that sort of continues on, and through both wells we saw lots and lots of helium evidence. Unfortunately, in the deeper sections, we didn't see the big free gas accumulation that we were hoping to see, but certainly this is a good place for us to start. And so, I guess as I was saying before, and the speaker before me outlined the same thing, there's a number of factors that are important in terms of being able to commercialise. Helium concentration, so we saw 2.5% helium, which is very high from a helium perspective. You know, in the US, the cut-off's 0.3%. Obviously, reservoir that's going to flow, and probably if I was going to make a choice, I'd rather have lower helium percentage and high flow reservoir. Easy land access, which we have here, a very supportive regulatory environment and a government that wants us to be there and are very encouraging. And we're in negotiations with an offtake partner
who are offering to fund the downstream capex, so the separation and liquefaction component of the development, and then buy the gas office, and we'll repay them the cost of that through some tolling arrangement as we sell them the gas. So all the elements exist. And while Nbalele and the gas cap is our short-term objective, and we want to monetise that, it's really just the start of the story here. So you can see our two wells that we've drilled up there on the left-hand side, and then down in the bottom right-hand corner there's an AIM-listed company called Helium One who have drilled. They're deeper down into the Karoo sections, which we haven't explored yet. 4.7% helium. There's a hot spring not far from where they're located. 6.9% helium. So we're in a prolific helium producing system. You know, this is unique. This doesn't exist in other places in the world. And we've got a whole bunch of other targets, and we're currently in the process of working up those targets to get them ready to drill down the track. And most likely we'll try and find a partner to come and help us do that in the future. So activity for the rest of this year and things to look out for. As I say, we're going to go back and test the gas cap. It's going to be a very low-cost exercise. The exploration wells were expensive, about $15 million each. Significant component of that was the testing equipment and Schlumberger services on site, which we won't need in the flow test that we're going to do now. And of course, when you're drilling in a brand new basin for the first time, you've got to go in all guns blazing with all of the equipment and everything that you need to deal with potential high pressure situations, methane, etc., etc. And now that we've drilled these two wells and have a much better understanding of the geology, we don't need that. We're contracting with a local drilling company to do this work for us. And my best estimate right at this moment is this will all be done for less than $1 million. Obviously, we're going to continue to talk to the off-takers. Hopefully, we get the data we need out of these flow tests, work with those guys so that by the end of the year, we've pulled everything together, done the engineering, they've gotten the approvals they need to get, so we can pull the trigger on starting to deliver that project. It'll take about 12 to 18 months for it to all be manufactured and get on site and be up and running. Obviously maturing those additional deeper targets that I talked about, and start to do some work on our other basins that we've got licensing on, which you can see on the map there, where there's a number of relatively straightforward, low-cost activities that we can get after there to start to enhance some of the value that exists there. I just want to touch on, we currently have a share purchase plan that's open, closes tomorrow. I guess I tried to create an opportunity for retail investors who were continually complaining to me that we raised all our money through placements and they didn't get an opportunity, so that was part of the driver for that. We didn't need the money for our appraisal work, but we did want to try and start advancing some of the other activities and adding some value on the other permits, chasing a few other things as well. So that certainly was the objective for that. But ultimately, it's nice to have, not critical to our future going forward. As I say, we've got the funding to do all the real value-adding stuff in the short term, which is the appraisal work. So in the event that's not fully taken up, we'll just curtail a few of those other activities, but obviously keep focused on the appraisal work. Like everyone else, I'm certainly proud of the team that we've got. My history with Arrow Energy, and one of the things that really attracted me to this business was the similarities that I saw from the early days at Arrow, when no one was interested in coal seam gas. It was a bit of a novelty, and we had a significant first mover advantage, similar to what we've got here with Noble, in a market that's booming. It's really crying out for this resource. And so, yeah, lots of similarities here that I see, and I just hope it doesn't take 10 years to become an overnight success like we did with Arrow. Justin has a deep history in the East African Rift System. As a founder of the business, made the first big oil discoveries for Hardman Resources in Uganda, and so he's definitely got a significant amount of expertise. Professor Garnett has just retired, fortunately for us, from the UQ Centre for Natural Gas, and he's been helping us greatly as an ex-Schlumberger Shell executive. He's got a huge amount of knowledge and has been very, very helpful. Eddie's one of our money men based in Melbourne. And Greg Columbus. Greg's really helpful, certainly in terms of the negotiations with the off-take parties and the equipment side of things, and that's really his bread and butter. And just to mention Kent Masters. So Kent's the current president and CEO of Albemarle, who's, I guess, relevant to a lot of the people that are here. They're a very big lithium company in the US, and he's an ex-Linde executive who used to work in the helium space, and he's been a big supporter and was one of the original investors in the business. And between the board members and the founders, we hold about a little bit over 30% of the company. And all of the shares that I've got and the other directors have got, we've purchased ourselves. So just to summarise, I think this is a ground floor investment opportunity into something that has the potential to be a very significant resource in a very, very important part of the industry in the world. I think we're in the right place. Tanzania is just absolutely unique geology for helium, and the evidence that we're slowly gathering is proving that. And of course, as someone else said before, ultimately it's all good to find it, but being able to turn it into money is the key thing, and we're well down that path now as well. So thanks very much.
Very interesting. Thank you very much for that. Now, many of us hear the words magic millions and we would think about the nation's greatest horse auction, correct? But if we're thinking about magic millions in terms of investing in a mineral resource that hit the magic million mark, you would have loved to have known these guys back in January, because you made that announcement back then, didn't you?
That's
Is that right, Matthew? Yeah, because we were at our conference in Fremantle, and these guys were really excited. They just hit this magical amount. So if you'd invested in them, you'd be able to buy your own horse. Let's see how things have progressed in the last few months, and if this fantastic human being, Matthew, has got something else to offer for us at Alto. Would you please make him very welcome, everyone? This is Matthew Bowles, the MD of Alto.
Awesome. Thanks, Chrissy. Hi, everyone. I thought I'd change it up. The investors, I guess, that have seen the presentation before, the sort of cover photo there, it's always nice to see a bit of visible gold. So this is some diamond core from Vanguard here, and Vanguard's one of our highest grade deposits at the moment. But yeah, just a nice little thing to have a look at. But I'm going to talk to you a little bit about Alto today and sort of what we have been doing over the last sort of 12 months, certainly from a resource growth point of view. And also, I guess we've sort of just started looking at some of the regional opportunities, which is pretty exciting. And it's a big land holding, and there's multiple targets out there, and we've really just started to have a look at those now. So I think that's going to really unlock a lot more value. So I'm going to run through that in the next few minutes. Just quickly the disclaimer. So we're an advanced gold exploration company. We've got a very, very large, dominant land position over a major greenstone belt in Western Australia. It's a fantastic spot that we're in. We're surrounded by a number of multi-million-ounce deposits and operating mines. Sandstone's had a very, very long history of mining, so there's multiple sort of historical old pits. A lot of, I guess, certainly a lot of investors have known of Sandstone for quite some time. And we've gone out there and we've grown that resource really rapidly. We've now sort of defined sort of over 1 million ounces. We've got 832,000 ounces within optimised pit shells. The key thing about that is that those optimised pit shells are at 2,500, and obviously the Aussie gold price is much higher than that at the moment. And we've really just, as I said, started to look at some of our regional opportunities, and I think that's where there's particular excitement. We can see that resource at Sandstone will continue to incrementally grow because those resources are open along strike and at depth. But that's only a small part of the entire footprint that we've been having a look at. So, yeah, there's a few regional things that are pretty quite cool. So very, very quickly on the corporate side, so our market cap's about 27 million at the moment. Our register's very, very tightly held, so our top 20 shareholders, and they haven't moved really that much over the last few years, hold about 70% of the stock. Certainly some good company there. There's a number of very well-known resource-focused funds, including Lion Selection, are on the register. So these guys have done a lot of DD on this project, and they like what they see, and they've come in and they're backing the project, they're backing the team, and they're investing. The board's a very small board. Myself, I'm on the board as the managing director. Mark Connolly is my chairman. Many of you may know Mark. Mark's got a big background in gold. Certainly, he's seen a number of projects go through both development and through corporate opportunities, so very, very deep background and good connections in the gold space. Richard Monty, my fellow director, he's a fantastic geologist, been involved in a number of discoveries as well. And we've got a small exploration team, really sort of high-impact team. They've been involved with the project since before I got there as well, so that's over 6 years. And they're supported by two key consultants, Barry Bourne and Ed Bolter. So Barry and Ed have worked for Barrick and Goldfields collectively. They've both been involved in a number of discoveries. So we've got a team that really know what big discoveries look like, and we're really sort of targeting those opportunities. So just quickly, that resource that we put out last year, it was 832,000 ounces. And the reason we put optimised pit shells around those was we're just trying to sort of demonstrate that how much of that resource, using a $2,500 gold price, is open pitable. I think this is one of the things that we're trying to differentiate, or Alto's trying to differentiate itself from a number of its peers. Those resources are really shallow. 90% of them are less than 150 metres from surface. And they're still open along strike, so we're extending them further. And as we drill below those resources, there's certainly a lot of drill hits outside of the current resource space, so we can see that will continue to grow. The other key thing is when you're looking at gold is the metallurgy. It's something we get asked, or used to get asked quite a lot. We've done test work on all of our deposits so far. We're getting up to 98% recovery. So from what we can see, our gold can be liberated through a very simple CIL process. And that's fantastic. The resources themselves sit within a 20-kilometre long corridor, and that's really where the focus has been. And the reason for that, again, is that's where the historic resources were. There's a number of historic pits. We've been drilling below those pits, growing the resource, but it's a much, much larger footprint that we have at Sandstone. So very quickly, just on where we're located. As you can see from that map there, there's a number of operating mills that surround us. We're certainly a number of Ramelius and Westgold is sort of over that $1 billion market cap, so big companies. It's a world-class area. The infrastructure is fantastic. To get to Sandstone, you can fly there. There's an airstrip, so we can fly directly there from charter flight. You can get commercial flights out to Mount Magnet. Our guys typically drive there because it's about an 8-hour drive. It's a much better drive than driving up to Kalgoorlie, much better roads. We've got two houses in the town, so the guys stay in one and the other one's used more as an office. Very small community at Sandstone. They're keen to see mining operations getting up and starting again there. So it's got all the right things that you need when you're looking to sort of develop projects. So this is an outline of the Sandstone project itself. And as I said, Sandstone's had a long history of mining. It's had mining activity since the early 1900s. There's a number of historic underground, very high-grade underground mines, and I'll speak about those, but also a number of sort of open pits, which mainly oxide pits there at the property. And there's, on top of that, there's numerous, I guess, sort of targets that we've identified. Our resources are all covered under granted mining leases, so we're de-risking the project as much as possible. And as you can see from that slide, so all those resources sit down in the southeast corner, so that's really where we've been focusing at the moment, which is what we're calling our alpha domain. And I think this is probably, out of the deck today, probably the most powerful slide, I think, that really surmises the opportunity that we see at Sandstone. So there's been a lot of history of mining. It's had mining activity since the early 1900s. There's been numerous companies that have gone through pursuing their own exploration strategy and drilling the project out. But what this image shows here, it's two images over the whole, so the outline's the whole tenement package. In the image, if you look at it on the left, that's all the multiple prospects that we have there, and all the black dots is all the drilling that's ever been done over Sandstone. And when I first got involved with Alto, a number of my colleagues sort of said, "Oh, Matty, there's not much at Sandstone. It's been done." And I guess when you look at that image and you look at all those black dots, you think, well, there's a lot of drilling there. And that's a fair assumption until you look at the image on the right, which just shows all the drilling that's deeper than 100 metres. So this is an entire greenstone belt that hasn't really been tested below 100 metres depth. And if I we need to replace that slide as well, because if I show you below 200 metres, there's almost no drilling there whatsoever. And I think that's to us is the key opportunity when you think about some of these major gold mines, and they're much, much deeper than that. And so the exploration to date, and a lot of that's been based on the gold price at the time and sort of chasing sort of shallow oxide mineralisation. So I think it's amazing that we've been able to grow shallow resources. So certainly previous explorers, there was stuff that they have missed, but the opportunity for us, we can see throughout the whole belt there is actually just chasing these things a lot deeper. So this is our alpha domain, and I'll quickly run through. So we've grown these resources very rapidly. We've now got 400,000 ounces sitting in at the Lord's Camp down at the bottom of the screen there, moving up to Vanguard, which I mentioned at the beginning. So Vanguard's grown from 50 to 150,000 ounces. We recently picked up a small prospect called Lightning. Lightning, again, is on a granted mining lease. Very similar thing. We picked that up from a prospector that has got a dozer. He goes into pushing and scraping, scrapes back the first metre, then goes metal detecting. He's recovered a lot of gold. There's a lot of workings through that area. There's a couple of RAB holes. I think the best RAB hole was 1 metre at 147 grams per tonne. It's never been drilled with RC. So the RAB drilling was very shallow, down to about sort of 20, 30 metres. Hasn't been drilled with RC. We haven't, well, the source of mineralisation at Lightning has not been discovered yet. So given that it's quite complementary to where Vanguard sits, that's pretty exciting for us. Moving up to Indomitable. Indomitable is huge. It's grown from 70,000 ounces to over 200,000 ounces. And then Bull Oak, we put a maiden resource on Bull Oak. We've drilled Bull Oak at the end of last year. We've extended that mineralisation further, so that will hopefully come into another resource update when we get around to it. And this is I guess when you look back, and you can see there that rectangle highlights where the alpha domain is. And I guess part of the frustration is Alto, as a company, we're aware that there's so many prospects and targets for us to chase. And part of the challenge has and continues to be there are multiple targets, and it's the prioritisation of those targets, which is what we're doing through our exploration quite a lot. Is we continually sort of get results back, we evaluate which prospects we're targeting, and to either grow resources or to hopefully lead to new discoveries. And the area that we've started talking about now is in our regional exploration. So we can see that there's going to be significant resource growth throughout the alpha domain, and I think certainly the teams are quite happy to now start spending a little bit more time looking at some of those regional opportunities which may lead to further new discoveries. And this is one of those, I guess, early stage targets we're looking at, Sandstone North. And what we're excited about with Sandstone North, it's right at the top of the property. It sits between two major shear zones. There's a soil anomaly that's over a major north-south structure. To the south, about 1 kilometre there, there's again some historical workings, some very high-grade drill results, which WMC did over 20 years ago. We've undertaken, initially, this was grassroots exploration at the end of last year, with sort of low-cost exploration from the regional side, 400-metre line spacing. We got an indication of some gold anomalism. We've gone back and we've infilled that with 40 by 40 metre soils. We've now drilled this 40 by 40 soils, identified a major, what we consider a really interesting gold target. Correlates with key pathfinders, and there's a big arsenic anomaly there as well, sitting over that north-south structure. So definitely worth drilling. So we've taken that out there. We've drilled 3,000 metres of air core. Those results are currently pending. And what we're looking at with the air core is really just some gold anomalism a little bit further down, sort of 20 to 30 metres down, that indicates that there's gold at depth. And then we're looking to go back in and follow that up with some RC. So that's pretty exciting. The results of that should be coming out soon. And it's quite good just as from that regional side, and the north-south structure is certainly relevant to the next slide as well. So again, two of the key historic mines at Sandstone were mined in the early 1900s. They stopped mining there when the First World War broke out. Two of those mines both produced over 200,000 ounces of gold at 16 grams per tonne and over 25 grams per tonne. It's an area that we haven't really looked at to date. And I spoke to our structural guys, and we wanted to take an approach that sort of look at things differently, because there has been some drilling since then, and other companies have gone in and tested some theories. But so we took a bit of a step back. We've looked at it from a regional perspective. So on the western side, there's a major shear zone, so that's your big fluid highway that's coming through. And this image here shows all of the drilling that's been done in this area. all of the gold squares and circles is old historic working. So if you go out to sandstone, you've got to be really careful because there's lots of shafts. The old timers were sort of mining those and chasing sort of over-ounce material. So lots of shafts there. And the thing that jumped out, certainly to Ed and I when we looked at this, you've got hacks and a royer, which are these two. Thank you. Oh. So this is a royer here, and it's trending on a north-south basis. And then you've got about sort of 500 metres. We've got another reef here trending on a north-south basis. And then you look at all these gold workings, north-south, north-south, north-south. There's hardly any drilling in any of this whole area at all. And most of the drilling that is there is very, very shallow RAB drilling. So for us, that's a really exciting target we're looking at. We've got guys going out in the field to sort of do some further mapping and so forth around there and work out, for us, the best way to now attack that. So it's quite something that's sort of quite exciting. And I guess the prize that we're chasing is hopefully another one of these. So that's sort of that regional and the potential that we can see at Sandstone that hasn't really been tested yet. So I guess why Alto? I think the key thing is we've got a dominant land position over a major greenstone belt. We've got a large and growing resource, which I think more than supports our current sort of market capitalisation, and the exploration potential really is untapped. It hasn't been tested at depth. There's multiple targets there, and I think with the exploration that we're doing both within the Alpha domain and regionally, we believe will lead to further growth and potentially new discoveries. So that's it. Nail the timing. Thank you. I'm at booth 5 at the back, so if you've got any questions, please come and see me.
I felt bad and evil as described of me by Mr. Kelly because I'd eaten into your little intro there. Is there anything else that you wanted to add to anyone? Go on.
No, I think I got the timing down. I think
You're perfect at timing.
Some of my time as well.
Yeah, that's what I was saying. That's what I was saying. Yeah, yeah.
And I could talk about Alto all day, so please come over to the booth if you've got
What
any questions.
booth are you in, Matthew? Where are you located?
Booth 5.
Booth 5, so close to this.
Just over that side.
Just over that side. Right, we'll do. Thank you, sir. Thank you very much. Right, we have one final presentation before lunch in this session. Are you getting cold again? Is it getting cold again down there? So it wouldn't have happened at our Singapore conference. We would have been warm, wouldn't we? All right. Now, are you a doctor or just a normal human being? Because I've seen you, and I've never actually asked the question. I've seen you as doctor and I've seen you as just Mr. Which one?
Doctor, but I go by Mr.
You go, oh, that's more important, isn't it, as we all know. So he's an absolute specialist in his field, and his field is copper. He loves copper. So this is Alma Metals, and Fraser is the MD of Alma Metals. Their latest drilling program had some nice little takeaways for you, and I'm sure he will illuminate us more on that now. Would you please make him very welcome, everyone?
Thanks, Chrissy. Thanks, everybody, for attending my last session before lunch. I'm aware that's a great responsibility, so I will do my best to get through this in a timely manner. Here's one for the buffs. Right, so Alma Metals, we are very much an Australian-listed, Australian-focused copper company. We have two key projects. One is in the East Kimberley. That's a very early-stage project. I'll talk a little bit about that towards the end of the presentation if I've got time. But I want to spend most of the time today on the Briggs joint venture in Queensland. It's a very large outcropping porphyry copper system. We got a chance of earning a 70% interest in that from our joint venture partner. And since we got involved with the project, we've tripled the size of the resource from about 120 million tonnes to well in excess of 400 million tonnes. That contains now over 1 million tonnes of copper metal and about 28 million pounds of molybdenum. Is one of the top 10 largest undeveloped copper projects in Australia. There's certainly significant upside. I hope I can demonstrate that through some of the slides. We think there's the potential to double or triple the size of the resource yet again. The most recent drill results have confirmed that, and importantly, they've also confirmed some thick, higher grade areas that extend right from surface down to at least 200 metres. And that's give us confidence that there may well be some higher grade starter pit options for this project, which would obviously add to the economics. And we've just raised some money and we'll be back out drilling in about 3 or 4 weeks' time with a minimum 2,000 metre core drilling program, potentially more. Just very briefly about the company before I go on to talk about the project. We've got about 1.4 billion shares on issue. We've actually been listed for about 12 years. but we were previously working in Africa, and after some funding issues, getting coal projects funded in Africa, we decided to bring the company back to Australia and put copper projects in. We did that about 3 years ago and rebranded and became Alma Metals, but there's obviously a legacy number of shares there. Recently raised money, about $2.6 million in Treasury at the moment. In addition to that, we hold shares in a listed entity, Caravel Minerals. We're one of the top 5 shareholders there, which has got a very large copper project in Western Australia with a very, very similar grade tonnage profile to the Briggs project in Queensland. So it leaves us with an enterprise value on Briggs of about $7 million. And I'll leave it to you to decide whether that's undervalued or not. Major shareholders, our chairman, Alistair, owns nearly 7% of the company. PS Consulting is an individual in Sydney. He owns nearly 5% of the company. Just a little bit about the board. There's big company experience there. Both Alistair and myself have got experience with BHP and Western Mining. John Dean, our non-executive director there, is a senior executive with First Quantum. And Valentine was instrumental in the privatisation of the Zambian copper belt. So there's a lot of big company experience, there's a lot of copper experience on the board. And why are we doing copper? I think we've heard a fair bit about this over the last few days, but I guess we've heard a lot about the demand side, and we're starting to hear more and more about the issues on the supply side. And we think that's the key driver over the next 3 to 5 years, is the fact that a lot of the existing supply is starting to struggle. Grades going down. Governments are increasingly putting pressure on the fiscal side of projects, particularly in developing economies. Projects are taking much longer to permit and develop. And you can see that in the middle graph here, where we see sort of copper inventories at the moment are at a generational low. So they're the lowest they've been for almost 20 years. And if we look at it on a smaller, shorter time frame, you can see that the market's currently in deficit and is likely to be in deficit for at least the next 2 years and probably significantly longer. So we think the short, medium and long-term copper market is a fantastic one to be in, and that's why we repositioned the company 3 years ago to take advantage of that. So let's talk a bit about Briggs itself. So it's in Queensland. It is an outcropping porphyry copper molybdenum system. You can see the photograph here. We've got outcropping quartz stockwork veins full of, in this case, oxidised copper minerals and molybdenite. It is part of a belt of 250 million year intrusives, but this is the largest known occurrence within that group. We've got very good metallurgy. Our grades are low, so why do we think this can work? Well, you need good metallurgy. We think we've got that. You need the ability to mine at a high rate, so you need a large project. You don't want to be mining too much waste, so having your deposit at surface is a plus. And you want good infrastructure. And I'll show a little bit about the infrastructure in one of the subsequent slides. As I said, it is a joint venture. We can earn up to a 70% interest. We've currently got 30. We'll go to a 51% interest on completion of the next drilling program. And then we've got a clear path to go to 70% purely through expenditure in the ground. There's no money that has to go to the joint venture partner. Excellent infrastructure. This is a key for this project. The actual deposit, Briggs here, is about a 15-kilometre good quality farm tract to get to a sealed highway, which is then 60 k's to the major port and industrial hub of Gladstone. Running along that road is a railway system used for heavy haulage of coal. There's power both to the north and the south of the project. There's gas pipelines. So there's pretty much all of the infrastructure that you need to develop a major project. And Gladstone is just an incredible industrial hub. If anybody's ever been there, they'll know how impressive that is. So all of the major infrastructure that's required for a large project is already here. And the importance of that is it has the potential to significantly reduce the capital costs of such a project and also the operating costs, because your transport cost to market is significantly lower. The actual deposit is on freehold land owned by an individual, a farming family. So it's a very simple land ownership structure. So the deposit itself, outcropping porphyry copper. Because it outcrops, surface soil sampling is a very effective way of outlining the deposit. You can see our resource here is outlined in the black line. That's where the 415 million tonnes is. If we go out to the edge of the known mineralisation in outcrop that's picked up by the soil sampling and make some assumptions about depth, then we've got a very large exploration target around that resource. That exploration target itself is 2 to 3 times the size of the existing resource. So if we're able to convert the exploration target into resource, there's every likelihood that this deposit will triple in size. The geology is very simple. There's a number of porphyritic granodiorite intrusions, such as this one. They carry quite a lot of copper metal in the usual porphyry stockwork veins. That intrusive suite is hosted in volcanoclastic sediments, and the mineralisation extends at least 100 metres out into the sediments and is often higher grade around that contact zone. And then on the edges of the intrusions, and in some places at the top of the intrusions, we have these large magmatic quartz bodies which are often running in excess of 1% copper. So those are the high-grade parts of the system. When we grid up the soil geochemistry and put a bit of a sun illumination on it, it really shows the shape of the geology here, where we've got a core of our granodiorites. That's slightly lower grade mineralisation, and then that's surrounded by a halo of higher copper values in the soil sampling, and when we've drilled into those areas, we're seeing higher values in the drilling in at least the top 200 metres. So that soil sampling is a very, very effective tool in giving us a planning methodology for where our next drilling is going to go. And the program of drilling we're about to commence will start here on the southwest side of the main intrusion. This is an area that doesn't have any drilling in the top 200 to 300 metres, so there's a very high chance of getting good quality intersections here. And importantly, that will give us about an 80-metre spacing in the southern half of that intrusion. That'll allow us to convert that resource into an indicated category, and that will underpin a scoping study later this year. The drilling that we recently completed, which was around this side of the complex, we got some very pleasing results there, and I'll just show you a cross-section here through A-dash. You don't have to read the individual numbers there, but the sort of the key takeaways are both of these two holes here were drilled entirely in mineralisation from surface to 200 metres. They ended in mineralisation. Their average grade was sort of 0.29 to 0.3% copper, so higher than the current inferred resource, higher molybdenum grades than the current inferred resource, and particularly close to surface. We're seeing a number of zones here where we've got sort of 0.35% copper, and in places 0.45% copper. So we're very confident that there are going to be opportunities, if I go back to this slide, around the edges here for significantly higher grade startup opportunities that would obviously have a positive impact on project economics. We've also noticed that on the tops of some of the hills here, we're seeing between 20 and 50 metres of intense oxidation, so we do get a bit of a supergene profile. And in some of those cases, we've had up to 50 metres at 0.6, 0.7% copper. So that's something we'll be evaluating with further drilling, is whether there's an opportunity for an early heap leach operation as part of the sort of the pre-large-scale porphyry mining. And that'll be something that we'll assess, if not in the scoping study, certainly in a pre-feasibility study that we hope to get into next year. So as I said, we've got follow-up drilling that's going to commence in 3 or 4 weeks' time. I'm heading out there next week with the drillers to show them where the next drill holes are, which are these ones here on a ridge. If that part of the program is successful and we've still got enough cash left over, we'll also drill these holes here. Those are drilled into the southern porphyry target, which has not yet been properly evaluated, and that's a potential to add several tens of millions of tonnes to the overall resource. And if we just look at that all in 3D, we've just taken here all of our surface geochemistry, our underground, our drilling data, interpolated the distribution of copper, and you can sort of see this annulus of higher grades surrounding the granodiorite in the centre. So this sort of annulus around here is where we believe the higher grades are. That's what the focus of the next round of drilling is. And then we'll move down to this southern porphyry target here. So that's really what we plan to do over the next 6 to 8 months is infill drilling, extensional drilling. We'll do some met test work on that. And then we hope to kick off a scoping study in the third quarter. Ideally have that delivered by late Q4 this year, if not early next year. And I notice now I've got about 2 minutes left, which gives me a little bit of time to talk about our other project in the East Kimberley. Now, as I mentioned before, this is a much earlier stage project. It's for a different style of copper mineralisation. This is for Zambian / Central African sediment-hosted copper style of mineralisation. And the type of target we're chasing there are these much higher grade sediment-hosted copper deposits. I've put up an example there of one of the unicorns that occurs in that belt, but it's a remarkable belt of mineralisation. What we've noticed is in the East Kimberley, we have a similar style of stratigraphy. We have a similar structural setting. We're on an inverted basin margin edge, and we have a number of copper occurrences. There are 2 very discrete stratigraphic horizons, and that kind of fits the conceptual model. There's been no work done in this area since 1971. It's entirely on, almost entirely on an Aboriginal reserve. After about 18-month wait, we finally got our government permits to give us access to the reserve. We've got a cultural heritage protection agreement in place with the traditional owners, and we're hoping to get our first work programs underway there this dry season, so hopefully kicking off in June or July this year. So that's us. We've got a very large outcropping porphyry copper project in Queensland. We think we're likely to increase the size of that very significantly. We think we've got high grade areas that might lead to some very interesting starter pit options. Drilling's about to recommence on that, so we look forward to news flow with drilling results, a resource upgrade, met work, and then ultimately a scoping study either very late this year or very early next year. So I'll leave you with those thoughts. We're at booth 32 if anybody wants to drop in after lunch, to be more than happy to give you any further details. Thank you very much.
Thank you very much for that. I appreciate it. Now, don't leave the room yet if you want to be in the winning. See that tall man at the back there? Look at him racing towards the front. If you go in the opposite direction, you will be in the wrong place when he announces the winner of the silver ingot. Come on, lad. We haven't got all afternoon, you know. We've got pies to go and eat. Who wants a $600 plus silver ingot? Anyone? Now, who was out? Are you drawing it out, or have you chosen already?
Chosen already.
You've chosen.
We've identified.
Oh, you've identified. So how are we working? Oh, wait. Jump on that microphone over there. Well, Cara can give you the big microphone. Which one works better, team?
That's right. Can you hear me from here? That's fine.
Yep. Okay.
So over the last couple of days, 88 people have come along and tried to count, and it's been amazing the number of theories about how you count these. But the easiest one was I sat down during a Richmond football game and counted them, and in this bag there are 2,336 pieces of silver.
Way off, okay.
And it's interesting because there were people who started at 50,000 and worked down. But the closest to the pin was somebody who said there were 2,478, so 142 over.
That's impressive.
A guy by the name of Matt Stevens from ICA Partners.
Is Max in the room? Oh, this is good. Are we eliminating people who aren't?
Sorry? He's already celebrating. Well, you know, you had to be in the room to win it.
You had to be in the room to get it. So Max. Give him Max. Is there a Max outside the door there? Max Stevens. No, too late. No, Kerry's got to run it. You do realise it's silver, don't you? Okay. You can pop it in your headband and do it that way.
Not here, not here.
Max,
Are you going to ring the bell?
No, that's it. Bugger it. Missed out.
Okay,
No.
so a little closer to the pin was a guy, Woody Shumrin.
Woody Sherman?
Woody, we saw yesterday getting around with a red beret on his head.
Oh, yes, and Woody was often sitting over here in the stand, just taking things in, perusing.
And he's not here either.
Well, this is going well, isn't it? Okay.
Well, I'm going to keep running my finger down the list because the next is Barry Alcock, who I know is an investigator shareholder.
Oh, that's interesting. Is Barry in the room? Ah, look at him.
There you go.
Good on you, Barry. Barry's always pretty much sitting in that seat. I don't think I see you move in any session, Barry, so you were a shoo-in if it came down to it.
I'm going to tell you, this is one of the best marketing things because this is the 5th I've given away,
Yeah.
and everyone's gone to investigate a shareholder.
Oh, that's great. And our winner last year, she's just left the room. Yeah. Do you want to come up, Barry, and we'll get a picture with you? We'll get a picture with you guys up here. The team, the rest of you are now summarily excused, and we'll be back in about 45 minutes, 1:30, okay? Cheers.
You've got to be in it to win it.
Welcome back, everyone. Final session of the day. Welcome to those of you online as well. A healthy viewership we see out there. Great to have your company. How are my presenters feeling? You all good down there? Excited? That's right, you should be. These are the stayers. These are the people that are really interested in investing in your companies. I actually went and I was trying to get around and chat to some of our final presenters, and there are a couple of you that had so many people around their booths, it was absolutely almost impossible. And there's one that Kerry Stevenson said to me in particular to go and have a chat to a certain presenter, and I couldn't get near them. So that's really good. It's good there's interest like that. Obviously not yourself, sir, but nevertheless, you were in here, so that doesn't count. All right, who would like to go first? We've got 10 minutes for all of our presentations. I will ring the bell at 2 minutes. I'll stand up at 1 minute, as per usual. Paul Bennett is this good-looking fella up here. Paul Bennett is the Managing Director of Medallion Metals. Now, they're building and de-risking resources at Ravensthorpe, continuing to grow what is already a very impressive resource. Would you please make him welcome, everyone?
Thanks, Chrissy. Great intro, as always. Thanks to the organisers, the sponsors and everyone who's in attendance to hear the Medallion story. Final session, final day. We're pleased to kick it off with an opportunity that's leveraged to gold, to copper and to silver. We've been working hard to build a significant inventory of that metal down at our project at Ravensthorpe. And I'm going to talk to you today about the multiple opportunities we see to not only grow that inventory further, but also commercialise the metal that we've already got on the books. So if you buy a share in a Medallion, you become a proportional owner in a business that's got JORC-compliant resources of 1.5 million ounces of gold, 120,000 tonnes of copper and 11 million ounces of silver. That metal is contained in two distinct deposits, 10 kilometres apart. They both daylight at surface, they're both shallowly drilled, they're both open in multiple directions. Medallion has the dominant ground holding across the prospective stratigraphy for both of the deposit styles, and both of those ground holdings are significantly underexplored. The assets are in the southern goldfields. They're in a region where there's two major resource projects underway at the moment. It demonstrates that you can permit, you can build and you can operate a mine in Ravensthorpe. In terms of our flagship asset, the Ravensthorpe Gold Project, it is significantly de-risked, granted mining leases, clear from a heritage perspective. We've advanced the permits substantially. We've completed a PFS, declared ore reserves. That project today generates a net present value after tax of over $500 million at current spot prices, and it's on sale at the moment with Medallion's market cap trading somewhere around $18 million. We give investors exposure to new discovery, resource growth and development optionality, all in an environment where the $8 gold price is trading at record levels and the equity market hasn't woken up to it yet. I'll glide over this one given the time constraints, but key messages here: very strong board, very strong senior management, cash and receivables of $3.5 million to keep advancing the project forward, and the valuation is cheap relative to our peers. We're trading at $13 an ounce. That is gold only at Ravensthorpe. It's a steal given the quality of those ounces, and relative to our peers who are trading on average of somewhere between $40 and $50 an ounce. And we'll throw in the copper at Ravensthorpe and all the metal at Trilogy for free. Flagship asset, Ravensthorpe Gold Project. What's critical here are the tenements over those Annabelle volcanics, which are mapped in yellow on this plan. Those are the rocks that have hosted all of the historic production, are host to all the known prospects and the known resources. There's been 130,000 ounces of gold, about 20,000 tonnes of copper metal produced in this area over the journey. That's roughly a 60-40 split in terms of gross metal value at today's prices. So we think copper's going to have an increasingly important role to play in the Medallion story as it moves forward. We're certainly seeing that in the drilling at depth at the Cundipp Mining Centre. Now, it's at the Cundipp Mining Centre down there at the southern end of the field where the Archean dips beneath the Proterozoic and continues on to the south. That's where the bulk of the resources are hosted. This is where the majority of the activity, expenditure, drilling's taken place. Of the 54 kilometres of drilling that we've done, 49 kilometres have been there at Cundipp, growing that resource to where it stands at the moment. Now, Cundipp's going to continue to be our focus in the over the medium term, focus of the business, but just in the short term, the attention of the company and the site-based personnel has turned to the significant regional exploration opportunity. We're going to roll out four priority targets in a regional drill program in coming weeks, 2,500 metres of RC drilling, 3 Geochem targets 1, structural 1. 3 of these targets have never had any bedrock drilling in them to date. So early stage, potentially high impact, a lot more news to flow in coming weeks in relation to that. Zeroing in on Cundup itself. Now, Cundup is not your typical shear-hosted WA gold deposit. A number of differences, different chemistry, different host rocks, but in particular, it's got that significant copper credit. The most direct analogy we can think of is Silver Lake's Deflector project, specifically as it relates to mineralogy and then more generally as it relates to grade. Now, a lot of similarities between these two assets at a similar stage of life. There's quite a bit of scepticism around Deflector pre-development, but it's gone on to be a fabulous success story. It just gets better with time. That's the kind of outcome, that's the kind of performance that we're seeking to replicate here at Medallion. Now, this is a strongly mineralised, medium-grade gold-copper deposit. It occurs in multiple orientations. It's got low-grade variability. It's got low geometric variability. We think that low variability leads to a lower-risk resource estimate and then, by extension, a lower-risk mine plan. Average depth of drilling 100 metres below surface. Deepest hole into the system, 420 metres. It's open along strike and open at depth. The ounce per vertical metre profile here, 4,000, peaks at 7,100 metres below surface where the data density is at its greatest. Now, we've added ounces both along strike and at depth. If you could achieve an ounce per vertical metre profile here of 5,000 to a depth of 500 metres below surface, which is still shallow for an Archean gold lode, this area gets really interesting in terms of its scale and significance. It's a great address. It's got great potential. We think multi-million ounce potential over time with continued investment. That's the arm waving done. What have we actually got on the books? We updated the resource in February last year. It was based on 44 kilometres of new drilling. Gold now stands at 1.3 million ounces, 59,000 tonnes of copper on a combined basis. That's 1.6 million ounces on a gold equivalent basis at 2.6 grams. Well understood, 63% in the indicated category, over 3/4 of it within 150 metres of surface, so potentially available for open pit mining. Every metre we drilled added 20 ounces into that resource estimate on a gold equivalent basis, and every ounce that we added cost us $15. Now, that was a great business when we were valued at $30 an ounce. Find them for 15 and have them valued for 30. Not so much at the current valuation, and it's one of the reasons, it's not the only one, but one of them why we pulled back on the extensional drilling and sought to de-risk that metal that we've already got on the books. We did that by running a pre-feasibility study. We finished it in October. High level produces 780,000 ounces of gold and 16,000 tonnes of copper metal over a 9-year life. That's an average run rate of 92,000 ounces per annum on a gold equivalent basis. Pre-production capital $163 million, all-in sustaining costs circa $1,600 Aussie, net the byproduct credit. This demonstrates that that ore can be commercialised using industry-standard mining and processing techniques and generate attractive returns relative to the risk that we take on in a development. Additionally, that favourable cost structure, it gives us exposure to the $8 gold price, the $8 copper price. Again, the net present value after tax rises to in excess of $500 million at the current spot prices. Now, given the capital requirements of this project relative to our market cap, continuing to progress this scenario looks like a big hurdle, and we are searching every different financing option to continue to progress this scenario along to final investment decision. But while the equity market hasn't reacted and while we continue that process, we're also considering other ways that you can commercialise the metal in the ground here. Now, one of those ways is to look at the high-grade sulphide portion of the resource. If you cut the resource as a starter project, if you cut the resource above 2 grams in the fresh only, it backs out 5.6 million tonnes at 4.3 grams gold and 0.6 copper for 770,000 ounces of gold and 36,000 tonnes of copper metal. That's the highest subset, the highest value subset of the resource. It's simpler mining and simpler processing. Reduced capital up front, reduced perceived metallurgical risk because we're treating a single metallurgical domain and the best understood metallurgical domain of the project. Reduced disturbance footprint, it easily fits within our existing permit. Importantly, it creates a high-value ore stream. It'll truck, so we can consider what established infrastructure we can lever off within economic trucking distance copper becomes 20% of the revenue line on day one, and it doesn't crimp us from our growth opportunities. We can always put that oxide and transitional material through the back end of the mine plan. When the capital's repaid, the banks are out of the way, and everyone's just a little bit more relaxed about that material. So a lot more work to do here to scope this out, but we can advance this to a significant advanced level of study relatively quickly at low cost, given the work that we've done in the PFS. So the opportunities coming together at Ravensthorpe, we've grown, we've de-risked the resources, we've done the work, we've got opportunities to commercialise that material. There's a high probability that resource continues to grow, so there's confidence that that mineralised system has got longevity. It'll be up and running for a long time when it does get up and going. The near mine, the regional opportunity, potentially game-changing. We're only just scratching the surface of the mineralised opportunity at Cundup and across the Greenstones more generally. So the Ravensthorpe Gold Project, it's our focus. It'll continue to be our focus over the coming months and in the short term. Key catalysts are the regional drilling that's going to go on in coming weeks, and then we've also got more information coming from the sulphide development scenario. So that's it in a nutshell. Thank you for your time, and thank you, Chrissy.
At least your mother taught you good manners, if you know how to read the clock. Good boy. I was walking over the chocolate for you because you were going to finish on time, and then you kept going. So now that's 1 chocolate to me, -1 to the presenters. Okay, Orpheus, we're going uranium. So we're going to South Australia, where these guys are drilling at the moment. They're drilling in holes that were previously looked at by explorers. They've already been discovered. It's already there. Things were going well. If we go backwards, Fukushima came along. We know how that or what happened there. But right now, as we've heard over the last few days, uranium is on its way to some pretty significant milestones, and it needs to be considered as part of the energy transition going forward. So you guys are poised to capitalise. This is Mick Billing, excuse me, and introduce him. He's the chairman of Orpheus Uranium. Would you please make him very welcome? Thank you.
Thank you very much, and after that introduction, I'm not sure there's much else for me to say. Our story is very simple, and I will try very hard not to complicate it by spending too much time on this slide. But it is a simple one. We are going to be concentrating on drilling for uranium in jurisdictions in Australia where you can get a discovery and a resource approved to develop and produce. And that's in South Australia and the Northern Territory. Nowhere else in Australia is that opportunity available right now. That will change at some time, but that's what we have. We are also going to be drilling deposits in the first instance that have already been found. The initial discovery risk is gone away because other people have done that for us. And this is more or less the schedule. We're going to be drilling in South Australia in the Forum Project in the next few weeks. We're going to be drilling hopefully at Radium Hill around October-ish. Munduno or Munduno Woolshed, as we are now calling it, towards the end of the year, if we can, in the Northern Territory, Mount Douglas, perhaps in the dry season in 2025. So in the first instance, in South Australia, in the broader Frome embayment, we and a number of other explorers in the area are all chasing the same style of mineralisation that our friends at Heathgate at Beverley and our and Boss Energy at Honeymoon are developing, or are producing from, and doing quite well from. We all wish Boss Energy all the very best in their efforts at Honeymoon. If they do well, so will we. But we are going to be drilling on the back of work done by a bunch of others on our behalf some time ago. At the Frome Project, and our initial work is down here at Arudna. It's about 12 kilometres from Gould's Dam, and that's about a 25,000 pound resource, which I think is still growing. Mineralisation in the Namba and Air formations has already been has already been established, previous drilling. And that work was done by Arriva, a French exploration company, about 12 or 13 years ago. They spent about $11 million, which is, I don't know, $25,000 million worth in current money, I suspect, and drilling in this area. 56 holes in this area encountered uranium mineralisation above 100 ppm. Some of them around 1,500 ppm, average maybe around 400. This is not greenfields exploration we're going to be doing. We plan to be drilling there in a couple of weeks' time, and we have a hell of a leg up from the work done by Arriva back then. Why did they stop? Unfortunately, that tragedy at Fukushima in Japan drove the uranium price down the gurgler in or around 2011. They walked away. They couldn't sustain continuing in the uranium market environment as it was then. That was good for us, perhaps not so good for them at the time. A little to the south and to the east at Radium Hill South. Believe it or not, just south of the old Radium Hill mine. Again, this is on the back of previous discoveries. A company called Mega Hindmarsh, back around the same time that Arriva were drilling at Arudna, these Mega Hindmarsh were drilling here. They came up with 5 discoveries, 5 deposits, and again they walked away when the uranium market went belly up in or around or just after 2011. We have the information, the drill logs, all the data from their work, as also we do from the work done by Arriva over in their Frome project. So once again, I can almost guarantee that when we drill here later on this year, we will intersect uranium. I don't know what the grade will be. I don't know whether it'll be 2 metres thick, 2 centimetres thick, whether they're small deposits or they're monsters. But we will intersect uranium. We are extraordinarily confident of that. And that's a very good place to start from. Later on, later this year, perhaps a little next, perhaps early next, it's just a matter of you can't do everything at once, at Munderno and Woolshed. These deposits north and south of Honeymoon. Now, we all know about Honeymoon. If you don't, well, I'm very surprised. We have, particularly at Woolshed, a paleo-channel system that feeds both Honeymoon and the Jason's deposit nearby. We have some work to do. We haven't done heritage clearance. We need to do a whole bunch of other stuff, but I do suspect that we'll be drilling there, and we have some pretty exciting work to do there, at particularly at Woolshed. Up in the NT, again, a jurisdiction where you can turn a discovery into a producing uranium mine. We've got, pardon me, 4 projects, 3 of which are in application stage. So we're going to focus initially on, oops, sorry, hit the wrong button. We're going to focus initially on Mount Douglas. We won't be drilling there this year. There's some geophysics to do, co-funded by the Northern Territory Government, God bless them, and some trenching to do, and then we would expect that after the wet season finishes in early 2025, we would hope to be there with a drill rig. So that's the project story. Relatively small company, market cap, 18, 19 million, depending on where we are. Got $4.8 million in the bank, and $1.3 million in today's value of shares in a listed ASX-listed company. Small board, our incoming CEO, Clint Dubernicki, he's starting in a couple of weeks' time. He, at the moment, is a senior geologist at Heathgate's Beverley and Beverley 4-mile operation. We're looking really excited at having him come on board. And I think that's about the best of the story I can give you. Thanks so much.
All right. Thank you very much for that. It was very concise. Brendan Cummings, can you come up here, please, sir? I came looking for Brendan, couldn't find him. I got a lot of feedback though, Brendan, you'll be so pleased, from a lot of people. And one person actually took the time to text me to say, Brendan Cummins, exceptional geologist, 3 drill programs, manganese ore in the East Pilbara, Groot Island, on care and maintenance after Cyclone Megan, lots of interest in manganese, can't turn iron ore into steel without it. He's a legend. So with that introduction, over to you to tell us about the Black Canyon story. Would you please make Brendan very welcome, everyone?
Thanks, Chrissy. Good to be here again at the RIU and give investors an update about what we've been doing here at Black Canyon. We've got 9 minutes and 35 seconds to dive right into it. So we'll be talking about manganese, my pet subject, Black Canyon, where we've been and where we're going to in the future. So Black Canyon, we're a manganese developer and explorer. We're manganese focused. That's our business. That's our core business. We're not looking at any other commodities. It's all about manganese. So it's essential for alloys that go into the steel market, but also critical in the cathodes of electric vehicles and lithium-ion batteries. We're best in class. We've got the largest manganese resources in Western Australia and the second largest in Australia. And we've achieved that in about 2 years. So we've been really busy at the drill rig and defining those resources. We can produce 2 products, traditional manganese concentrate that goes into the alloying industry, but also downstream processing. That's certainly one of our ambitions to look at in the future, to produce high purity manganese sulphate. And a tier 1 location in the Pilbara, second to none. Just quickly, our corporate overview, very tight capital structure, 70 million shares on issue, well-credentialed technical board that support me as the Managing Director. I'm a geologist. We've seen swings and roundabouts with the share price. Certainly the last 12 months has been pretty tough, but thanks to Groot Island, we've seen a bit of a increase in our share price. The last 2 weeks we've seen it kick up 20%. So hopefully that's the start of good things to come. In terms of skin in the game, board and management, we hold about 11% of the company, so we are fully incentivised to make this work, and we intend to do so. So let's talk about manganese. 95% of all manganese ore that's mined essentially goes into the alloying industry. 2 billion tonne steel industry, crude steel production, most of that's in China, requires 20 million tonnes of manganese. So every tonne of steel produced requires 10 kilos of manganese. It's non-substitutable, it's irreplaceable. I think it's an enduring metal, iron ore and manganese are good mates. So they're all found together and they actually combine very well together to make steel. So one of the emerging utilisation of manganese is in the batteries as well, and we'll talk about that in future slides. So in terms of manganese pricing, the last month there's been an incredible uplift in the manganese price, and that's primarily because Groot Island, which supplies about 15% of world manganese up in the Northern Territory, had an incident, and their wharf is now unusable. So the manganese price has shot up 35%. So it's gone from about $4.20 up to $5.65, and it is increasing weekly. And that's because there's very little of this very high-grade manganese to be, in terms of where it can come from. There's Groot Island, Woody, and also Gabon with the Eramet. So world manganese production, South Africa, massive producer. They've got world-class deposits. They'll be there for another 100 years. Gabon as well. And Australia, we've been producing manganese since the 40s and 50s up at Woody and Groot Island. So in terms of where manganese, when you produce a manganese concentrate, there are a number of grade sectors that you'll sell into those markets. The biggest market I'll just point out is the 30 to 40% manganese concentrate. And that means that the smelters are designed to take 30 to 44% manganese, and they'll blend it with the higher grade material. They might blend it with some lower grade material, but the vast majority of these smelters actually take that 30 to 40% manganese. Then where does the manganese go? It goes mostly into smelters in the silico-manganese industry. And you can sort of see in the bottom pie chart there, the vast majority is silico-manganese. So what that means to Black Canyon is that our product will be 30 to 33%, so we're going to enter the largest segment of the market. And our product also has silica already built into it, so the smelters don't need to add quartz. So they can save money by not having to add quartz, and it actually makes our product a bit more desirable. So these are our assets. So in terms of manganese exploration, It's not rocket science, it's actually quite a simple process. We use satellite imagery, locate the dark areas on the maps, go and field check them and then go drill them. You can see our location there to the west of us. There are many, many iron ore mines. All the big players are there, FMG, Hancock, Rio Tinto and BHP. So the iron ore mines are to the west of us, and there's a massive amount of manganese to the east, which we've been working on. But the outcrops are sensational. As a geologist, you can just walk up to these deposits and really get a good feel for how big these might be, which has simplified the exploration technique for us greatly. And that's why we've been able to deliver a massive resource in the short space of 2 years, from zero resources when we listed the company in May 2021 to now 300 million tonnes at 10.5% manganese. Most of those resources have been found in the target we call the Balfour manganese field as well. There's still actually quite a bit more to come out of that. So 300 million tonnes in resource. We've also developed another 200 odd tonnes in exploration targets. So all up, if subject to exploration risk and further drilling, we could have a 500 million tonne here for manganese. So there's no shortage of manganese in our projects, and we're really pleased to that, that we own them. So where does that put Black Canyon in terms of manganese in Australia? So as I said previously, we are the largest in WA and second largest in Australia. And we've been busy. So, 300 million tonnes. There's really three things to remember. 300 million tonnes, 33 million tonnes contained metal. We've done it in 3 drill programs. So quite intensive, but that's the nature of manganese. It's a bulk commodity. But what do we do with all this manganese? We need to be able to make this concentrate. So we've spent a lot of our time doing R&D, ensuring that we've got a robust flow sheet. So we can upgrade this material at 10.5% in ground to 30 to 33%. And the last round of test work we did was using DMS, which is industrial scale. It's an industrial scale process. It's used widely across many iron ore mines and also manganese mines in the Pilbara. And so it was very important to the company that we could deliver upon this grade. Just as a bit of exploration upside as well, this was a discovery again by the company. We haven't drilled this one yet. We're hoping to drill it this year. It's a little bit different to our other deposits, which are shale hosted. This seems, it's an order of magnitude higher in grade. Rock chip samples we're getting here are really, 55 to 60% manganese. So it's something that's of great interest, particularly to the end users. When they see grades like that, they're quite mouth-watering. The scale of it is, 300 metres long for one of the main deposits there, and we've got scattered mineralisation over another nearly 2 kilometres to the north. So it's going to be a really exciting target. We need to do a heritage survey over that, and then we can hopefully get the rig out there and see what we're dealing with. Sort of turning our attention now to the critical minerals of manganese. So Black Canyon, really our aim is to demonstrate that we can start a mine up there in the Pilbara, and then we can also look at downstream processing. And we're looking at a number of locations across Australia because there is still a push for diversification of supply. As you can see in those pie charts, most of this happens in China, but the Europeans and the US obviously want to secure alternative supply, as do the Koreans and the Japanese. So I think that's something we can do, and we are looking at locations within Australia. We'd like to think we can actually do that here. There will be challenges, but there's challenges overseas as well. So the work we've done has demonstrated that we can produce battery-grade high-purity manganese sulphate, and there's plenty more work to be done on that. But it's finding that location, finding the right area where we might get access to renewable energy to develop a downstream facility. So really, to summarise, Black Canyon's been a growth story. We've been busy at the rig, developed very large resources. We're currently working through a scoping study on 2 of those deposits. We should have that out in about 4 weeks' time, fingers crossed. And if that's positive, then we'd really like to launch into a feasibility study on those 2 deposits as well. We're certainly not resource constrained. We've got substantial resources in the ground. We just need to be smart about how we can develop those into the future. Also talking about downstream, we'll be looking at that certainly over the next 6 to 12 months. And exploration at Wandanya, so I think that could also be a bit of a catalyst if we manage to drill some really high grades over thick intervals from that deposit. We have also been talking with multiple end users of both the manganese sulphate for the batteries, but also for the alloys as well. With the shutdown of Groote Eylandt, there's a bit of a scramble around in the smelting industry about where they're going to get their manganese from. So we hope to help out there and talk about offtakes probably next year. That's it for Black Canyon. Thank you very much for your time.
Sure. Stay there. That's it. That's all there is from you today. Nothing else. Absolutely nothing. Stand there. Everyone, are you ready? Don't let it just be me, because it would be terrible. Happy birthday to you. Happy birthday to you. Happy birthday, dear Brendan. Happy birthday to you. Hip hip, hooray! Hip hip, hooray! Hip hip, hooray! Happy birthday, old boy. Well done. Okay. I did ask to play it, but apparently we're not allowed to because of copyright. I said, please, you need an alternative to me singing it. And they said no, so that's what you got. Happy birthday. Hope you have an awesome day. Look at this fellow here. Not his birthday, but he's pretty pleased with himself because he's got a unicorn in his stable. Are you going to reveal your unicorn to us today, sir, once you figure out how to put all your bits and pieces in?
Yeah, just bear with me a second.
I've got a 16-year-old down the back. There are a 17-year-old who could probably figure it out for you.
Where's the verify plug?
Quick, someone more technically adept than either of us, come on over. All right, I will retreat back behind my desk and I'll give you a proper introduction to Andrew Patterson. So Andrew is the Managing Director of Great Boulder Resources, which is from over my way. Would you please make him very welcome, everyone?
Thanks, everyone, and thanks for the sing-along. It's actually my birthday too, so there you go. So I'm going to present the Great Boulder story today. This is an emerging gold story in Western Australia. It's a really strong story. It's a good story to tell, and we're having a lot of fun developing it. And I'm going to explain why we think it's exciting and why people should pay attention to Great Boulder. I think, you know, we're on the cusp of a real surge in gold stocks in Australia. Obviously, the gold price is very strong. Sentiment is coming back. Producers are making a lot of money. And that is starting to flow downhill into the exploration space. And when it's on, it's going to go fast. So, Great Boulder, all about Sidewell. The Sidewell Gold Project in Meekatharra is our flagship. We've been working there 3 years. We've found 2/3 of a million ounces in 2 deposits, high grade, and we've got a clear path towards 1 million ounces. We're just starting the next phase of our growth of exploration now, pushing towards 1 million ounces, which will be followed by scoping studies next year and doing all the work to push this through into development. I won't talk too much about the board and the corporate structure, but suffice to say, run by geologists. We brought in Karen O'Neill as a commercial person to keep us on the straight and narrow, and a very, very strong technical team run by Dan Doran and backed up by Dr. Scott Halley, who's pretty much a living national treasure. Key things here, corporate structure capped at $36 million. 4 mil in the bank, so 32 mil EV, and just a couple of instos on the register there being Collins Street, getting up close to 9%, and the Widup Lion Selection Group Fund at just under 2. So now this is the regional setting at Meekatharra. So this map is hopefully easy enough to see in the back seats. Westgold is in blue right down the middle, and on their eastern boundary is Great Boulder. We've got the Meeka guys to the north at Andy Well. They're pretty busy up there. Ora Gold recently came out with a very nice little high-grade resource on the west side there at Crown Prince. And to the south of us, down towards Nanine, is the Odyssey crew. So there are 4 advanced explorers in the region, and collectively we control about 2.5 million ounces. Each company is doing its own thing, and we're all at different stages. I argue that Great Boulder has the best growth story out of those 4. I'm sure the other managing directors might tell you something different, but I'm going to explain why. And this is the guts of it. So we're here in the heart of Meekatharra, and all of the Westgold operations are up the west side here. If you follow that stratigraphy around, comes down the east side of our project. We're actually drilling previously untested targets there that are the stratigraphic equivalent of the Paddy's Flat group. So that in itself is pretty exciting and unusual to have effectively a greenfields project in an area with 140 years of mining history. As I said, we've got resources defined at Mulga Bill and Ironbark already, and late last year we cleared all these new targets for testing down that eastern corridor, so that's what we're calling the Ironbark corridor, which is about 14 kilometres long. This is the tenement overview, and I'll zip through this a bit because I'm running low on time, but you can see Meekatharra in the background. That's the airport there in the middle distance. Looking north towards Mulga Bill and Mulga Bill North. Ironbark, that's 100,000 ounces there. And to the south, you can actually see Saltbush in the distance, which is our new discovery. That'll be our next resource. And this is all mineralised the whole way down past Ironbark and out to the north. It's a really, really exciting chain of exploration targets. The geology that we're piecing together, we've got a really smart young technical team who are out there on the ground doing mapping, and they've pieced all this together, and this is actually the latest addition. And the important thing here, you can see those syncline structures through the greenstone belt, and further to the south is this Pol L project that we haven't even looked at yet. So at Mulga Bill, 560,000 ounces here. This has got some extremely high grades in it, and last year for 3 or 4 months we had the highest grade gold hit in the world. So there's some extraordinary grades here at Mulga Bill. It's got a well-defined supergene blanket, some of which contains extremely high supergene enrichment mineralisation. Then beneath that we have this combination in the grey of subvertical lodes running north-south and stacked high-grade quartz veins, probably a later orogenic mobilising event, and they're dipping at about 45 degrees. The strike continuity of those is extremely good, and they appear to be plunging towards the north, so we'll be drilling them for deeper high-grade targets later on. We have a resource over that, and these are conceptual pit designs, and then if you continue to the north, that's all mineralised as well. We just haven't had the time or the drill meters up there yet to put that into resource, so that's an obvious extensional target there for Mulga Bill. Moving across though to Ironbark, we've got, as I said, 100,000 ounces there at surface. It's nice and straight, tabular ore body, sort of thing you see in the goldfields all the time. And this basically daylights, so there's no alluvial cover here, no depletion, straight into the ore. So that's a very nice asset in itself. Looking forward though, the key is what we've learned from our exploration at both those two deposits we're now applying to other targets in the area, and the importance of pathfinder minerals in the geochemistry. So this is something that we've really fine-tuned over the last 3 years. So this is a map of bismuth concentration in auger data over about 14 kilometres. And bismuth is typically a hot element. You can see there's quite a lot of it here on the edge of the granite and another rather diffuse area to the north. So these are what we style as Mulga Bill style targets, where bismuth is a very strong correlation to gold. So if we find the bismuth, we think we're on the right track to find gold. Arsenic, on the other hand, is a key pathfinder for ironbark style orogenic deposits. Saltbush here at the south end is one of our first targets. At the north end, there's quite a big area there that we've only just done the first air core holes on quite recently. So combining those together, this is again the Mulga Bill heat map. You can see there's some really nice bullseyes there to test. The ironbark assemblage heat map. Saltbush, as I said, was the first target that we drilled, and when we started drilling just before Christmas, we hit high grade there straight away on the second RC hole that we drilled. So Saltbush is a really important proof of concept in the fact that our geochemical targeting is working really well, and Saltbush will be the next resource. It's already about 300 metres long, nice and simple, looks exactly like ironbark. These sorts of things are very important because they'll not only give us more ounces in the mining profile, they will also give us flexibility of scheduling, which is a key for developing Mulga Bill itself. If you then apply that IP to the south, we actually have very similar targets down at Pol L. There's almost no drilling on this entire tenement, And interestingly, this is the Bluebird Mill just over the road, so this is a pretty strategic place to be. We don't anticipate necessarily that we'll be using the Bluebird Mill. Obviously, we would like to. That would require a conversation with Westgold, and we will be having that conversation at a later date. So as I said, the plan is to move this, continue growing. We think the best bang for our buck now is to continue growing the resource, move into scoping studies early next year, and start demonstrating the economic potential and putting the proof in the pudding for this project. So I think it's going to be very exciting next 6 months and the coming years ahead. So thank you for your time.
Thank you very much, Andrew Patterson. Platinum Resources is next up on stage. Good, I found you. So we're talking a well-cashed-up West Australian-focused gold explorer, and potentially they've got more cash on the way as well, which is very exciting. Would you please welcome their Managing Director? It's bright, isn't it, Corey? Corey Nolan, welcome.
Good afternoon, ladies and gentlemen, and welcome to the presentation. It's good to be here to give you an update on Patina. I guess a key takeaway that Chrissy's just highlighted is that we are very well cashed up to deliver all our objectives without diluting our shareholders. So Patina Resources is a gold exploration company. We're going to create shareholder value through discovery success, and we're going to do that by targeting top-tier, world-class jurisdictions for finding gold deposits. We're going to do it with people that have got a track record of delivering in Western Australia and finding projects. We're picking out projects in geological environments which we think are very conducive to finding million-ounce plus gold deposits. And as I mentioned, we're very well funded with our existing cash balance, and we've also got milestones that will come from the sale of our Scandium project last year that will keep us funded for a long period of time. So our strategy is to focus on Western Australia. We've built up a little portfolio of properties in the Ashburton and in Yilgarn-Creighton. We're targeting this area because it's a world-class opportunity for top-tier gold deposits. It's got excellent exploration and drilling capabilities available. There's world-class infrastructure. There's toll treatment options available for processing ore, and there's also immense corporate appeal if you can define resources and get them monetised by fairly established plants in the area that are pretty hungry for feed. Just to touch a little bit on the team, essentially I raise all the money for our company and Rowan goes and spends it, but Rowan's got over 15 years experience, primarily focused on the Pilbara Basin in Western Australia and in the Yilgarn-Creighton. He was part of the discovery team on the Hemi gold deposit, which has now become 11 million ounces. So we believe that he brings some excellent credibility and a track record to our company for going out and finding multi-million ounce deposits. Myself, I've been involved in the business for over 30 years, finding projects, getting them funded, putting them in listed companies. Before I joined Patina, we put together a package of lithium projects in Quebec in Canada, and Sayona Mining went on to become a very significant market capitalised company. So I guess we've both had some initial success, and we want to have another crack at doing it and proving that it wasn't a fluke the first time. So we've got 3 priority projects in our portfolio. We've got our BD project. We'll be drilling there in a few weeks. It's a gold target, but it could also have nickel and lithium potential as well. And then we've got another drill program at our Xanadu project planned in the next few months. It's a diamond drilling program targeting the deeps there. And we've recently drilled our Brimstone project. We had some pretty good success there, and we're just assessing what our options might be on how we unlock the value of that project and move it forward. So in terms of our key projects, our BD project is located just to the south of Norseman. It's a 5 million ounce gold centre. Our BD prospect is located
about 12 kilometres from the Scotia Mining Centre. It's a 1 million ounce resource at about 2 grams per tonne. And more recently, it's worth pointing out that Aruma have had some pretty good success to the south of us, drilling some gold structures down there, getting some quite narrow but very attractive gold in their system. So effectively, all we're looking to do is join the dots between those northern and southern gold tenements. So we're planning a 200 hole, nearly 10,000 metre air core drilling program here. There's a light blanket of transported sand cover across our tenement, so we've had to rely on geochemistry and geophysics to find our targets here. So the plan of our air core program is to drill down to bedrock and find anomalies that we can come back and do further RC or diamond drilling on at a later time. So only a few weeks away from kicking off that program. Our next project that we've done a couple of drilling campaigns on is our Xanadu project. It's located in the Ashburton Basin. We're situated on the Nargilgoldu Fault Zone. It's a major 470-kilometre structure. It's got the high-grade Paulsons on the northern end. It's got Mount Olympus, which is about 1.5 million ounces just to the north of us, and Karlawinda, which is a couple of million ounces. It's sort of on the fringe of the Ashburton Basin down in the southeast. It's just worth noting that De Grey Mining has structured an option with Kalamazoo to get an option to acquire that deposit for about 30 million ounces. So if we had De Grey in the area, that could give us some good options for potentially monetising resources in the future. So we've got a large tenement package here. It's over 500 square kilometres. There's been quite a lot of historical work done, primarily in the northwestern side of this package. It's historically been the focus of a small heap leach project. There was a small mine here, some heap leach pads, and we've also done some drilling on a new prospect here called Hermes, and we had some pretty good success to finding some gold up there, and we've got to do some more exploration up there later in the year. But a lot of the historical drilling that's been done by not only ourselves but other players has defined a very large gold system. It's over 10 kilometres long. It's very highly altered, and you can see that at shallow levels the oxide mineralisation is quite structurally controlled. But the thing that's always sort of been a fascination to us is, in such a large system with so much gold in it, what's the source of this mineralisation? So we're just about to kick off a diamond drilling program here. We want to drill 3 or 4 holes, targeting some magnetic and IP chargeability anomalies that we've identified through some geophysics work. So the plan here is hopefully to intersect the sulphides at depth that may be the source of all this gold in the mineralised system. So that will kick off in the next couple of months following the BD program. Our Brimstone project, 30 minutes drive from Kalgoorlie, just to the northeast. It's in close proximity to the Penny's fine gold deposit. We're only about 2.5 kilometres away from this old open pit where they extracted about 18,000 ounces at 4.5 grams. I guess the key point here is that it's a district that's got very high-grade deposits, quite small, but a lot of potential. We've got a very large tenement package here, and we've started drilling the northern part of that tenement package, and we had some good success there last year. We got some good intersections, like 36 metres at nearly 2 grams. There's some other historical intersections there at 55 metres going over 2 grams. So it's quite an attractive area for finding nice little high-grade gold deposits. We're in close proximity to Kalgoorlie, so it's possible to get that ore toll treated in the Kalgoorlie district. So we'll be looking to unlock the value of that over the next 6 months. Just sort of wrapping up a little bit here, I just wanted to re-emphasise our enterprise value proposition. So we're currently just shy of a 14 million market cap. We've got $8 million in the bank, giving us about an enterprise value of about $5 million. But if you were to factor in the future milestone payments we have payable from our scandium project and the return of our warranty payment, then you could have a scenario where we're trading at a negative enterprise value. So I'm expecting some of those first milestone payments to start to flow through soon. So just recapping to finalise, a lot of news flow ahead in terms of our 2 drill programs at Beatty and Xanadu. We've got the milestone payments coming, a strategy to unlock the value of our Brimstone project, and we also have another project in a joint venture with Chalice Mining, and they're applying all their technical and financial expertise to delivering that project. So that'll potentially deliver news flow as well. Thank you very much.
That was impressive, Corey. Well done. Right, we've got both a producer and explorer up next, Greenwing Resources, represented by Non-Executive Chair Rick Anthon. Rick, welcome.
So, Greenwing Resources, we're principally involved in lithium. I personally have been involved in the lithium since 2006 and seen about four or five booms. So the question always is, where are we in the lithium market? So has the market bottomed? Yeah, absolutely. Is it recovering? Yes, it is. And we're seeing a slow recovery, but more importantly, a sustained recovery. So the prices aren't retracing as they've come forward. And then have the other question, well, the fundamentals that drive the lithium market, have they gone away? Well, I don't think so. I think we're still... governments around the world are still concerned about climate change. We're still involved in a carbon transition. We're still pushing hard on electrification. So is that going to happen in a linear fashion or in a straight line fashion? No, it won't, but it will continue. So the fundamentals for the lithium industry remain strong. Greenwing itself, we are involved at both ends of the battery, if you like. We're in the cathode business with our advanced lithium project in Argentina, and also in the anode with a graphite project in Madagascar. In our project in Argentina, which I'll talk about shortly, we've just finished our first 6-hole drilling program. We will be releasing a maiden resource very shortly. You can never quite time these things for your conference presentations, but hopefully within the next week to 2, we'll have our first resource out. We're backed and been able to deliver that resource through a very strong partnership with NIO, who are a Chinese automotive manufacturer, a pure-play start-up electric vehicle manufacturer. I had the privilege of being at their factory last week, where they're producing up to 300,000 to 400,000 cars a year is their target. That was a factory built from scratch to first production in 18 months. So, look, yes, the Chinese probably will take over the world because they're actually making stuff, and the quality of the cars that they're producing is quite amazing. We have a strong team. We have an experienced board, but we also have a highly experienced technical team. I worked with Orocobre /Allchem /Arcadium for 10 years, and we've been able to leverage off that experience in terms of putting together a very strong technical team in Argentina. So our catalysts going forward over the next 12 months with our projects is in our lithium. We'll be delivering a maiden drilling result shortly, and then we're also currently undertaking the resource. I think, as we've already announced, it's a relatively low grade, but it is highly amenable to direct lithium extraction. So we're currently undertaking a range of tests to, get the appropriate technology to take that forward. On the graphite in Madagascar, we've got a solid resource there of 60 million plus tonnes, 4.5%. Most of it's located in saprolitic clay, so it's a low energy, a low intensity exercise in extracting. That resource has operated. It has produced quality graphite, which has been sold. We're looking to upscale it into a bigger operation, which the resource can now carry. And we're undertaking strategic partnering negotiations at the moment on that.
Lead project, San Jorge Lithium in Argentina. It's in the right address. This is the only place in the world where you consistently find brine projects. Think of Levent, Orchem, Kaohsiung with Ganfeng. These are multi-million tonne, Zijin's there as well. These are multi-million tonne long mine life projects. We're talking these generational projects because of the size of the resources that you have there. Our project is a little bit unique for a company our size in that we have the whole of the salar. That's 38,000 hectares. There's a lot of juniors around Canadian, I don't speak too roughly about the Canadians, but there's a lot of small companies who have bits and pieces of the salar, and then we'll have to share that salar and work out how they run with infrastructure. We have the whole of the salar. It's 38,000 hectares, including the centre of the salar, plus the significant surrounding areas. It's well structured from an infrastructure point of view. It's on a main highway between Chile and Argentina. 15 granted licences. We've sampled samples at up to 285 milligrams a litre. The geophysics suggests that this basin goes to about at least 600 metres depth, and we've drilled down to 400 metres, so it looks like those geophysics are pretty spot on. And there we are, high and dry, 4,000 metres in the high Andes. So our drilling that we've undertaken has been a very successful drilling program. It was technically very well run by the team. One hiccup at the start, and then went very smoothly after that. So from project acquisition, which was only in 2022, we will be in a position to deliver a resource within 2 years, which is for about $8 million worth of drilling, which is quite remarkable return on what it would usually cost and the times that have been taken by other players in Argentina to do that. As we've announced, one of the exciting things about the salar is the high porosity, which simply means that the brine will flow. We're looking at sandy units that are going to be amenable to high flow rates. All of the holes have returned. 200 milligrams a litre, there or thereabouts. Sorry, just go back. The pink holes are the holes that we've drilled. The solid yellow lines are the TEM lines that were run. The dotted lines are geophysics which we're currently undertaking. They will dictate where the next drilling program goes. So that's underway now, and we should have those results from within the next month or so. And post delivering our maiden resource, we would look to rolling into maybe another 6 to 8 drill hole program. What we will also do, as you can see from the pink holes, we've basically drilled around the edge of the salar. Now that was done. One of the reasons we did that is it costs money to drill in the middle of the salar. The middle of the salar is always going to be the best place to drill, but because of the nature of this particular deposit, it requires road building and infrastructure. But we will be putting holes in the middle of that, and you would anticipate that those holes will go deeper and will return higher values. So that's going to be quite exciting going forward over the next 6 months or so. So again, we've got a clear development pathway on this project, and with a strong partner running with us. I'd encourage you to go and have a look at the NEO website. There's some wonderful videos out there about this. This is absolute state-of-the-art manufacturing vehicles. The Chinese, there's a lot of EVs out there, and the Chinese are pushing very hard on this. But if you're looking for an example, Chinese interest in this isn't flagging, and I can point you to the announcement last week from Lithium Energy Limited, where they've actually agreed to sell basically the whole of their project, the Olaroz project in the Olaroz Salar, for about $100 million to a Chinese cathode manufacturer. They are fanatical about securing supply going forward. They have a very long-term view about where electrification is going, and they want to control the means of production nose to tail. Very briefly, we also have a project in Madagascar. It's a very, very high grade. There's been rock chip samples of upwards of 7% here. It's drill ready. Why hasn't it been drilled? We're waiting for permits in Madagascar. That's a slow-moving process, but so it's a little bit of land banking, but it'll be a great project to drill once we can get those permits. And lastly, just on our graphite complex, with this is a granted 20-year plus mining permits. It's currently on care and maintenance while we go through the process of understanding the most efficient way to expand it and who we want to do that with. As I said, it's got a solid resource. When it was producing, it produced high-quality graphite. It is amenable to both large flake graphite and the fine flake graphite that you would put into that could go into batteries. And something which we'll be focusing on over the next 18 months. Very briefly, reasons to invest. The markets are coming out of the bottom of the cycle and there's a more mature and stable environment. As I said, the themes aren't going away. The San Jorge project's high potential. We have a strong partnership and we have a large graphite resource base to go with it. Thank you very much.
You people are not helping me. If I wanted to go on a diet, you're not helping me at all. Not to worry. That's okay. Now for something completely different, as they say. Hello, Ramon. How are you?
Hi, how are you going?
Not bad. You're a Tasmanian boy, are you?
No.
Where are you from?
Kiwi.
Oh, even worse. No, that's right. That's lots of green trees where you grew up.
That's right.
Lots of nice fresh water where you grew up.
Yeah.
And you want to keep it that way, correct?
That's right.
So if we're going to reach this, I would say mythical, but if we're going to reach this goal of net zero and carbon neutral, we need to innovate. And this fellow here, Ramon Mountford, Managing Director of Forrester, has done just that. Would you make him welcome, please, everyone?
Yeah, good afternoon, everybody. It's nice to be here. Yeah, we're a manufacturing company, as mentioned, based down in New Zealand, but we are ASX listed for Forrester Holding Group. What we do is we are taking the pine resource, so that's why we sort of qualify for being here. We take the pine resource down in New Zealand, which is 1.7 million hectares, and they have a significant growth rate. And we take the chemicals out of them, those being these rosins and these terpenes. And the terpenes is the fragrance that you smell when you smell pine. Why are those terpenes important? Well, we use them every day in all of the consumables that we tend to consume, particularly perfumes. There wouldn't be a perfume in a chemist or in a perfume shop that doesn't have some form of pine chemical in it, in a borneol or a lineol or a terpineol, 4-barrel or some sort of alcohol. And then your rosins are, really, I mean, everyone knows about, the amber that you can find. Well, rosin is just unfossilised amber. And what's important about that is, again, it predates petrochem, and it was used in the naval stores when we had wooden ships for caulking of the boards in the ship so that they don't sink, and making of paints and so forth. And today has still got a really high usage in high value and top end paints for ships, boats, and inks. It's now the largest player in the market of organic inks. It's also, of course, chewing gum. You're chewing a pine tree. It's in Coca-Cola, it's in Pepsi, those sort of things. So very important natural chemicals that we use every day. And traditionally, they've been sourced from pine trees by tapping, just like rubber trees, or through the chemical pulping process, which is quite a intensive and no longer accepted industrial process. And then the black pellets. Black pellets is what we take the pine tree, we take the whole tree, we bring it in, and that includes the stump. Stump's high in the chemicals. We want the stump the most. We take these chemicals out first, and then we finish up with these black pellets. And this is using these sustainable plantations down in New Zealand. They're also, the pine plantations in Australia are also managed the same way, which is on a rotation. So what they do is they plant, planting, basically harvesting 1/30th of the plantation per year and replanting about 1/30th per year. Actually in New Zealand at the moment, because of the whole green push, they're planting at double the rate they're harvesting. But New Zealand over the last 99 odd years has harvested around 30 million tonne per year, and 22 million tonne of that has no value added to it whatsoever. It just gets sold as a log, and that log makes up about 65% of the volume of the available volume of the tree. So one of the things for us coming in and adding further value, not just to the product of the tree, what comes out of the tree, we're actually adding significant volume, and forest owners get paid pretty much on volume and on quality, and that enables us to be able to compete with high-grade saw logs if we so want to, but it also enables us to take those parts of the forest that nobody else actually wants. Just talk about the products, we did mention them before. Adhesives, sellotape. I got into this industry about 25 years ago making the resin that goes into sellotape, the brand sellotape, the brown colour, that's the resin. Flavourings is part of the pine chemical, is part of the terpenes that we were talking about. And so basically pine is the commercial input. If you're buying an orange cake or a vanilla slice or whatever it is, it's probably utilising pine as the flavouring base, which has been converted from the pine tree, not necessarily from the vanilla bean or from the orange tree. Cleaning products, probably everyone's heard of Pino Clean, that sort of thing. Road marking paint is a big one through Asia. You want that high melting point, and that soft drinks, sports drinks, it keeps the drinks, when we drink something, the flavouring, again, as we talked about, flavourings are oils, and they tend to float on water, and we don't want those separating out. The people that make your drinks want them to look nice. They want them to stay looking like Coke, all brown and raspberry or red or whatever. So we put the rosin in there, and it acts as an emulsifier to keep those flavourings in suspension. So what makes us a little bit different is our integrated process. So we've patented the process, how we extract these chemicals. We've also patented how we integrate with the pellet manufacturing, because basically the energy to do both means that we get about 50% savings through both of those processes, and that's energy cost is one of the, if not the biggest cost now for most manufacturing businesses, and it's not just cost, of course. Higher cost equals higher discharge, all of those sort of things. You've got to get all of those through consenting processes and so forth around the regulatory processes. So we only harvest, take trees that are going to be replanted. That's an auditable process. It's called FSC certified forests. We also use, as was mentioned, we use the stumps as well. That's really good for the forest owners as well for replanting, because we actually leave the forest ready for replanting as part of that extraction process. And the chemicals, the wood is chunked in the forest and comes into the site. Now our site, we have, it's really proud to announce that about a month ago. It's in Kawerau, New Zealand, which is the centre of New Zealand's forestry, 600,000 hectares of pine within 100 kilometres of it, which is fully 1/3 of the nation's forestry. And it's been very well received. It's right opposite the nasty pulp and paper mill, and that can literally throw a stone across the road and hit them. That's so that's very very well received, and also in that last month we've signed with a supply contract with New Zealand's largest forestry management company as well, and many others on the way. That's gone very quick. I'll just talk about the resource that's renewable. We talked about that. It's been replanted, 150,000 tonne per annum. Secure supply, so 66% of those logs are just getting sold across to mostly up into China, which is 22 million tonne a year. There's a further 8 million tonne a year of stumps that are left in the ground to rot. Huge resource, huge opportunity. What we've got is advanced orders for all we can produce for 12 years. That's with New Zealand's largest coal distributor for the wood pellets, with the world's largest buyer of pine chemicals, Harima, for the rosin, and a great public company out of Japan. I say great because they're good friends of mine, but Yasuhara, which turn their terpenes into high-value perfumes and particular flavourings. One of the things I talk about with the black pellets is that they reduce the coal consumption, the coal emissions when put through, for electricity generation by 95%. That's a third party, Tonkin and Taylor, which is an engineering firm in New Zealand, did that. But Genesis, New Zealand's only coal power plant, confirmed that at 92%. That's really important for New Zealand as far as their decarbonisation goes. But what's more important about it is that we're doing it in a way where we all win. Because these plants can run on margins of up to 50% and more. Have I finished? Thank you.
Good on you, Roman. If you say so, you've definitely finished. Oh, now here's my baby-faced geologist here. Come on up. He's not been out in the sun long enough doing geology. He's bloody clever, though. He's in tin, and tin's gone up 28.4% since the start of the year. So it's a good little one to be in. You happy?
So far, yeah.
So far he is. What he's got is something that's really interesting too. They've got an exceptional processing advantage that puts them at, obviously, a distinct advantage over other people. Would you please make welcome Oliver Davies, who is the Chief Executive Officer for Sky. You right, Ol? What have you lost?
I got a
clicker. Who stole the clicker? Did you steal the clicker then, Ramon? You gave it? Good. Excellent. Let's start that again. Ladies and gentlemen, please welcome Oliver Davies, CEO of Sky Metals.
Thank you very much, and it's nice to see so many people here still kicking around and ready to hear about Sky Metals and us developing a large tin project in New South Wales, and that's to meet growing demand for tin, which is a vital technology metal. Quick disclaimer there. Looking at Sky Metals, the company overview, got a very experienced and proven board and management. Norm Seckold, as many of you might know, Chairman of Nickel Industries, Richard Hill, Chairman of New World Resources, amongst others, Remus Karitis running Alpha HPA, and myself, who's been involved in a number of exploration successes in New South Wales with Evolution Mining and Alkane Resources. Market cap of around 20 million, and we've got about 4 million of cash in hand at the moment. Quite a tightly held stock, and one of the other important things to emphasise here is that we do have some expert guidance on board which are going to be vital in terms of getting us into moving this project into production, and that includes Corkeries, who have been involved in 3 of the 4 mines approved in New South Wales in the last year. So we have the best experts advising us to get through this process as quickly as possible. A quick look at tin. This graph here shows the tin price overlaid on demand for 3 key products that tin is used in. For those of you that don't know, most tin is used in solder, and it holds all electronics together. If you're on your phone right now, there's about 1 gram of tin in your phone. So that doesn't sound like a lot, but when you start multiplying it by the billions of phones in the world, there's quite a lot of tin about, and we need a lot of it. And a lot of the new demand is coming on from solar PVs, semiconductors, the automotive industry. And just with these 3 that are on this graph here from Macquarie, you can see that just for a bit of context, the 1,000 tonnes on the side there, 120,000 tonnes is about 1/3 of the world's tin use. So through these increase in these 3 applications, you can see a strong increase in tin demand, and it's a struggling supply that's bringing it. And the tin price is supported by that strong demand there and continuing into the future. The tin stockpiles have been driven down. The US used to have a strategic stockpile. That's been sold off now. There's not much on the LME. And in terms of the countries that provide tin, of the top 4, 2 of them have troubles at the moment. So Myanmar, with a recent coup last year, they've stopped exporting tin. They're about 40% of China's tin demand. And then Indonesia over the last few months has seen some delays in permitting. There was a corruption scandal as well, which I'm not hearing much about anymore, but certainly Indonesia's a challenge supply as well. More and more these are offshore dredges. They're digging up lots of mud, putting on reefs, all of these sorts of things, and more and more we need a stable source of tin as it becomes vital to all of these electronical components, and that's what we need. There's limited ethical and reliable sources, and this is where Sky Metals comes in. We have the Tullabung Tin Project, which is a major historic tin project in New South Wales. They found it in the 1890s. They mined it right up until the 1980s. And the big push there was through 1960s, 1970s, where they did a large-scale alluvial mining program, which has been the result of a lot of that open pit that you can see there. Got the tailings dam off to the far left as well. And then the key thing for us is that this has left a number of shortcuts for Sky Metals to come in and use these to get us into production quicker. So we've got power lines to site, we've got haul roads through the site. All of these things are shortcuts that mean that we can plug into them and get going a lot sooner than other projects. And the target of what Sky Metals has been working on is the underlying hard rock deposit that sourced the alluvial deposit here. So the key project drivers for Tullabung are that we have low-cost mining. We're looking at something that begins from surface. We have tin veins at surface. They dip shallowly. We have a low strip ratio there. All of that leads to very low-cost mining. We have exceptional ore sorting results, which mean that we get a big upgrade in our tin resource. And then we see low-cost processing from there to get a very high payability tin concentrate. So all of these things mean that we get a very low-cost production to get a very high-value product. This is a drone photo looking north over the Tullabung tin field. The red outline you can see is the extent of our current resource at Tullabung. And then looking off into the horizon there, you can see the furthest open pit. It's pretty easy to see that already with our resource, we haven't tested the entire strike of this deposit. There's still historic workings that we don't have drill holes under. So there's significant scope here for us to continue the resource and build it into a very significant deposit. As it stands, our resource is at 15.6 million tonnes for 0.15% tin, and we have an exploration target of 23 to 32 million tonnes at a similar grade. But the key thing here is that straight away we take that 0.15% tin, we put it through an ore sorter, and we take it up to 0.7% tin, which for those of you unfamiliar with tin, that's equivalent to, in value, to over 2% copper or almost 3 grams per tonne gold. So the ore sorter takes a low-grade product, upgrades it very quickly, and then straight from there we have a very high-value concentrate that we can then do more processing on. Importantly as well, as we said, all of the resource and exploration target in this case are only limited by drilling. The more drilling we do, the bigger this deposit will get, and we haven't found the edges yet. The key to this processing advantage that we have at Tullabung is the Tullabung ore itself. We have an ideal situation for ore sorting. We have very coarse cassiterite grains that are in quartz veins, and then they're separated by the host rock. And the ore sorter is able to see the cassiterite because it has a density of 7 tonnes per cubic metre. The quartz vein has a density of about 2.7 tonnes per cubic metre. So there's a huge contrast there that the ore sorter uses. It ejects the stuff with tin in it, and it then lets all of the other lighter stuff go, and that's how it upgrades significantly the deposit. So we see a 5 times increase in grade with 98% recovery and 80% of the mass rejected straight away. This is a quick video here of some Tullabung ore going through the ore sorter. So it goes over this grate, make sure there's no fines in it. It drops down off here, it gets sped up to 3 metres per second. It runs along the belt, it gets viewed by the X-rays, and then it maps on the belt which rocks have dense parts in them and flicks them, and everything else drops off. And on the left-hand side is our waste, on the right-hand side is our ore. So you can see there the very, very small amount of mass that we're left with to do any more processing to. The other stuff is just rejected, put in the waste pile, we don't worry about it. That's 80% of the mass. The other 20% is then what we have to spend money on to process. That sees a huge cost reduction. When you look at the material that we're rejecting, you can see that there's nothing in there. It's very boring, plain grey rock. You don't have to be a geologist to know there's not much doing there. And this is the crucial part for us, that then all of the sulphides, all of the tin is then coming into this other stream here. And that's what gives us a significant upgrade and a significant economic advantage over anyone else. TOMA itself is a global business. A very small part of TOMA is the mining arm, but that said, they still have over 232 ore sorters installed globally. So they're a very large business with a huge global presence, and they've been operating in Renison, Australia's largest tin mine, for over 6 years. Ourselves, we have a higher grade area in our resource that we will target early on to get quick payback on any capital. And we have already a very large system that we're continuing to expand. This is drone footage now going across the old Tullabung tin mine. And we have a very low risk pathway now set ahead of us to add significant value to this project. And as our steps are clear, we'll increase this resource. As I said, that's just going to take drilling. It's not really exploration, we're just drilling underneath old mining. As we get more tin into the resource, we then want to get up to a critical mass where we have enough confidence to then start announcing our mining studies. And from there, we want to start pushing in our mining approvals and things. We've already drilled a couple of groundwater monitoring bores. We've started baseline studies. We're already progressing towards mining this deposit, and we're looking forward to providing tin for Australia's future. Thank you.
Well done. All right. Now, some may say we've saved the best to last. This is the fellow I was saying was having trouble getting to actually get some sort of a headline for you for his piece today. We've decided we would like to petition you, David, to rename the lode, which just got this fantastic intersection from the Duffer lode to the Bloody Good lode.
It is bloody good, I must say. It's
we think
fantastic.
You should rename it. That's obviously what's caused this flow of interest. So would you please make David very welcome, everyone? We're talking Ballymore and we're talking gold.
Thanks, Chrissy, and thanks to the organisers. It's great to be here. Look, we've got a really exciting story. I'm going to tell you a bit about Ballymore today. If I'll make this thing work. Look, as a bit of a starting point, Ballymore is a relatively new company. It listed about 2 years ago. Our focus is very much in North Queensland. When we started to look for ground, we thought this area had a great deal of potential. In the early 90s, there was a lot of majors exploring this area, and there was a lot of success. In the latter part of the 90s, though, most of those majors left, and the amount of work that's really carried on after that has been quite limited. And we feel there's a real opportunity to explore this area, which really hasn't had a lot of good modern exploration for a good 30 years. We have 4 projects in the North Queensland. Up the top near Cairns, we have the Mount Molloy project. We have the Ruddigore project in the old Chelago mining district, the Ravenswood project in the Charters House gold area, and our flagship project down near Proserpine, the Ditmar project. As a company, we're very fortunate. We are, I've heard a few people say how well cashed up, and we're also very fortunate to be well cashed up. We managed to raise $11.1 million in November last year, and that included $7.5 million, which will go directly into Ditmar through a royalty agreement with Taurus, who've been a fantastic supporter for us. In addition, it says that we have $2.1 million of cash. That was primarily because the $7.5 million for the royalty only came in early April. So in fact, we've at the moment got slightly under $10 million. Directors have 32% of the stock, and it's a very tightly held company. But look, there's a lot of real interest, and as things are growing day by day. Because of time, I'd love to talk about all 4 of our projects in detail. It's fair to say we love all 4 of them. They're very exciting projects. The ones I won't be talking about today are the Ravenswood project. It's a really exciting project in that Charters Towers district, a prolific gold mining area. We've got a number of really exciting targets. Our first drilling there, we actually intersected 40 metres at a gram from near surface. We've got a bunch of really exciting breadths here in gold-hosted targets. An area that we're planning to drill a little later on this year is a high-grade gold and silver target that's reported up to 127 grams gold and 7,100 grams silver. Our Ruddigore and Mount Malloy projects are both copper projects. The Ruddigore project has shallow copper, a very significant shallow copper target. Our first drilling into that actually reported up to 86 metres at 0.5% copper from surface, and we're planning to go back and do a lot more work on that. Mount Malloy is an old historic copper mine that averaged about 9% copper when it operated. But today I'm going to talk about the Ditmar project. It's a really interesting high-grade gold project that was operated up until 1950, and it's a really exciting target. We picked up the Ditmar project about 3 or 4 years ago. Historically, this area was a significant gold mining area in the 1880s and 1890s and early 1900s. Most of the mines in the area are quite shallow, but they're known for their very high grades. Some of the mines report production records up to 560 grams per tonne. Ironically, one of the last major mines found in the area was the Ditmar project, which is actually held under a mining lease bias. It was found in 1930 and operated through to about 1951. During its life, it averaged 151 grams per tonne gold, or 5 ounces a tonne. In addition, it has some very impressive silver and almost 3% copper with it. We picked up this ground because we felt there was a real opportunity to come in here. It's remarkably underexplored. Hardly any modern exploration has been completed in this area, and we saw a real opportunity to come in and turn this into something very significant. One of the first things we did in this area was to reopen the old mine. This has been an absolute godsend for us. By doing that, it's allowed us to get up close and personal with the actual mine. We've been able to sample it, map it. We've reported channel samples up to 264 grams gold and 5% copper. And also, most fortunately for us, it's also allowed us to drill from underground, saving us hundreds of metres of drilling every drill hole. And so it's saving us time, money, and it's also, by putting a roof over our head, it's also allowed us to drill over the wet season. We started drilling this year in January, and a week later, Cyclone Kirrily crossed the coast north of us. We didn't lose a single day to weather, and it's been a fantastic way of approaching this and allows us to do a lot of work and save us a lot of money and time. One of the first questions, obviously, for us when we picked up this project is why, if you're mining 5 ounces of a tonne gold, would you stop at about less than 200 metres depth? Our early drill holes, first 2 holes, answer that question. It appears that the lode had been sheared out at depth, but fortunately for us, something the old-timers didn't realise was that it had actually just been thrown up beside the old mine, and the actual lode is within 30 metres of those existing workings. This is a really exciting opportunity for us due to its proximity to the old existing workings, because we are literally within 20-30 metres of it in our existing drives that we're drilling from. The actual lode itself typically was hand sorted by the old timers, and that's how they achieved those grades. But that in itself is also an opportunity. The backfill material that was actually thrown back in there, we've sampled it, and it's returned between 4 grams per tonne and 82 grams per tonne, and in itself is a really exciting opportunity. Our drilling today, we've completed 42 holes into this new structure, this newly discovered lode, and we've got some spectacular results. 4.3 metres at 29 grams per tonne, and in there 2.25 at 55. The hits keep coming with this one. It's really exciting, and it remains open along strike and down dip. We've just released, yesterday, we finally got some more results from the most recent drilling program, and some spectacular results in here. 2.9 metres at 16, including 0.9 at 51, 3.15 metres at 9, and then there's 35 centimetres at 79, 1.8 at 12.85, and the ones from yesterday, 3 metres at 19.5 metres, and in there's 1.2 metres at 19 grams and 0.4 at 55. 34, 3 metres at 19.5, including 1.2 at 48, 3 metres at 16.7, and then there's 58. And our last hole, 40, that came in that program, 8 metres at 8.35 grams, and in there's 4.8 at 13.6 and 0.3 at 193 grams. The thing that's really pleasing for us is in that deeper holes, those last 2 holes are 2 of our deepest holes to date, and we've intersected broader intersections. As we drill deeper, we're seeing the lodes getting wider, and we're also seeing more copper in them, and that's a really exciting opportunity there. Drilling to date has literally drilled that. We've only completed drilling on where that little red bar is. It's really, we've only tested about 200 metres of strike length, and we're finding a lot of gold there. The continuity of the structure is spectacular. We're getting fantastic grades consistently. And now the most exciting part of that is through field work that's been completed last year, we've also demonstrated there's a lot more to the system than just that little mine. The main lode, the duff lode, you can clearly see running through that area, a long strike from the old mine. And we've defined it for at least 2 kilometres at this stage, and it remains open. It's really constrained by where we've sampled to date. There are a number of other exciting lodes in there. We've got just completed clearances. We're preparing drill sites in 2 weeks' time. We'll be out there drilling and drilling the surface extent. And we're expecting in the coming weeks and months to be able to demonstrate that this structure and these targets extend 1 kilometre, 2 kilometres out, and then we become a company looking for a major multi-million ounce deposit. We're also very fortunate to have received 2 grants this year from the state government. One was for $300,000 to fly a detailed magnetic survey over Ditmar, and that's basically about to commence in the next 3 weeks as well. The addition of this detailed magnetic data set will help us greatly with targeting in this area, and it's going to be a very gratefully received additional data set. In addition to that, on one of our other projects up at Chilligo, we received $300,000 to do an airborne EM survey to target a 20-kilometre belt of highly prospective ground there, and we expect some really exciting news to come out of that as well. So look, in summary, we've got a really exciting group of 4 projects. Our primary project is Ditmar. Ditmar is a high-grade gold project, but we believe it's part of a much, much larger system. We're expecting the final results from our last underground program to be in the coming weeks, and we're literally about to start drilling in geophysics. Lots of exciting news to come, and yeah, just watch the space. Thank you for your time.
Wait, David. You are David. Here, can you catch?
I've got one, thank you.
Oh, you're the only presenter that managed to make another 10 minutes. Round of applause there. Well done, sir. Well done. You're the one person that's made intersections look very, very appealing today with your smile as well. Obviously, lots of positives there. Sean Russo, as we live and breathe.
Hello.
10 years you've been doing this for.
12.
Was it 12? I thought it was 10. Oh.
There you go.
Thank you very much for doing
Who's
this.
counting?
Who's counting? Obviously, you are. No, Jackson and I thought it was 10 when we added it up, but we're really grateful for you to be here. So at the end of every conference, if this is your first conference, we have this great man here who is the principal of Noah's Rule come up and give us his insights. So this time last year, you were talking about the gloss coming on gold. Did even you, in comparing it to the 1970s, did even you think it would go this well? You said that
You've
was
got a good memory. Stacks on the mill.
Stacks on the mill. That was your last line.
Everyone in
That's
this room
right.
already believes we need the rest of the believers. So this is a kind of a carry on from there. But before I get into that, I just want to say quickly, I was never a fan of Scotty from marketing, and I am a fan of speaking properly. But how good is this conference? That's the first of many questions that I'm going to ask today. But seriously, this is awesome. I'm delighted to be closing this again. And I've just had a ball 3 days. I think I've signed up a couple of new clients. I think I've met a couple of existing happy clients and just lots of people I've known for a long period of time. So it's fantastic, and I'd like to buy every share in the session. I've just been sitting here buying, but I just don't have quite enough money yet to do that. When we work with our clients on our hedging side and risk management side of the business, the main slide, or if they got this slide, the title always says the questions remain the same. It's the answers that keep on changing. I like to say to people, particularly when people are looking at gold price, the most dangerous person in the room, in any room, is the person who believes with absolute certainty they know what the future holds. 100%. Have you noticed that? The kids all say that now. It's just this new expression that comes in. We've got to agree with everything. You say something, someone goes, 100%. And nothing is 100%, and particularly when you're looking forward to commodities, not 100%. But in the long run, we can probably be very faithful that politicians won't change. They'll keep printing money, and the value of hard assets will go up. But how the path it gets there, I don't know. But you've got to ask a whole lot of questions. So I asked the question, last year I gave a presentation of Stacks on the Mill, and I gave what I thought was a very bullish reason for why I thought the gold price would start to go up. Well, we went to Fremantle a couple of months ago, and the gold price was exactly the same as it was when I'd given the presentation here 9 months before. So when they asked me what was my title of the presentation about 2 months ago, I said, well, why are we waiting? Because we were still waiting for it to happen. We didn't have to wait much longer, because you all know what happened in the last couple of months, and particularly in terms of $8 gold, just extraordinary the way the gold price jumped up. So you might ask, rather than why are we waiting, as I said there, what are they waiting for? Because we all believe, we're in the room, we're all heavily invested, waiting for other people to come in and start to pay the kind of money that we think these shares are worth. That's our lament. How much longer might we need to wait? That's another question we should be asking. Is it worth waiting for? Absolutely. What might we need for people outside the room to finally get it and start to see new people coming to this conference that really have got into what we've all been believing for quite some time? And the other question you've got to ask is what might delay or disrupt it, because whatever the long-term path is, even if someone told you what the gold price is going to be in 5 years' time, with absolute certainty could tell you, you could still get it horribly wrong if you geared yourself into it, did the wrong way, because if you can't stand the journey risk. So all of those things you've got to, but the most important thing is I don't have all the answers. I just keep asking questions, and then you see what answers the market gives you. I put this chart up last year. I had all those same arrows on there. Now, I just want to explain to you, this chart is the chart of the gold market since 1970. You'll see on occasion the line is red. We have a scoring system at Noah's Rule that we use to score all the markets that we look at, and it's basically a score of trend. And so when the dollar index, or the US dollar, has a positive trend, and the Dow Gold ratio, which is a relationship, or basically the relative strength of gold versus equities, if that also has a positive trend, that means general equities are making you more money owning them than gold. If both of those things are happening, the line gets painted red. Now, I think you can all see here that for most of the history, and certainly in the 80s and the 90s, as we discussed last year, you'd have a lot more hair and it wouldn't be so grey if you're a gold investor if you just stayed out of the market when the line was red. Now, we didn't back test this or anything. We just asked the simple question of our chart guru, and a guy who does all this back in the office, Will, just paint that line red, Will, whenever the score for the US dollar is positive and stocks are outperforming gold. Now, when that big blue section, the big rally here, this fantastic rally, happened, you can see there was one tiny little bit of red, but otherwise it was always there. Now, for most of this time, the US dollar was actually in ascendancy. Gold can outperform a rising dollar as long as it's outperforming equities, right? So, but the thing here is I pointed to when you have a significant high and then you break it, the kind of moves you can have, and then how these highs dominate, and when we then broke that high, what happened, and then we made another significant high. I'm talking a significant high as one that sort of is a new all-time high that holds for 1 or 2 years, and then we had that one. Now, when we were here last year, I said, right, we're getting ready to break. Well, we have now broken. So, you know, obviously the paper ends there, the gold market does not end there. This is log scale, so if you look at the kind of move we've had, this percentage move overall is still quite relatively small relative to what we had back there. And if people go, well, that's not really relevant because that's a long time ago, other people put up charts of how many more dollars there are in the world today than ounces of gold. You know, if you could actually see a pile of all the money that is out there in the world, you'd be holding on to your gold quite tightly before you'd hand it over, even at today's price. So that's the kind of setup. It looks pretty good. The other thing I would point out, that this is I'm not trying to turn you into a chart, I'm not trying to be too technical, but this is the very long-term 200-week moving average. And one thing I would say is, between the last time that we were here meeting together, the gold market actually did fall down and touch that average. So I believe that when it gets that average, it kind of refreshes it, right? So gold's not extended because it's actually been at its 4-year average within the last 12 months. So people say it's expensive. I just don't. Expensive compared to what is the question that you would have to ask. So certainly from that perspective, you know, gold looks very good. The story looks very good. Interestingly, the line just turned blue. One of the things, you would have seen a lot of commentary in the last couple of weeks, actually. People who've been very bullish gold and very right for a long time, being very negative about the recent gold price rally because it doesn't match their frame. And to some extent, they were describing a version of that we actually had a red line. The line was red, but the gold price was going up. You can see, if you look at here, how rare that has been when the market's in an uptrend. It can be red and rising when it's in a bear market, but it's been very unusual, and this last period has been there. So there's been lots of kind of gold has been going up despite the fact that the kind of things that people historically looked at were happening. And so I believe that's quite positive, that we actually managed to rally in the face of dual headwinds that normally do this. And now those dual headwinds are gone. So that's really pretty exciting. Now, I believe, and Pierre Lassonde talks about this, so if you don't believe me, you can believe him because he's a lot smarter and a hell of a lot richer than I am. He wasn't the person that introduced me to the Dow Gold ratio. A man called Richard Russell did that. But basically, what we're looking at here is how many ounces of gold it would take to buy the Dow Jones at various times in the past. And I like to anchor around here. Is the year I finished high school, it was 1-to-1. That's not very long ago in my memory. 1-to-1, 800 Dow, 800 gold. Pierre Lassonde, about here, used to say it's going back to 1-to-1, and I'm quite happy, as I said last year, as long as I don't step out in front of a bus, I will see it somewhere between 1-to-1 and 2-to-1 in my lifetime. And I'm doing everything I can to stay alive as long as possible to make that true. But look, that's gold very negative when stocks are clearly outperforming. No need to own gold, go long equities. But you can see these red periods, these downtrends. This is when gold is outperforming. And notice how these red arrows appear here and these very significant levels. In the limited time I have left today, 16. If you draw that line 16 all the way back over here somewhere on that chart to 1929, 16 in 1929 was where the Dow Gold ratio was just before the crash in 29. So 16, when we broke that number, it went very dramatically. Now, before you get too excited about if we break that number, gold's going to go crazy, that move represents the Dow halving from 14,000 to 7,000. It's hard to imagine it was only 14,000 back there. So that was the Dow halving. But hey, if you were owning gold, you could now buy twice as many shares for your ounce. So it was still better to be long gold. But then gold took off, and we got down to about here 5-to-1. Now, all the people, as we discussed last year, you know, when they cried foul and they said, oh, gold was a conspiracy when gold got sold off, it was just general equity investors being happy to go back in the water. Well, we've been going sideways. Everyone talks about how the ETF volumes are falling. So the ETF volumes have been falling despite the fact that most Western investors would have been just as well off to be in gold as equities over this period of time. But look at that 16. Every Friday night, get the Dow, divide it by the gold price when you wake up on Saturday morning, and remind yourself of what that number is. That's as simple as that ratio gets, 16. If we come under 16, I believe that general equity investors, looking back at history, looking back here, is going to start to say, I don't know why gold's going up, and all the gold experts tell me it shouldn't be going up, but it's going up, and I need to own some, because in history, if that ratio is below that number, something tells me that I should be worried about the world. And the one truth about gold is the closest thing in financial markets that we have to the truth. I absolutely believe that. Other people will say it's nobody else's liability. I believe it's stronger than that. It's been around for 5,000 years. They keep printing money. You can see how hard it is to find gold and actually produce it economically. It's the source of truth. Measure every market against gold. I do it for the Dow. You can do it for oil. At the moment, oil's ridiculously cheap relative to gold. So you know, all commodities look good. And I know I'm going into negative times and I don't eat chocolate. Well, Chrissy's left, so that's good. We'll just go. Does anyone understand the whole system, how Chrissy moving closer to you is supposed to make you finish? That doesn't work for me. But anyway, so very quickly, given that no one's trying to drag me off the stage, the GSCI versus the S&P 500, I've just switched from the Dow to the S&P, but it's the same thing. This is the Goldman Sachs Commodity Index. I put this up last year. This is commodities being undervalued, hard assets being undervalued relative to general equities. That just generally means that people buying most AI stocks and other things are probably overpaying relative to real things. Remember how bad it was in the 90s. Even if commodities double in value relative to general equities in the next couple of years, we're still going to be cheaper than we were when they were stupidly cheap in the late 90s. This is a slingshot. This is a big thing waiting to come back. But it's building here. The trend has overall been positive, but it looks to me very similar to it did here around 2000, around the time the last big equity market fell off. And I certainly think there's lots of smart money coming off the top and coming in to general equities. And just for the non-gold people in the room, and that's where a lot of the excitement is going to be in the future, this is now gold relative to all those other commodities. So gold is actually really very expensive relative to other commodities, or other commodities are just ridiculously cheap compared to real money. Right? So gold in your portfolio, absolutely, but God, it's a good time to be starting to collect a lot of the other things in the basket, which is energy and food and all those other things. So gold is actually as overvalued relative to commodities as it was at those highs in 1980. So that cycle is a little bit out of sync, But overall, this just says to me, if you've got to make a choice of where you put your money, well, firstly, you take your cash, you buy gold. But then when you've got to get rid of your gold, where might you go? Well, a bit of a base metals exposure has got to be good as well. So the picture, you know, it's a bit like watching paint dry, this, isn't it? It's been I've been saying the same thing for 2 or 3 years. The questions remain the same, but the answers are starting to come our way. Thank you very much.
Hold on. I didn't actually come anywhere near you at any point during that conversation, I'd just like to say.
I'm sorry, what?
I came nowhere near you at any point during that conversation.
No. What I said was, I don't know why it's like, if that's supposed to be an incentive to make you leave, I would just keep talking until you got right next to me.
Get off there. Thank you so much. I look forward to it every year. Absolutely brilliant. And we're really, really lucky to have that man, to have the calibre of speakers that we have throughout the last 3 days. 95 investment opportunities we presented you with, and there were 115 people in our exhibition hall, so lots of opportunities, and I hope you... Oh, jeez.
On behalf of all the presenters, I just thought I had to do that. Now, I just wanted to take this moment to do a massive thanks to Chrissy. She's been unreal over the 3 days.
Thank you.
She's the best in the business, and that's why whenever you front up to a vertical events or RIU conference, she is running proceedings in this room. But I also want to do a big shout out to our AV team up the back. Yeah. Jeremy, James, Matt. Woo! Glenn at the speakers prep. Kyra making sure everyone got on the stage right, and Shaz just overseeing them all and making sure that it all runs smoothly. You know, like 95 presentations in 3 days. We have the best team in the business, but we also have such loyal delegates, investors, brokers, sponsors, presenters. Well done, Sean. Nailed it again. Thank you to everyone. We look forward to seeing you at RIU Sydney 25. But if not, we'll be back on the 30th of July, the Swiss Hotel for our Techno event. We'll be back in September for our New World Medals at the Fullerton Hotel. And until then, we'll see you later. Thanks.
Cheers. Thanks, everyone. Enjoy.